all of you work for the same organization.
Yeah.
And that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So, what's the worst that can happen?
What was the
That mutual
worst
fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. on NDTV Profit, for your profit. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and is it going to be, thank God, it's Friday kind of a feeling? Folks, on one hand, you have Trump saying that he's holding off any kind of kinetic attack on Iran because negotiations are on. But is this really the script we've heard too many times now? In Indian markets, actually looking at the rupee more than the crude prices.
That's what it's seeming like, right? Because yesterday we were talking about, will this be a terrific Thursday? I don't think so, because again...
Was it at least not terrible?
It was not terrible, but it wasn't terrific as well, because if you see the last two trading sessions, yesterday we've seen a 200-point gap down. Day before yesterday, you've seen a 200-point gap up. And in the end, we've closed at same levels over the last two trading sessions. Yeah. So there's nowhere to go.
Yeah, I mean, bottom up remains the key. Let's see how it goes. But yeah, lots happening on the AI world, lots happening in the US per se. So I think global investors are largely focused there. Maybe we have our own MPC to watch out for in the upcoming days. Maybe that remains the key.
The big one, of course, today is the RBI board meet, where they will decide on the dividend that they give the government. What we are reporting and what others are reporting, it could be one of the largest ever, and could not come at a better time for the government of India. So I think rupee has become a lead indicator for us, apart from crude right now. But talking about what's happening globally, it was a winning session overnight for US stocks, as all eyes are on the possibility of a resolution in the US-Iran conflict. In fact, all key indices are on their way to close the week with record gains. So nothing stopping the US markets right now. The Dow another 0.5% up. Let's pull up futures as well, because that momentum continuing fairly well. And here you have it. All three indices up in the green as far as futures are concerned. Bond yields have cooled off, and that's quite a relief, because bond yields had shown this huge spike, but they've cooled off from earlier prices as earlier highs as crude prices have slipped. The 10-year is at 4.57%. Crude prices, meanwhile, stayed volatile, as no real clarity on where those negotiations are going. You saw this big drop in the Brent after Trump said that he's holding off on any attacks on Iran, but then there was a story by Reuters which said the supreme leader has issued an order that no uranium will leave the country, and then there's people wondering what's going to happen with the negotiations. So we're in that range, I suppose, at about 104 on Brent July futures. Tolerable compared to what we have seen in the last few days, but definitely not ideal. I want to pull up Asian markets as well. It started off strong this morning and continuing that momentum with the Nikkei about 2.5% up. But in India, it's that range which is on top of things. So I want to just pull up the implied open. You're just about 20 points up as far as India is concerned. So we are really going to have to see some serious measures to move out of this range. But speaking about what Trump is saying, as negotiations to end the Middle East war continue, the US president says one thing is certain, that the US won't let Iran have a nuclear weapon.
Right now we're negotiating, and we'll see. But either we're going to get it one way or the other. They're not going to have a nuclear weapon. You know, when people hear it, because oftentimes they won't put up the second part of the sentence having to do with, I'll say, this is more important than anything that we have to talk about. And usually they'll cut it off, the fake news. I said, because this is the nuclearization of a country that some people would say is somewhat crazy, and we cannot let Iran have a nuclear weapon. That's all it is. We can't let it. You will have a nuclear war in the Middle East, and that war will come here. That war will go to Europe. We cannot let that happen, and it won't happen. It's not going to happen. That's more important than anything else. We can't. I can think of nothing that's more important than the fact that we cannot let Iran have a nuclear weapon.
Yeah, so a few sticking points. Nuclear weapon is one, the possibility of a toll is another. But fresh reports now talking about draft agreements being exchanged between the two sides. But the Iranian side also saying very clearly that they won't back down in negotiations. The fact that there is going to be another round of conversations will give some relief, at least for now. Let me go across to Matt Orton, Head of Advisory Solutions and Market Strategy. And he's, of course, the Chief Market Strategist at Raymond James Investment Management. Matt, very good morning to you from where we are. Great to have you on, as always. From the Indian context, what is top of mind in your view? Is what's happening with the rupee and the current account deficit a bigger concern immediately front and center, though, of course, it all goes back to the West Asia crisis?
Hey, good morning, Tamana. It's always great to join you. And I think it's a little of all of the above. I think the moves in the rupee are very, very important, especially from a foreign investor perspective, because that drives a lot of where investment goes. As the rupee has depreciated so much this year, it's been a significant headwind for a number of foreign investors that hasn't been offset by a respective jump in earnings growth or share price appreciation or multiple expansion. So that's kind of the problem. So when I look at the story of India, it's one, I think, from the foreign investor perspective of looking at the depreciation of the currency, what the possible impacts are and how long those impacts could last from higher oil prices and how long this higher for longer story is going to last. And then what does that ultimately do to earnings growth? Because earnings growth is the ultimate arbiter of where the market's going to go. It is going to have this crisis, is going to have an impact on earnings growth. And that's why, while the overall headline indices in India have certainly lagged the broader emerging market complex, there's opportunities beneath the surface. There's a lot of companies and a lot of idiosyncratic stories that are in fact working. And that's what I really encourage investors to do, is dig in and do your homework, because instead of maybe owning the broad index, be active and think about what it is you actually want to own.
That's an interesting take that you have when it comes to India. So let's break this up into sectors or stocks that you would look at. I know you've always preferred the cyclicals. You have been positive when it comes to financials. But when you're talking about the rupee, and sectors that could probably benefit from the Indian rupee as well, pharma, IT, that is at the top of your mind, export-oriented sectors. Anything that you like right now from this space?
So I think servicers of exporters is more the area that I've been playing right now, because the IT space is challenged. While the depreciating rupee should have a positive read-through to a lot of the IT services companies, you have the massive headwind of what the ultimate impact of AI is going to be. Plus, you still have earnings growth numbers that really aren't all that exciting coming from that complex of companies. So I haven't been really bullish on IT services. When you look at a lot of exporters, it's somewhat of a similar story. But look at a company, we've talked about Adani Ports in the past, but they, for the past few quarters, have posted very, very strong numbers. They're export-oriented, they're also import-oriented, but I think what I like about this company is the ability for them to grow their margins and also grow their market and wallet share with their customers by better integrating along the whole chain of where they need to transport, all the way from getting the good to the port and then ultimately shipping. And they're not as impacted by what's happening in the Middle East. Similarly, you look at an L&T, for example, which you would think should be negatively impacted given their operations in the Middle East, but they're able to pivot. They've guided to a plan to not erode profitability, and they have exposure from a global perspective and can maybe lean more into India and other regions as opposed to the Middle East. So those are areas I'm looking at a little bit more intensely, and also power. How do you offset the rising cost of higher gas prices? Looking to clean energy. So again, Adani Green Energy, you look at Tata Power, those are all names that I think look really, really interesting right now. So I think, again, it comes back to being selective. And that's honestly the case from a global perspective as well.
Matt, I'm just trying to piece this in for a large global investor. how difficult does it become to buy some of the growth stories which are not at the top 100 or top 150 stocks? Because a lot of mid-sized companies are actually throwing up some very good results and very constructive commentary as well, never mind the conflict. How do you think about that?
It is, and Neeraj, I wish I was able to get more of a piece of it. It's more difficult as a foreign investor to get exposure there, and it's interesting because globally speaking, you're seeing that play out too. I've actually been increasing my overweights to small and mid-cap companies in the U.S. in particular as well, because it's a similar story. It's related to domestic consumption, domestic resilience, which you are seeing in some cases in India as well. So I think it's attractive. It's a great place for some individual investors to find quality investments. I think that's the key. Going into speculative investments can be challenging in this market, but when it's backed by earnings growth, that's where you want to lean into. But again, you have to balance that with also the strength and resiliency of larger companies as well.
Okay, thank you so much for that, Matt. Always a pleasure to have you with us. And just the latest we were talking about, fresh reports coming in saying US-Iran in intense indirect talks for a final deal. Intensive mediation is underway between the US and Iran right now, and negotiators are very close to a deal as per Iranian officials. So this is important. I know we've heard this story and heard this tune before. So I suppose a big part of the market is in the mood that, I'll believe it when I see it. Having said that, strong statements coming in. Pakistan Minister Naqvi is also in Iran to discuss Hormuz and the opening of Hormuz, and I suppose that's what it will hinge on. But for domestic markets, it's 2 steps forward and 1 step behind.
Exactly how you put it right now, and that's what we are seeing in the last 2 days as well. In fact, I'll take you through a couple of levels later on to see how last 5-7 days Nifty has closed. But first up, we've ended on a negative note yesterday. We've witnessed this volatile trade where profit booking at higher levels is what we've seen, and exactly what Neeraj was mentioning this morning as well. Sensex 135 points decline. You have Nifty, which has ended nearly flat. If you have to look at sectors, pretty mixed day of trade is what you've seen, where you've seen buying interest in Nifty real estate, consumer durables and healthcare. However, there has been selling pressure in Nifty IT, FMCG and media names. In fact, the broader markets have also continued to somewhere outperform the benchmark indices. So that's where the juice is, and especially in the small cap space, not even that to that extent in the mid cap space. You had the small cap index, which advanced almost 0.6%, which is actually reflecting, stock specific buying interest over there. And in terms of mid cap 100, the index has remained largely flat. Bank Nifty as well, you've seen selling pressure at higher levels around that 54,000 mark. So that's where we are. Now let's look at where Nifty closed in the last 6 days. If you see your screens, 14th May, 23,689, 15th, 23,643, on 18th May, 23,650, 19th May, 23,618, and in the last 2 days, we have 23,659 and 23,655. That's where we are at. We've not moved above or below that 23,600 or 23,700 mark. It's a very tiny 100 points range that markets have been trading at between the 14th of May to the 21st of May. And now it's going to be interesting to see what happens in today's session, Neeraj.
Yeah, well, if we start off high, then I think people would want to short. If we start off low, then people would want to buy.
But we're still going to be in that 23,600 to 700 range.
Yeah, in fact, the other addition to that is that there is an alternating pattern on the Nifty. If it's up on one day, it's down the next day. The last 6 sessions, we've seen that alternating pattern. So I think in some sense, it's just become a no trade on the index. And I think we've been talking about it, that avoid the index, look at specific stocks. I don't think there can be a more prominent, perfect advice that the index is a no-go unless you are trading for those tiny 150, 150, 200 points, and you never know when the stop losses could get hit there. So therefore, no trends on the index, but on specific stocks. And I think circle around and chemical and pharma stocks turn out to be the ones that you really want to watch out for. Maybe if the Trump administration, for example, leaves out HFCs from that list of banned or reduced substances, then the SRFs and the Naveen Florins of the world could have some marginal upsides too. But news flow notwithstanding, I think the street wants to gravitate towards some of these pockets, not just right now, sorry, they've been doing it for the last about a month and a half. So let's see how that shapes up. And guys, we talk about patience in the business world and how important it is in investing as well. I was looking at this, happened 2 days ago, but somebody posted it to me, so I was looking at it. It's the Tattva Pharma company. In the con call, they said that they've been working on the semiconductor chemicals business for the last 8 to 9 years already, and they have reached validation stage. The commercial applications open up only in 2028-29. So here's a company who thought about this maybe 8-9 years ago. I'm not commenting on efficiencies or otherwise, I do not know that chain very much, but for a company to say कि 8 साल काम कर लिया है, validation तक पहुंच गया, commercial 3 साल के बाद, they are okay with building out a business segment for 11 long years. Takes some patience.
But I think the infrastructure sector is exactly this playbook. So all your old economies, solid businesses get built over this kind of a play, I suppose. And that's what India is trying to do right now, right? We're trying to do it with APIs, with semiconductors, with rare earths.
Exactly.
It's not going to happen for a while, but we're going to have to start somewhere, I suppose.
I mean, the gestation is going to be long. But I think somewhere you'll bear the fruits.
Yeah, at some point or the other. Whether you get the fruits or not is the question. Whether there are any fruits to have today is the other question. And maybe not. Indian equity markets are displaying a classic textbook example of a high-stakes tug-of-war. Despite wide 500-point weekly range, the Nifty has effectively gone nowhere over the last 5 sessions, something that Hiral displayed beautifully with data. The index is trapped in a strict 23,300 to 23,800 band. Critical resistance at 23,800 to 23,850. A decisive daily close above this zone is mandatory to spark a broad-based structural short covering rally towards 24,000 plus. So crucial supports right now, 23,400. If this floor decisively cracks, expect automated panic selling to drag the index swiftly to 23,300 and 23,150. For the bank Nifty, it's mirrored the main index, tracking a sell-on rallies pattern. Critical resistance at 53,900 to 54,000. The banking index has a down week so far and requires a firm close above 53,710 just to turn the weekly tape green. Crucial supports 53,000 to 53,100. Break below 53,000 will intensify systematic selling pressure towards 52,400. Let me go across to Puneet for the FNO setup this morning. Good morning, Puneet.
Well, very good morning to you as well. Very interesting there, and as you rightly said, the Bank Nifty continues to be under pressure. While yesterday's Sensex expiry was there, but a lot of positive action seen across a bunch of stocks. So you continue to see traction, good results getting rewarded there, and the number of companies, number of stocks that were above 10% in gains was also very high. It was a big number yesterday as well. So continue to monitor these individual names even in today's trading session on the back of results, news flow amongst others. For the Nifty though, we continue to see that positive traction come to the benchmarks as well. So at 23,600, while we are still away from that 700, 23,800 mark, which are long-term supports level, we continue to be very positive, at least in the near term, where we've seen very inaction or the benchmark indices numbers largely being in the bank. So continue to monitor the index now, especially on the momentum on these two crucial index levels. Bank Nifty, we've highlighted that there's not been much that's been happening on this index. Earnings are done. Macro factors will only drive the next leg of growth of at least the Bank Nifty for now. For foreign investors, yet again a number where you've seen red in terms of the cash market selling, and in the index long also very range bound between 11 to 12% mark. And May continues to be a month where there's not been much additions in the longs as well. For the open interest distribution, 23,500, 800 continues to be a key level. And for the stock specific action, open interest gainers, we've seen Max Financial actually see massive build up actually as well. In terms of the open interest losers though, let's pull that up, because here's where a lot of action was seen, especially Dixon Tech, where you saw short coverings. But the other EMS counters also saw massive coverings of shorts yesterday in the system. Tata Elxsi, Grasim were some of the other ones. Grasim on the back of results was the top nifty gainer yesterday as well, while Alchem Labs and Oracle Financial were the other two counters where you saw coverings of shorts yet again as well. So overall, continue to monitor all these individual names where the broader markets are more hearty at this point of time compared to the benchmarks.
Okay, individual stocks, but the first one I'm picking up is a large benchmark stock. ITC actually reported just a few minutes before markets closed. And then had a sharp reaction very quickly, ended up mildly in the green, like flat. But some time now to take a look at the numbers. So you saw that spike as soon as the numbers came, because visually the numbers look good. And then you saw that stock price come off. Now, here's what the deal with the numbers are and why we're giving it a thumbs down. One, revenue has come below estimates, largely impacted by cigarette revenues. EBIT and PAT was a beat, largely led by price hikes. FMCG business growth is intact. Agri business was impacted by the West Asia conflict, and this was already in Q4 and the end of Q4. So Q1 of this financial year will probably be worse. The paper business saw its EBIT improved. But Q1, like I said, is when the impact of the sharp tax hike will be visible. Now, if I look at the numbers on a consolidated basis, net profit is up 4.9% for the year. Revenue is down 7% at 16,050 crores. EBITDA is up 7.3%, and margins have improved actually pretty decently if you look at it. But again, with those price hikes taken on cigarettes, so 40.03% versus 34.7% is where the margins are at. Here's what Citi is saying. They've maintained a sell with a target price of 290. They expect near-term performance to remain weak. Calibrated, staggered pricing strategy could weigh on realizations and profitability, is what they say. As far as Jefferies is concerned, they've maintained a hold and cut the target price to 350. They say price hikes are only partial, while volumes and margins will be affected. Stock is likely to stay range bound. So that's the word on ITC. Nykaa is the other one. Giving it a thumbs up for a variety of reasons. So revenue is up 28.4% for the quarter, EBITDA up 67%, EBITDA margin up 190 basis point at 8.4, so bump up there, and net profit up 286% for the company. The beauty segment revenue grew 27% to 2,410 crores, while fashion revenue grew 40% to 225 crores. The board has also approved acquiring an additional stake in Earth Rhythm. Here's what Jefferies says, and they've described it interestingly. They call it flawless beauty. They've hiked the target price to 350 from 315. They say Nykaa continues to report strong growth across segments. Fashion reported continued acceleration with break-even, signaling management has cracked the code, and this is something they had aimed to do. Their own brands continue to go from strength to strength. Medium-term outlook is quite positive, although management sounded a note of caution in the context of tough macro. That's why they've retained buy despite stiff valuations. So you have even Macquarie fairly positive on this. Honasa is the other one, and this could well be the stock of the day because of how the numbers are. So you've seen a 23% uptick in revenues. EBITDA's at 77 crores versus 27 crores, big jump there. Look at the margin, 660 basis points up from 5.1% to 11.7%. Net profit up 178% to 69 crores from 24 crores. And of course, a final dividend coming in. Jefferies has maintained a buy, hiked the target price, and they title this saying, where there's a will, there's a way. Honasa is firmly on a strong growth path. Performance further improved in Q4 and margins reached their highest ever level. Guidance of high teens revenue growth with 100 basis point annual EBITDA expansion. So the Mama Earth plus group of brands that are under Honasa are clearly doing well. So those are the first three.
Yeah, I mean, FMCG is going to be in focus left, right, center today, I think. That's what is going to be the theme. On my list, I have a GAIL. Now, the reason I've picked this one is because it's a very weak set of numbers that have been reported. If you have to talk about the revenues, a marginal 2% growth. However, your EBITDA has gone down by 56%. Your margins have also kind of halved to 3.3% versus a 7.8%. And your profits are down 21%. Now, the numbers are also below consensus analyst estimates, and it's the transmission segment EBIT and the LPG segment EBIT. These are the only two things which have improved by 30% and almost 4 to 5 times on a sequential basis. Your marketing segment and the petrochemical segment have reported EBIT losses, and your petrochemical segment has reported losses for a 4th consecutive quarter. Transmission volumes that have been impacted as well, and in terms of marketing, those volumes also have been impacted on the back of West Asia crisis. So you could see some bit of a negative reaction coming in on AGAIL. The other one, this is going to be interesting to see what happens, Varun Beverages. Now, their bottling pact with PepsiCo has been extended to 2049. That's a 10-year extension that has come in. And overall, the key over here is, all this while, they were actually exclusively manufacturing only for PepsiCo. They would not really be able to take any other job work. Now, they have no restrictions on the company to carry out any other activity. So the company that was bound to only act as an SPV for the PepsiCo business is quite open from here on, and that is going to be the bigger opportunity along with what they are doing in terms of PepsiCo, because this will help them improve their margins as well going forward. In fact, Jefferies has maintained a buy. They still have a target price of 615. They're saying that longer franchise and a larger optionality. The move is positive as it opens up optionality given Varun Beverages' a strong go-to-market strategy, and the company has significant retail presence and execution capabilities. Very lastly, RCF, a robust Q4 is what they've reported, where the profits have seen a triple-digit surge as well. This is lower or stabilizing energy and raw material prices with superior product mix is what has aided their margins, and the earnings turnaround though is on a lower base. Now the revenues are up 50%, EBITDA up around 81 to 82%, margins 100 basis point improvement is what you've seen, and the profits have jumped 157% at 186 crores. It's interesting to see a fertilizer company with such strong numbers, so watch out for the reaction and trade today.
Yeah, very interesting. Some of the numbers, in fact, a few of the fertilizer companies have delivered a very good quarter. It's interesting to see that. Let's see how that shapes up. I'm a bit, how do I say? Conflicted about what happens or to which of the stocks in the first set of names that I've taken, which is the Dalmia Bharat deal, right? So Dalmia is going to acquire JP Associates 3.3 MT clinker and 5.2 MT cement assets from the Adani Group. Now, Adani Enterprises name is there. All cement business happens through Ambuja, and Dalmia, which effectively benefits the lot out of this, has gotten these. So in some sense, if there is one clear winner out of this, it's Dalmia Bharat Cement. So it's a good deal for them. It's right in the areas that they are in. They're getting it at a price that they want. So all of this augurs very well for Dalmia for sure. For Adani Enterprises or Ambuja, in some sense, the group is maybe walking the talk, because they've spoken about how they do not want to do breakneck expansion in cement. They want to consolidate. They want to focus on profitability. Maybe all of this is a step towards that. Who knows? Ambuja also have a small positive reaction, but I think the bigger beneficiary out here is Dalmia. So keep an eye out for that. Standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. The other one is Happy Forgings. Not a very large company, but very interesting because of the consistency. So here's what they've done. Revenue is up 20.4%. Operating profit margins are up 240 basis points at 31.5 versus 29.1, and profit after tax is up 23%. So not a very blockbuster number on the profit after tax number, but consistently gross margins are above 60%, operating profit margins are about 30% for a forging company, which is in some sense not a specialized business. It is a specialized business, but people do it. But for them to do this consistently, that maintain 60% gross and 30% EBITDA margins, it's quite stunning, really. So let's see. I was up 5% yesterday already. Let's see if there is more in store. Paytm, it's a block. The deal is happening in a block, of course. But SEF Partners about what 1.4% or thereabouts at 3% discount to the market price. I would reckon that there could be interest and therefore could be lapped up very easily. And then who knows, maybe there's a bit of a reaction. Keep in mind, it's as a stock, it's gone nowhere. I mean, Paytm has been stuck between this 1100 to 1300 range now. Maybe for a year, at least for the last 6 months, but maybe for a year. So virtually it's gone nowhere. So and from the bottom it has come up, but look at the last 9-month performance. It's just been stuck there. Just one last small name that I wanted to point out, guys, and I wonder if this becomes something that we hear from a lot of companies. RailTel, in an announcement, has said that they've confirmed a termination of a 26 crore order. The size is not important, but they cited that it could not execute the work due to a steep price increase in OFC and HDPE pipes caused by the ongoing war crisis.
Oh, that is a red flag.
Red flag,
It's a red flag.
Yeah,
So
yeah.
a company saying that, sorry, but we can't execute. I wonder if...
Is that akin to, say, a force majeure being put into place?
You could be right, Tamanna. Since we don't have the details, I've not gone that far. But it's interesting that the company is saying, if bhav itna badh gaya, to sorry, we are not executing.
Yeah, but that's the best way that they have been doing all of this, because it's best to protect margins in this kind of a scenario
of course,
versus.
but Hiral, the business losses that could
but that
come
will
in.
happen.
And bigger picture, when others come in
When
as
others
well.
come in and say this. That's the limited point I'm making.
I think the best is to get the management as well to talk to us and understand as to what do they mean, for how long are they going to actually continue with this kind of a
They'll
practice.
say as far as the war continues, because
but
things
then-
are going to get only more expensive.
Correct, but it can't be the time can't be unlimited, right, Tamanna? Because you're talking about
Hiral, who
an
knows?
impact. Exactly, that's the reason why we should call the management.
No, but sorry, I meant this piece not more as a rail tail thing because it's a small order, but what it could imply for what could come to other.
Exactly. Only from that perspective, that as an industry, what is it that they've also been hearing? I mean, are they the first movers to do this?
No, I think there
or
might be
what's
more.
happening,
I think
there?
it's a very important development that you've highlighted, Neeraj, because think of it this way. At some point, there are contracts in play, and if unusual circumstances have got your input costs going up so massively, one would think that maybe similar things are happening in the real estate industry and several others as well, which could see an impact. But time to talk about FMCG, and so much happening. ITC in focus. Varun Beverage is in focus, Honasa in focus, Imami has also reported. But let's start with ITC. ITC reported a mixed fourth quarter with revenues missing estimates due to weakness in the cigarette business. Profitability, however, came in better than expected. To discuss more on this, we're joined by Kritika Prabhudesai, research analyst at Mirae Asset Sharekhan. Kritika, very good morning to you and thank you for speaking with us. What do you make of ITC?
It was, we saw strong profitability, margins sharp beat on the front, margins sharp beat. So, overall.
Can you hear us?
The performance, though, is not comparable due to. Sorry?
Can you hear us?
Yes.
Okay, I think we lost your voice there. Can you take us to that point again, please? Why are you saying that the performance is not comparable?
It is due to the change in taxation mid-quarter. The performance with previous periods is not comparable.
Okay, so so you're saying that it is unfair to look at this in a positive light or a negative light?
Basically, margins have been a strong beat with around 40% compared to around 34% or similar expected. So strong beat on the margin and profitability front.
Okay. What about the concerns on the agri-business front as well, Kritika, and the fact that we've not seen the full impact of the West Asia crisis on this company, which we will see in Q1? Q1 is going to be the true test, isn't it?
Yes, so during the quarter, the exports for the agri-business were relatively subdued due to the West Asia conflict-led disruptions. And going ahead, I think there would be some impact in Q1 as well. But the company has maintained its focus on market development and scaling up businesses by leveraging its structural capability. So even though we see some impact in Q1, the company has a couple of strategies in place to mitigate the impact.
Okay. So, Kritika, with the way the earnings of ITC have panned out and what the stock has done, I know it's not comparable, but if you have to look at the last 6 months as well, or even for that matter, last 1 month, I mean, absolutely flat. What is your call at this point in time to take a call in terms of FY27? Would you recommend a buy or a sell to someone who's holding ITC?
Okay, so we, the company's focus has lately shifted to the FMCG business, and they are, seeing good performance in that business segment with strong revenue growth and margin expansion during this quarter. They have premiumization and cost-saving measures are playing out for the FMCG segment, and that is doing really very well. Though other segments of paper and agri are looking, subdued in the near term, but the FMCG segment is something that will drive growth, I think, going ahead. Near-term headwinds do persist with respect to prolonged disruption due to the West Asia conflict and emerging El Nino conditions. So near-term risk is there with respect to the FMCG, and also in volume growth will be key monitorable for the cigarette business. But over a long-term period, I think definitely ITC is a buy, and it is coming up with multiple strategies to perform better in all of its business segments.
Okay, thank you so much, Krutika, for speaking with us today. That's the analyst at Mirae Asset, Sher Khan, who tracks this story. We're going to take a very short break. Let me pull up the implied for just a second before we come back and show you where the markets are. Remember, we've been extremely range bound, just showing a mild uptick right now. And that too as news is coming possibly of the US and Iran moving towards an agreement. We'll take a very short break, but we'll be back with all of the stocks that you should talk about today. So much to unpack. Kush and Parag will be with us. Don't go away. Is it going to be okay, or is I think the brightest spot for new investors who got in at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
All of you work for the same organization, and that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months, and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Welcome back. You're watching India Market Open. Parag Thakkar, Kush Bora in the house in a TGIF mode, one assumes. Kush, let's start with you. अब कुछ हो नहीं रहा है market में.
तो तुम बताओ कहाँ थे?
Oh,
You've been up to something very exciting, I know for sure.
I had a very busy week of travels for work. I've been all over the place, but yeah, happy to be back in Bombay. I was in Goa for the last couple of days for the Goa Fest. It's this huge thing for ads and business, but the biggest thing to report is the weather is great in Goa. It has started raining. Huge relief compared to Bombay. So if you can make it for the weekend, please do.
Now I think I shouldn't have asked you that question.
You're feeling bad.
Of course. Markets are not going anywhere and you're celebrating in Goa, of course, working. I'm kidding on that front. No, but you're right. Kuch nahi ho raha. And as I don't know if it's a dialogue or if it's a song, khaya piya kuch nahi. Gilas toda bara na. Okay, so not happening, on the Nifty at least there's nothing much happening. But it's not all bad, right? I mean, we gave up the gains that we had on the opening, but look at what this mid segment is doing, right? Positive market breadth, the small and the mid cap segment, the indices ending in green. Also look at it from this perspective. If Reliance Industries, Bank Nifty and Nifty IT, they ended in red, and you would have heard, Nifty ended only 4 points down, I would take this any day of the week, right? Maybe twice on a Sunday. So this is a good setup because the markets from the lower levels are seeing buying. Of course, yesterday we saw selling pressure from the upper end, but that upper end of the range is being tested. I have spoken about the range as being 23,200 to about 24,000, but a more narrow range is 23,400 to 23,800. So that upper end being tested, it's a good sign. And like I said, SMID's doing what they are. It's a positive sign. At least the portfolios are not looking as bad, right? Still, I would say no positional trade on Nifty. Play the trend of the day. But if you want to play a positional trade, like I've said for the last couple of days, Bank Nifty is your index to go to. The indicators are still positive and getting better, even though the betterment is slow, gradual. But just to name out a few indicators and how they're shaping up, stochastics are oversold for a while now, and could see a bump up from here.
What is oversold for a while?
ये तुम दूसरी बार पूछ रहे हो मुझसे. Stochastics. Yeah, I got this right?
I don't know. You are
I'm
saying
saying
the word.
last time I got it right and you still questioned. So basically...
No, I think, see, look, our purpose over here, I'll tell you why I'm asking. Our purpose over here is to speak to viewers in a language they understand. So it's our job to do that. So if you're saying stochastics, and I think that people may not completely understand, then it's great if you can take 10 seconds to explain it.
I'll take you one step forward on this, right? My belief is that, usually analysis hamara kaam hai, actionable view dena is at the end of the day, right? I have found that at least a segment of viewers expects data, and hence I'm putting out these names.
No, completely. You must.
And that is why. So basically, stochastics is somewhat like RSI, but RSI gives you indications of overbought and oversold from a slightly medium-term perspective. I mean, that's not the right word, but it's a little slow and gradual indicator. Stochastics are that much faster, so they go into oversold and overbought territories that much faster. So that is why we use stochastics to get a sense of a very near-term trend, immediate trend. Okay. That's the idea. Otherwise, RSI is a more definitive one.
Okay, so what is this indicator telling us?
Yeah, so it's showing that the Bank Nifty is in oversold territories for a while now. So which means the downsides from here is rather limited. Now over to the other one, which is RSI. It is under 40, but it's starting to set up for a bullish crossover. And the indicator that we speak about so often is PCR. That is now at 0.72. Typically, we've seen a rebound from from oversold territories of 0.7. So, like I said, this is shaping up for a good, positional long trade. Stop loss still around the 50 to 700, 50 to 800 zones. Maybe you can bump it a little higher, but that's still the strong support zone. So, if you want to play positional long, Bank Nifty is still your index to go to.
Okay. Before I go to Parag Bhai, Kush Bora, your stock ideas for the day?
Yeah, the pharma play, the biotech play still, makes the chunk of the cut, right? So on the long side, you've got JB Chemical and Panacea Biotech, and GAIL, Gujarat Ambuja Exports, from yesterday continues as a call. So targets for JB Chemical, 2235, 2290 with a stop loss at 2125. Panacea Biotech, 435, 445 are your targets. 415 is where you keep that stop loss. Like I said, Gujarat Ambuja Exports, flattish today, but with a green bias. So, the targets and the stop losses continue. 170, 176. Stop loss at 159. And just a quick update on Autumn Investment, by the way, we spoke of it yesterday.
Sorry, you're not. So Kush was not talking about GAIL. She was talking about Gujarat Ambuja Exports. I think that's the stock.
Yeah.
So keep that in mind, and that the target is
170, 176. Stop loss
Okay.
at 170.
Can we get Gujarat Ambuja Exports on the screen? I think that's the stock, and the stop loss is
159.
And the target is
170 and 176.
Perfect. Okay.
And like I said, Autumn Investments, we spoke about it yesterday a couple of times, went on to hit target 1, very close to target 2. So if you have a position, continue holding on to Autumn Investments. You can bump up your trailing stop losses to about 520, 518 zones.
Just a bit, just small fundamental piece here. I mean, and again, I don't know about the business, but Autumn Investments belongs to a fairly noted investor out of Mumbai called Sanjay Dangi. He runs Autumn as a house, and this is his listed entity. Just facts out there. I have no idea about the business, by the way.
Okay. All right. So those are some of the picks this morning. Parag bhai, what is on your radar? What are you finding exciting?
So basically, yesterday we spoke about Grasim, and I think Grasim was a top nifty gainer by God's grace. So I would say that
मैं बोल रहा हूँ थोड़े दिनों से that while Parag Thakkar is a long-term investor, he's becoming a very good tactical maestro.
It is just incidental. It is. I'm not a good
with God's grace.
With God's grace. But Parag bhai, the Upperwala is smiling on you more than others. That seems to be the case.
That is just a destiny. I don't know. But yeah, so now today, for example, this Dalmia's acquisition of 5.2 million tons, it is done at a very good price, $70 per ton. And already company is sitting on the stock is completely beaten down. Net debt to EBITDA is just 1x. Stock is trading as EV EBITDA of only 9x, which is big discount to the larger players. So I would say that this is a good acquisition. And I suppose that I read that on tomorrow. Tomorrow there is a board meeting for preferential shares and warrants allotment. I suppose and I guess that promoters should take it because stock is completely undervalued. If that happens, I think this is good for the stock.
What about on charts? Is that something you're tracking?
Dalmia Bharat? The chart setup is not as interesting. I mean, it's had a series of lower high, lower low formations. There is, a resistance, at slightly higher levels. But if this news is anything to go by, then you could perhaps have a move up until 1790. If that is taken out, then I think the lower high, lower low formations get rejected. The falling trendline resistance that gets broken. So I will wait for that price confirmation. So, but 1790 is the level that I'll watch for on the upside.
Okay, 1790 on the upside. Now the stock which could be in focus because of news is what's happened with Swiggy. They had a shareholder vote where they wanted to do a couple of things, including make it a wholly Indian-owned company, move to an inventory model, and also have key nomination power with the founders on the board. This vote has not gotten approval. They have not met the basic standards of the vote. It's a failed shareholder vote. So they did not get approval to be an Indian-owned company. They hosted the shareholder meeting for an amendment in the Articles of Association, and they received 72.36% in favor, but they needed 75%. The amendment was then rejected due to a shortage in institutional shareholder votes. 59% institutional shareholders voted against it and 99% retail investors voted for it. So why did they need this vote? An inventory-owned model could have helped better supply chain efficiency, better control over product quality and pricing, and higher margins through bulk procurement, easier promotion of their private labels, and increased average order value. But the fact that institutional investors, and there's large enough domestic mutual fund shareholding in it, have not gone for it, could be a bit of negative on the stock. I don't know how you see it, Parag bhai, not just about the company and the kind of business they're in or their model, but if you have this kind of a vote, and it's not like they've lost that vote by too much, it's just about 2%, but the fact that it's the institutional guys who have not come out in favor.
Yeah, so basically, you see, if you see from the last QIP price of 394, stock has also not done well. So as such, institutional investors are not happy.
Yeah.
EBITDA loss has reduced, but still it is a loss. Plus, the loss has reduced at the cost of growth. Right? So I think anyway, institutional investors are not happy. And plus this episode, so I think things are not going well for this company.
The other thing I want to add over here is, when this announcement came on the 14th of May, where they said that we will be looking at a shareholder vote for something like this, the stock from then to now has also not really done well. on the day of that news, the expectation was that because Blinkit has already moved to that model and shown results in the fourth quarter, probably the street would have been excited about Swiggy.
Maybe there was a hint that...
That's what I'm saying. So the stock really didn't react on that very day, and from there to now as well, there has been no reaction. So probably something, as you're saying, there was a hint where they would not accept it. And in fact, I was just having a conversation with Mahima on this, where she was of the opinion that, you know, this model is not that juicy right now, because though you're looking at margins, but the cost structure becomes absolutely heavy because you're owning the inventory. So that is one of the negatives over there.
I don't know if institutional investors have a problem with the model per se or with the pricing.
But
and giving more in the hands of the management right now. On chart, Swiggy, is there any action that you're seeing at all versus a Zomato or Eternal actually?
So before I do that, and this is me speaking as Parag bhai, मैं तो कब से बोल रहा हूँ.
Okay.
एक loss making company को आप इतना valuation दे रहे हो versus all the FMCG companies, etc., etc. Right, Parag bhai? See?
You're learning well.
Oh, absolutely. I'm learning from the best, right? So, no. But I think the view on the Swiggy charts also has been a little negative for a while. Maybe Eternal benefits out of this. In the sense that if it gets that sectoral allocation for the new age companies, then Eternal probably will do better. That said, even Eternal is facing some headwinds right now. If you see lower high, lower low formations on the weekly setup, falling trend line resistance, all of that going for it. But if I were to still pick between the two, I would still go with Eternal. Like I said, it's not a screaming buy because there are still technical overhangs. But between the two, I would still go with Eternal.
Okay, let's go across to Samit Sarkar, who's eternally there with all the chatter from the dealing room. Samit, what do you have for us this Friday morning?
And the first stock is Panama Petrochem. Now, large prominent HNIs have been accumulating this counter in trade. Now, dealers are expecting a strong Q4 numbers coming in from this counter. For JSW Energy, the company opened their QIP a couple of days back. What dealers are indicating is that the demand is quite strong for this QIP. Large, long-only funds have been subscribing to this QIP is what dealers have indicated. For Ashok Leyland, buy flows on large HNI and PMS desks, dealers are expecting a strong margin beat to come in the fourth quarter of FY26 numbers. And yesterday we did indicate about Varun Beverages. There were buy flows on the institutional desk. Delivery volumes are also were seen on the higher side, and dealers were expecting some positive news flow. And yesterday, post-market, the company did announce that that they have extended their agreement with Pepsi, and also there have been some restrictions that have been lifted. So that is quite positive for Varun Beverages at this moment.
Okay. Thanks a lot for that, Samit. Khabar confirmed indeed. And what a khabar, because frankly, in some sense, it could well lead to Varun Beverages becoming the stock of the morning. And maybe not, let's see, because there are others in the fray too. But Parag Thakkar, Varun Beverages, for a franchise of this magnitude, having such a history, such a strong history, to get this extension and with the leeway of being able to do work for others, I mean, it couldn't get better, right?
Yeah, of course. This company has executed brilliantly. A market cap of 1,75,000 crores and PAT of 3,000 crores. So I think, although the stock might appear expensive, but they are doing all correct things. And this is again another feather in the cap.
I wonder though, is the positive as big as the potential negative? I'll explain what I mean. If this extension they've got is great, would have been expected to some extent. If they had not got it, would have been a huge negative. Is the fact that they have an extension such a big positive, and is it a bigger positive than not getting it?
No, more than the extension, it's the optionality of manufacturing outside of PepsiCo is the bigger positive over here.
Okay. So which is why it is a huge shot in the arm.
Because to get a manufacturer of this size, this scale, to manufacture for the kind of startups, the kind of companies that are coming in, like for example, take Lahori.
Yeah.
A Lahori can probably, if they want to, go to a PepsiCo, go to a Varun Beverages to manufacture for themselves.
Okay, so they've got an extension on their own terms.
Exactly.
So that
is the larger positive here. Parag bhai, your view?
No. So basically, the company is doing extremely well. The numbers are good. Summer was also in favor of them, and now but this is a long-term structural positive.
You know, summer was in favor, but what has played spoilsport is the supply chain. And in terms of raw material pricing, right? So that's where they have had the squeeze in terms of margins.
So basically, see, there are many companies which are reporting good numbers now, but will face headwinds in Q1 and Q2. There are many such companies, right? For example, ITC. Now we are going to speak about ITC. So I'm saying that, see, ITC this quarter cigarette business does not reflect the reality, right? Because the price hikes have started after March.
Do you think volumes will fall? That's one very inelastic
It
segment.
might, because India is the largest market for illicit cigarettes. So that is only going to go up. So we'll have to see. I mean, even management doesn't know. They'll have to see the impact, right? They'll try to do whatever mitigation strategy they have to do by launching new products at a new price point and all that. But all said and done, let's see. Their FMCG business has done brilliantly, I would say. But cigarette business will have to give 1 or 2 quarters to them. Although the dividend payout is fantastic, so it's like a quasi cash with 5% dividend yield.
So how are you looking at ITC? Would you have a buy
I
on it
know
right
for
now?
sure that people are going to watch Q1 and Q2 very eagerly before taking a big call. So I don't expect a near-term big rally. It might be muted between 290 to 315, this range, till we know that what is the volume decline in Q1 and Q2.
Okay. Kush, quick one. Anything on the charts on ITC and Varun?
I like the setup on Varun, by the way. 16, 17 months of downturn, that resistance being taken out about 4 weeks ago, still sustaining above that, and then positive triggers coming in. This is a very good setup. So you have a good risk-reward ratio. This is a positional play now. 475, 480, those levels will act as your stop loss from a positional standpoint. On the way up, you're looking at 555, if that is taken out, even 585 plus kind of levels. This is turning out to be a good positional bet. And like I said, after a long period of negative biased consolidation, this is breaking out. So yes, you can consider this for a long trade. ITC, again, it's gone in a very tight range, might continue to do so. So nothing to write home about. I wouldn't really be a buyer into it from a very big upside. Margin of safety, perhaps, yeah.
Okay, so that's with regards to ITC and Varun, but Varun becomes his preferred pick. Now moving to the auto space, you have passenger vehicle makers who are continuing to increase prices, and this is mainly because input cost pressures have remained elevated. Maruti has joined the peers like Tata Motors, M&M and Hyundai in announcing price hikes across models. Danish joins us to tell us more. Danish, if you could help us understand, first up, good morning. What is the quantum of price hike that has been taken, and what are the OEMs actually telling you? Is this going to be enough? Are there further expectations as well?
Well, Maruti Suzuki has become the latest automaker to announce price hikes, and from June, Maruti cars will get costlier by up to 30,000 rupees, which means that from June onwards, Maruti cars will become costlier between 1 to 4% depending on the model type. And this is for the first time after the previous year's GST cuts that we saw that Maruti is hiking its prices. And one of the reasons why this is happening is, in fact, the reason that the input cost pressure is a lot on the companies, and this is on the backdrop of the West Asia crisis that we are seeing. And because of the West Asia crisis, there is cost pressure not only on the raw material prices but also on shipping of these components, and so there is a supply chain challenge that the industry is facing. Apart from this, if we see, Maruti Suzuki has become the latest company to announce these price hikes. Previously, we saw that Tata Motors, M&M and Hyundai had also announced a price hike a few months back. But now, with Maruti being the largest player, we are seeing that the prices of Maruti cars will be going up. But now the big question remains that in the current scenario, whether the car companies will increase prices in the future or not, because in the current circumstances, we are seeing that there is a huge pressure on the input cost, and even the petrol and diesel prices are rising. And
Sure, Danish. Thank you for that. Okay, so it started. More will come. Dhruv Joshi, research analyst at Mirae Asset Share Khan, joining in with more. Dhruv, do you expect others to follow? More OEMs to follow? Good morning.
Yeah, so this was imminent. Price hikes were imminent, and we saw this primarily rising from the suppliers at the moment, or the ancillary players, wherein at the moment they did absorb some kind of pressures. But at the moment, we feel that instead of when can these prices hike, it's about how much can these prices hike without affecting the actual demand. So yeah, actually, I think most of the players, most of the OEMs will have to raise their prices to negate those input costs.
So then if the demand is the question, Dhruv, we're already seeing some pain points, you think, on that front, and that will continue whether price hikes are, of a lesser quantum or larger, one way or the other, that pain will continue?
So what happens is we see usually the CV players kind of, defer their demand or defer their purchases, primarily to see whether this can be fit into their economies. What happens is with this input cost rise and also with the price increase in the prices of diesel and petrol, which also happens to be one of the largest costs for these large fleet operators at the CV level, deferment of demand does actually take place. So it kind of leads to a chain reaction across the sector. So one thing leading to the other, one sector leading to the other. So we can expect that to see from the CV. We saw that in the April month, at least in volumes, where the volumes that growth we saw around 12-13% kind of slowed down to about 6-7%. So going forward, probably around the same lines.
What would be your picks for companies that will be able to absorb most of the hit and not have an impact in demand? Who is better placed in this scenario right now in the CV and PV segments, Dhruv?
Yeah, so what we believe is all these input cost pressures at the moment will be resolved with better volume mix and better demand, better kind of product portfolio along with these price hikes. So companies like Mahindra and Mahindra who had faced the semiconductor shortages for their screens, and they seem much better compared to other players. We also look at Maruti probably that they will be able to somehow maintain those margins that they currently operate at.
Dhruv, just one quick question. Because the GST benefits base also ends from November, right, thereabouts, are we looking, and the market tends to discount things 4-5 months in advance, right? Are we looking at the sector topping out? Would the gains in stocks be not the norm but an exception to the rule?
So what we kind of expect is that these 2 quarters should be fairly a pain point for entire auto sector, not just the OEMs, but also the ancillaries. We do expect margins to be flattish because of better products and primarily the price hikes. Honestly, again, coming back saying that, instead of when these price hikes happen, it's more of how much can they hike those prices without actually affecting the demand.
Okay, thank you so much for that, Dhruv Joshi there talking about the auto pack. I mean, this seems like a no-brainer right now on the face of it, but are we too quick to write off what's going to happen in the OEM space and then all of the ancillaries and the second order effect?
See, the prices have become attractive. Even we have started nibbling into auto.
So valuation of these companies are
and
looking
plus,
decent.
if you see, macros can change any time, and the discussion between US and Iran are underway, so we cannot say anything with full conviction.
Yeah. This could all reverse.
Yeah. But so right now, Brent is 104 rupees 96.2. US 10-year has also fallen. So I would say that we are expecting that at this price, if you buy, if something goes completely haywire, then it's a different thing. But if something comes in favor, the price points are very good in auto right now. Whether it is TVS, whether it is Bajaj Auto, whether it is Maruti or Hyundai, I would say. Hyundai has this forced selling which is going to come due to this MSCI rebalancing.
Yeah.
So that will be a good thing to watch.
You would look at Hyundai positively at that point.
Definitely.
Any of the OEMs that you like, auto pack that you like, Kush?
You can also say that you don't like Hyundai.
I don't like Hyundai.
Exactly.
Look at the rallies fizzling out and so fast, right? So I wouldn't really bet on Hyundai right now. I like 2, but for very different reasons, polar opposite reasons. One is, Tata Motors PV. Look at this one. This one actually has bucked the trend and gone on to actually gain ground where a lot of other have actually lost. So immediate resistance is at 380, so this is more of a hold rather than a buy. But if you want to play for targets of 380, 390 with a stop loss at about 355, you could still do so. And from, like I said, the other reason, which is a stock falling but has potential, is Mahindra and Mahindra. It is falling, but from a medium-term perspective, it has a rising trend line support, and we've seen the stock rebound multiple times, from that support. So right now, it comes in at about 3040. Maybe you can round it off, but right now, from a positional standpoint, Mahindra and Mahindra starting to look attractive after this fall. So like I said, two very different reasons. Tata Motors from something that's already gained ground, and Mahindra because it's lost ground and could rebound from here.
Okay, let's talk about one other interesting note that is on today. Bernstein has stayed positive on the Adani Group, highlighting strong execution and a solid balance sheet with no major debt concerns. Sharad joins in with key highlights on that note. Sharad.
Well, yes, Tamanna, strong set of, commentary coming in from Bernstein on Adani Group of stocks. And one by one, I'd like to just mention, they've stated importantly that the execution is at scale to beat the inefficient, government-run businesses. Also, the share pledge and the promoter holding is at healthy levels right now. Debt, there is no major concern for it. And the debt repayment and yields are comfortable for the entire group. Let's just look at the numbers. Adani Ports, they have maintained outperformance with a target price of 1,880 rupees per share. Adani Power, also there is a maintained outperformance, target price of 177 per share. And two important commentary coming in. First one for Adani Ports is that they're having a strong pricing power and room to expand in the value chain, and this augurs well for the company going ahead. And for Adani Power, they have stated that it's effectively becoming a 2 to 3 player market where the equipments segment there was a bottleneck, and the company has blocked both these Indian suppliers. So this augurs well for Adani Power as well, and that is why Bernstein is bullish on Adani Group stocks.
Standard disclaimers there. You're watching this report on NDTV Profit, and NDTV is a subsidiary of AMG Media Networks Limited, an Adani Group company. But just, your view, Parag Bhai, on what Bernstein has said, and sort of a re-rating and re-look at some of these companies. Though some of the stock prices have actually gone up a fair bit.
Adani Enterprises is up 50%. So some of the stocks have already rallied, and as I said, now the institutional interest is picking up because now the EBITDA levels have reached a level where net debt to EBITDA looks very comfortable across the companies. Of course, it was comfortable in a annuity cash flow business like Adani Ports, but in many others they were in investment phase, right? Like Adani Airports, the Adani Green. So I think all of that is now coming to the fore. So.
My sense, somehow, I just feel that a lot of people will not be able to push the button on let's say, Adani Enterprise, for example, as an argument's sake, because 1800 पे देखा है, तो 2400 पे कैसे ले या 2700 पे कैसे ले? But just the spate of announcements that now will possibly come in from the group, because they have so many businesses on which they can actually make further moves, and the fact that now that the US issues are cleared, global fundraising becomes an option as well. It remains a pocket of news flow and possibly a price action which could surprise many. Now, when we talk to people, and I would love to, for example, on Editor's Cut today, talk to Vikas, or when Pankaj Tibrewal comes in, because he tracks some of these businesses, infra-heavy businesses very well, about what should investors do when some of these stocks have rallied so much. I think it'll be a fascinating conversation.
Yeah, I agree. So a lot to unpack. I just want to quickly, pre-open rates are up. I want to look at what LIC is doing, because I think that's another stock that we should track this morning. Good numbers for a second quarter in a row. Stock is about 1.5% right now. Profits up 23% for the quarter. Net premium income was 11.6% as well. Solvency ratio is at 2.35% versus 2.19%. Parag Bhai, you like LIC?
Yeah, LIC has been it has been a value trap up till now, but I would say that performance is phenomenal. VNB growth,
it doesn't seem to be getting the
that is simple
response.
Because of overhang of OFS. So I think once for all, I think in my view, humble view, government should finish it so that overhang is out of the way. Stock is totally undervalued. It's 0.5 times price to embedded value, and VNB margin, VNB growth, everything was fantastic. So I think it is a completely undervalued stock just due to overhang of OFS.
Is it a buy? Table thumping, table tapping?
It is a buy.
Table thumping or just?
Table thumping, why I'm not saying is that because of this overhang, the stock will not go cross, say, 850 level.
And there is no clarity on when that will go.
Yeah.
We can only
I think government should take a call and finish it off.
Yeah. But
whatever is it, and whatever they have to do within that particular time
right now, they're unlikely to do it, right? Because you'd wait for market conditions to improve.
Absolutely, but I think the stock is not improving just due to that concern.
Okay, so it's a chicken and egg situation.
Of course, and market is also not moving up. That is also a reality.
I think if you go by the government's track record, they will not do it when the stock is at a high. So might as well do it. Whereas the government divested at the right value.
Yeah, that timeline.
Still,
the timeline
is left with so much stake that after the stake sale, if it goes up, they are benefiting only.
Okay. So that there is a case for that. The OFS has to come out of the way. But if you look at just pure performance, and kudos really to the management who is bringing that in quarter after quarter. Let me go across to the brokerage call of the morning. Sharad is back, and this time with a Bernstein note once again, but focus on pharma, Sharad.
Well, yeah, that's right, Tamanna. And earlier, Neeraj also mentioned that chemicals and pharma is something where there might be a little bit of good momentum coming in. And now Bernstein has also come out with its report. Zydus Life, Lupin, Sun Pharma and Aurobindo Pharma, they have given most of these stocks an outperformance rating. And interestingly, they have stated that the innovation opportunities, especially niche therapies, that is where the alpha lies. Also, this is driving India's biopharma story as well. Incremental innovation is making a rainmaker sentiment for the Indian biopharma, and the quality culture and the agentic AI gains are strongest catalyst, at least in the innovation segment of this ecosystem. Valuations are attractive, but yes, policy uncertainties are winding down. Also, Zydus, talking about an earnings acceleration over the next 2 to 3 years from innovation, wellness and medtech agencies. And Lupin, there's an innovation-driven turnaround story happening. And for Sun Pharma, it's a consistent performer with a strong EPS growth. So this is the view coming in from Bernstein on the pharma stocks.
Okay, thank you for that. You know, this sector has been doing interesting. And what's the key takeaway here is that the US business in the Q4, which was expected to be under pressure, somewhere has outperformed. And that is the highlight, because the guidance with regards to US business is also very positive. Sun Pharma, in fact, will be reporting numbers today. Let's also get in Amardev Singh, Senior Vice President Research at Angel One. Amar, welcome to the show. Always a pleasure. You know, I mean, we've just been talking about, okay, we've lost Amar. But let me actually head across to Puneet as well, who's standing by to tell us what the deal that LTIMindtree has announced, where they've issued an offer to acquire Randstad's technology and consulting services business in Europe and Australia. Puneet, good morning. First up, how big is this deal? And two, what does this really do in terms of the company's size and potential?
Well, thank you for that, and good morning to you as well. We've seen a big acquisition actually come in at a time where the growth has been very absent for especially the mid to large cap companies. So, as you rightly mentioned, LTM, of course, LTIMindtree earlier have now issued an offer to acquire Randstad's technology as well as the consulting business in Europe and Australia. Now, this will be domain-driven solutions as well as the AI solutions and services that the company has in these countries and continents. Deal would be a 360-degree partnership, as they've consistently highlighted, and primarily across aerospace, defense, automation, utilities, and BFSI are some of the areas that they are looking at. Now, specifically, this is a part of LTM's 5-year transformation journey that they've highlighted, to drive AI-driven solutions. And the proposed acquisition is expected to be completed by Q3 of FY27, and at an enterprise value of 160 million euros as of now. I also just want to highlight the revenue history has been decent for the company over the last 3 years at 469 million euros in calendar year 25, but it is down from 609 million euros in 2023. So just some perspective of that will be given in the con call today, scheduled at 12:30 today, and we'll give to you, of course, all the details.
Okay, watch out for LTM, an important acquisition which has been announced, could be a buzzing stock this morning. Amardev Singh joining us. Amar, can you hear us now?
Yes, loud and clear.
Okay, good morning. Tamanna here. Great to have you on. Just let's get a quick index view.
Yeah, so basically, see, index is somewhat trying to find some support at lower levels, but it's more of consolidation that we are seeing, because we saw the index witness a significant rally, but then again, there was this sell-off happening, more tied to the crude oil prices. But I would say that, yes, definitely there's very strong support for the index at lower levels. So that's somewhere around the 23,300, 400, that's acting as a crucial support zone. But till the time we don't see the index closing and sustaining about the 23,800, 850 level on a sustained basis. And also crude oil prices need to sustain below, I would say, the $100 mark consistently. But yes, definitely we are seeing some buying interest coming in. We've seen some very good interest in some of the bellwether stocks as well.
Okay, good morning, Amar Hiraliya. So what would your top picks be for today?
Yeah, so the first one is from the IT space, and that is Wipro, because we've seen the stock correct significantly, and it's taking strong support around the current level. So the downside seems to be limited. So there's an opportunity at the current levels for an upside target of around 225, and the stop loss is below the 190 level. So that's one stock from the IT space. And the second is Manappuram Finance. We've seen the stock in a very strong trajectory, and the stock is trading at record highs. Did consolidate for a few days, but this is one stock one can look at on any pullback towards 310, 315. Ideally, that's a good level for entry, and the stop loss in that case is below the 290 mark for an upside target of 345.
Okay, what else is buzzing in the pre-open session? Pre-open session's closed now, but let's look at what you should watch out for. Some good numbers which have come in today. I want to start with Honasa, RCF, BKG Foods, Wakefit Innovations was also in focus. Sun TV, Ashok Buildcon, Engineers India has not had a great set of numbers. Look out for stocks like SRF and Naveen Fluorine, because Trump has eased refrigerant rules in a bid to address surging grocery costs. You're seeing a mild uptick on an SRF today. Power stocks could be in focus because peak demand for power has hit a record for a fourth straight day. So look at some of those power stocks right now. Positive commentary from Bernstein. You should look at the Adani Group stocks this morning and see if there's any action there. There is a Paytm block deal where Saif partners are likely to sell, and Central Bank has launched an OFS. But apart from this, some of the stocks that I'm seeing buzzing, I want to look at Honasa, RCF, LIC, everything we've discussed this morning, frankly. Nika, again, was on our watch list. Good set of numbers and all of the action there. Actually, pull up Honasa first, because that's the top gainer on the Nifty 500 after the pre-open session, about 7% up. Is this a space that you're tracking at all, Honasa? Have you started looking at? Because now you've had consistent good performance for the last few quarters.
Good performance. So basically, and this is something where, at least the numbers are also matching. Market cap is around 11,800 crores. This quarter PAT was 69 crores. This year's PAT was 2.
What do you mean by numbers are matching?
So something, something like, for example, I'll not name a company, viewers will understand, and that will also do well today. For example, a company which does EBITDA of 220 crores and the market cap is 78,000 crores. If you annualize, if you give 50% about that, next year EBITDA will be 1,200 crores and still 72,000 crore market cap.
Any additional hint apart from these numbers on which company?
I don't want to.
We should have a daily quiz. Guess the company that Parag Bhai is talking about. So you're saying here it's making sense?
Here it's making at least some little sense. The stock has rallied significantly, so I would not buy, frankly speaking. Disclaimer, stock has rallied massively. But from 295 to 364 and now today it is 385. But of course it will be a good buy on dips, because company is doing well, numbers are very good.
I don't know if you'll get a dip today.
Yeah, today you will not get.
You're seeing it on the charts at all?
You might, because it's now gone into deep overheated territories. A gap is also being filled with the kind of up move that it's seeing today. So it'll be a good idea to book profits at least partially if you're holding Honasa.
Well, maybe Kush, you can think of the imaginary stock, or imagine the stock that Parag was talking about, and give imaginary targets for that as well. Amar, we'll come to you for your top idea just after the market opens, because we're just 10 seconds away from the market's kickstarting trade. Remember, the global cues are positive, so therefore, after what promised to be a terrific Thursday but kind of fizzled out, let's see if we are in for a fantastic Friday or not. But here's how we're starting off this Friday morning. Actually, not too dramatically higher, but just about 42 points. Though we'll take it because the market breadth is looking positive. 1287 to 384. So the advanced decline ratio looks okay. Nifty Bank is up 0.4%. Is IT or some other index sulking? Maybe autos, I don't know. We'll figure out. IT is actually flattish. Yeah, so that is maybe sulking a little bit. Small caps too, around flattish. But the market breadth is positive, fairly deceptive really, what the indices are doing versus the breadth, advanced decline. Let's get the heat map up on the screen. See what is actually dragging the index a bit. From amongst the heavyweights, ITC is lower. Not as heavyweight as a stock as it used to be, but still commands some weightage. IT seems to be a bit of a grind. Infi in particular looking soft. Apollo Hospitals, Cipla, etc. But the going is good for some names. Nothing dramatic. But Maruti, Adani Enterprises, Trent, Tata Motors PV, seems like some auto names are piling that in. ICICI Bank is giving this little bit of a support. That is a true blue heavyweight up about 0.5%. There's strength in Bajaj Auto, Jio Financial. So seems that autos is the first port of call today because even iShares is in the green. So autos are right up there. There is a bit of a flavor in Bharti Airtel and ICICI Bank. So in terms of two heavyweights doing well, more green than red, but fairly flattish start. And now, I mean, look at the kind of moves that Max is doing, for example. So ITC Max, clear drags here.
Yeah, I don't know how to put it. Dum nahi hai market mein aaj. There's just no power driving even the numbers that are good because you've had price hikes taken. Usually the market should appreciate it that things are getting sticky and large companies, large OEMs are coming in and taking price hikes. So they have that confidence that it will fly through. But look at the very mild uptakes and then result impact, etc. are showing up more, right? ITC and Maxell that we spoke about. Let's pull up the broader markets this Friday morning and see if there is a better scene there. Not really. Completely flat on the Nifty mid cap 150 and the small cap 250. Advanced decline ratio slightly better for the advances, but not anything that you can really celebrate at this point. We're in a very still kind of a situation. Let's pull up the sectoral heat map and see what trends that's throwing up. Nifty Auto about 0.5% up. Healthcare getting dragged down today, though pharma overall is in focus, but clearly not very positive moves. Realty is okay, not doing much, and private banks are also benign. The range is not even 0.5% on the upper end and 1% on the lower end. So it's going to be stock specific, and that's where we should move really. Let's look at some of the companies that have reported results overnight. Honasa, RCF, LIC, all of these on our stock to watch list and our watch list. You should really join us every morning because we talk about the stocks that are going to move, and our hit rate is pretty good of when they move or not. Honasa Care, we told you, good set of numbers, 10% up this morning. RCF, good set of numbers. For a chemical company, has really done well. 6% up this morning. LIC has been delivering the goods quarter after quarter. Parag Bhai says, get the OFS out of the way and then you'll see value unlocking. 4% up this morning. FSN, let's look at Nykaa, described by one brokerage as flawless beauty. 3% up at least this time. Max Healthcare, we told you, not great numbers. Not getting the rates for Dr. Agarwal over there, or Agarwal I think unchanged right now. One look at Page Industries, reported yesterday, but good brokerage views coming in post results, about 4.5% up. Varun Beverages, another stock that has been making some moves, and that's about 2.5% up this morning. Extended their contract with PepsiCo in favorable terms. JP Cement assets will be taken by Dalmia Bharat. That stock about 3% up. And Swiggy, we talked about it. They've lost a shareholder vote by a minimal 2% or so, which is seeing a little bit of a muted response this morning, but nothing really stand out one way or the other.
Absolutely. I mean, Tamanna, Honasa, as we were talking about, that is the stock of the day with the kind of moves coming in. Engineers India is one which comes to my radar right now, reacting two numbers, 7.5% downtick coming in on that one. Central Bank, Tamanna mentioned with regards to OFS, but the pressure is building up there. From the pharma pack, you have Max Healthcare, one of the top losers there on Nifty 50 as well. And you have Aurobindo Pharma as well, which is reacting negatively on earnings. So these are few of the names that are coming to the limelight right now. Amar, with the way markets have opened up, as Neeraj was just pointing out, that we will take one question with you with regards to your top pick. I'm sure you've got enough time to think about it. Which one would that be?
I would say I would go for Wipro because what I would say, what we've seen is that the stock has corrected significantly, and it's more of a reverse trend strategy wherein the stock has formed a very strong base. Upside, we could see towards, I would say, 220 to 25. Currently, it's around the 200 odd level. So it's a lesser riskier option, and the markets also seem to be finding some sort of strong support there. So I would say this is one stock one can look at, and the stop loss needs to be below the 190 mark. So from the IT space, this is one stock one can look at.
Okay, so Wipro is what you're looking out for. Kush, coming to you on the charts, Honasa, I mean, 9% up move on the back of earnings. I know we spoke about it, but would you still be a buyer with the way the stock has opened up?
No, not a chance, because not just today's move. If you see, like even Parag Bhai mentioned, the stock's actually run up quite a bit. 260 ke level se jo upswing aaya hai, it's practically been a one-way rally, right? And in a market which has not done well. So definitely strength, but now it's at overheated territories. You're better off booking profits partially. And the reason I say partially is because there's a news trigger, there is, a healthy volume action right now. So you might not want to let go of the stock, but yes, definitely book it partially. Hold the rest of the quantity, with a trailing stop loss at about 365. Just a quick word here, if you recall, the pair trade that we spoke of yesterday, of long, or day before, in fact, long Bank Nifty and short Nifty IT. Is paying out even today. So, like I said, short Nifty IT is a different candidate, but yes, long on Bank Nifty, that view strengthens after the kind of opening move that we're seeing on the Bank Nifty today.
Okay, so that's the pair trade that we've been talking about over the last 2 days. Parag Bhai, I want to talk to you about Max Healthcare as well as Aurobindo Pharma. Max Healthcare, yes, the numbers have been weak and absolute reaction coming in there. How are you looking at Aurobindo Pharma? Because last time when we were talking about it, there were troubles brewing, and that was with regards to one of their plants. But here, the US business is the one which is dipped really sharply for Aurobindo. Revenues are in line. Your overall growth, because of which has remained subdued. Your views with Aurobindo?
So basically, stock has moved up now from 1150 range. Now it is 1500, and the result was not that great. It still remains a very attractive, cheap stock. But I would say that after such a big rally and a muted result, I would expect the stock to correct.
Okay, a further correction, and then would you be a buyer?
Might be 3-4%, yeah.
And would you advise buying
so,
then?
It remains I would say, PE wise, it remains an attractive stock. And so I would say that I'm not a big buyer of that stock at this, because it has rallied massively actually. So and outperformed the market also very brilliantly. So I would say that no, I'm not in a hurry to buy.
And what about a Max Healthcare?
So that I have not studied, so I will not be able to give my view.
The interesting thing for Max is that their share of oncology products in this quarter has plummeted from 25%, which is the norm, to 21%. And oncology is that high margin area, and I think which is what is showing in Max. It's a bit of an anomaly. Unfortunately, Besoy and team are not talking to media this quarter, but otherwise, it would have been lovely to understand what suddenly happened in the quarter for such a dramatic shift down and what could happen ahead. Amar, quick opening thoughts, maybe a word on Max, and if there is a top idea that you have for us.
I would say, Max did witness some sort of rally from almost 900 to 1100, but it seems that the rally has fizzled out right now, because on the upside, till the time it doesn't breach the high of yesterday, that was 1100 plus. So I would say that the stock could go in for consolidation. And as far as some other stock which one can look at, so I would say BHEL is one stock which continues to be very strong. It has witnessed a significant rally up by almost 70% this quarter itself, but the trend is very strong on some of the time frames, longer term time frames. It is in for consolidation. So I would say any pullback in this stock is a buying opportunity. The stock has got very strong support around the 390 odd levels. Whereas on the upside, if the stock sustains around the 415, 420 level, then it is headed higher towards the 445, 450 odd level. So this is one stock one can keep a close watch on. But the risk-reward ratio at the current levels might not be that favorable.
Yeah, I mean, it's had a bit of a rally, you have to admit, BHEL, really. So has had a really strong show. The question only is, can it do more, or will it succumb to some bit of selling? Well, remains to be seen. Kush Bora, is there a trade in Varun Beverages, and is this 2%, 2.5% giving you an opportunity, or would you say, no, let it cross a particular level?
No, in fact, Neeraj, it's crossed that particular level. Any gain from here, especially those 1-2% moves, are only strengthening the up move. For the last 5 weeks, it's crossed at 475, 480. long-term falling trend line resistance. So this is actually a very positive trade, a positive move for Varun Beverages. So like we mentioned before, this has to be a positional bet. You can keep your stop losses around 475, 480, that resistance zone, now support. On the way up, it has a potential to go to about 600 levels, maybe just under. But this is a good change of track for Varun Beverages. The tides turn for the better. I would remain constructive on Varun Beverages.
Just looking at a few other movers this morning, and what comes to mind is what fertilizer stocks are doing. And it's not just RCF. If you look at Travancore Fertilizers, that's also showing a bit of action over there. You're seeing a JSW Infra not doing too badly this morning. So you're seeing a good set of, I think, mid-cap stocks also moving along. Amar, what are you spotting as a top favorite this morning after the first few minutes of the opening session?
Yeah, I would say that if I look at some of the stocks in the pharma space also, they look promising. So this is one stock. Aurobindo Pharma, right now we are witnessing some sort of correction there. But any pullback is an opportunity for buying. It's currently on the 1490 levels. So I would say that any pullback towards the 1460, 1470 can be a good entry point for Aurobindo Pharma from a shorter term perspective. And some of the other stocks, if I look at on the metal space, if I look at, so Tata Steel, we are seeing some sort of consolidation here, but it's approaching important support zone. So somewhere around the 200, 205 zone can be a buying opportunity for Tata Steel as well.
Trill also showing some action today, transformer and rectifiers, as is Paytm because of the block deal. Amar, is there a buy call on Paytm at all?
So if I look at Paytm, see, Paytm is more or less in for consolidation, because what we are seeing in the stock is that the stock is not having any trend per se. So it's completely in a range. So till the time we don't see it breaching the 1200 mark on the upside, I would say that it's more of a range play on the downside around 1050, on the upside around 1200. So it's more of a range play. The rally has happened because if we go back almost from 900 levels, it's a rally to 1200 plus. So it's more of consolidation right now.
Okay. So three companies, Paytm, Pine Labs and JSW Cement, all three have seen a block deal, this morning. Pine Labs is up around 1%. You have JSW Cement as well, and a Paytm Cement up around, 6.5%. Let's pull up a Paytm as well and see what that one is doing in trade, 2.5% down take. Amar, anything that you like on the charts from these three?
Paytm I've already spoken, and the other stocks which you mentioned, if you could just come again once.
The other one is Pine Labs and JSW Cement.
Yeah, so if I look at, see, Pine Labs though has been in a complete downtrend. It's significantly on the lower side, so I wouldn't recommend this. And if I look at the other stock which you mentioned, JSW
Cement, Amar.
Okay, fair. Yeah. So see, this stock has rallied. JSW Cement has rallied from almost around 15. It's in a strong trend. I would say volumes have been significant yesterday. So if you go back and see the volumes which were there, now it needs to sustain, because if we look on 21st of April, it had made a high of almost 137, 138, and from there it had corrected all the way down towards 120. So effectively sustaining above the 140 level is something which is going to be very important for the stock for any meaningful upside rally. Otherwise, the rally could fizzle out if it's not able to breach the 140, 142 level consistently. That's very clear. Quick
word from Parag Bhai on JSW Cement.
So I think the company reported numbers yesterday. It is a newly listed company, from JSW Group. Par Jindal is running it. I would say, a very energetic company. Quickly scaling up to 25 million tons. Yesterday reported 915 rupees per ton EBITDA. Very interesting company. I would say very exciting potential. Of course, it has rallied. Yesterday also it was up 6%, today also 6%. But on any dip, I think a long-term investor should seriously consider.
But it's a 8% drop since listing. So whoever considered it at the initial phase is...
Yeah, I think see, JSW Group, when JSW Ports got listed, JSW Infra, it was like same, right? A company which is benefiting from the ecosystem of JSW Group. And I would say that this is at the initial phase, so I think a long-term investor should make really good money out of it.
Okay, so some options there. We're always giving you ideas here on the show. Thank you so much, Amar, Kush and Parag for joining us. Have a great weekend. But of course, the show continues and we move our focus to the corporate conversations now. Godavari Power reported a strong fourth quarter with EBITDA hitting a record high as pellet operations stabilized and operating leverage improved. Before we speak to Abhishek Agarwal, the Executive Director at Godavari Power and Ispat, Varsha joining in to set up that conversation.
Well, yes, overall a strong set of number company has seen on the back of higher sales and of course the realization, which should also be in perspective. The pellet operations normalized during Q4 FY26. The company saw higher ever quarterly EBITDA, which was recorded by the company. The Dongri mining expansion is the biggest growth driver currently. New 2 million tons pellet plant has been commissioned in December 2025 and BESS and steel projects have driven long-term growth visibility. On to the guidance. This is the highlighting point when it comes to this counter. FY27 revenue has been guided about 6,000 crore. FY27 EBITDA margin guidance has been given in between 24 to 25%. Capex guidance stand at around 1,500 to 2,000 crore and pellet utilization is expected at 80 to 90% going ahead. So overall, a good set of numbers and expecting a strong growth going forward, including their 2031 vision as well.
Abhishek Agarwal, ED of Godavari Power and Ispat Johnson, right now on the show to talk about the numbers, the outlook ahead. Remember, they have some fairly exciting and aggressive plans around the battery energy storage systems as well. Abhishek, good having you. Thanks so much for joining in. Put the quarter into perspective. Did it go exactly as per plans? Was it slightly better than what you envisaged? And how does the momentum of FY26 help you into FY27?
Good morning, everyone. So quarter four was pretty much, at the same levels as we envisaged. There was a delay in, approvals of the clearance for the mining expansion. Apart from that, the volumes were expected and a new pellet plant got commissioned. So the quarter was very good for us.
Okay, so therefore the question, there is a new pellet plant that has gotten commissioned. I'm guessing some of your best capacity comes on stream additional in FY27 as well. Tell us about the growth that the consolidated entity could see in FY27 or FY26 over FY26 and where will this growth come from?
See, the best won't be, coming in FY27. We expect to commission the operations by Q4 of FY27. So looking at the line, the technology, so we expect the volumes gonna come in from FY28 Q1 for best storage. On the top line, we have given this numbers this time because of the additional increment in pellet capacity. So we hope to achieve a pellet capacity crossing 4 million tons compared to a 3 million ton last year. So that is where the additional revenue is coming in from, and that is where the additional EBITDA will be coming from this year.
Okay. Abhishek, good morning. Hiral here. I wanted to understand Q's basis, what you've done quarterly versus the annual divergence that we've seen as well. Yes, very strong in terms of the fourth quarter, but there has been a very flattish move if you see in terms of FY26 to FY25. Are you expecting this kind of volatility to continue in FY27 as well?
See, if you talk about the markets, right, the market has been up and down. Finally, we can see the war effect in the steel market. The steel prices have almost corrected by 10% in last, few weeks. The demand is on the lower side. So we can expect the same, margins or rather the prices going up and down in the coming year as well.
To take this forward, Abhishek, you're talking about demand which is low, prices which have come down. What will this actually do to your realizations and to your margins in FY27? What are you then baking in?
See, we hope we will be able to maintain, EBITDA levels of 25% this year as well, mainly because of expansion in the Dongri mines. So that gives us an advantage over other pellet players in the market. So that will take care of the lower realization if that happens for the entire year. But again, when demand comes, when demand goes, it's a very cyclic. So we are very hopeful we should be able to achieve the same realization like last year for pellets especially.
Just want to get that clarity. When you say you want to maintain 25%, FY25 was 22%, FY26 was 23%. You are upping your margin guidance to 25% for FY27?
Yeah, we should be because of the additional production from our mines. Last year, we did about 2.8 million mining. This year, the mining should cross about 3.84 million tons. So basis that and additional production of pellet, our margin should go up this year.
Okay, so margins will go up. Would you, the top line growth, which is where growth should come in, right? I want to understand if the pellet plant has come in, etc. Do you break out from this 5,400, 5,500 kind of revenue range and move higher in FY27, or does that happen in FY28?
See, FY27, we can see an upside of about 10 to 15% at the maximum due to addition of pellet volume. But major growth on the top line will come up FY28, where a battery storage project will be in line.
Agree. So, no. So, just wanted to get this clarity because I was looking at your numbers, right? FY22, and correct me if I'm wrong here, but I can see it on the numbers. FY22, 5,400 crores. FY24, 5,400 crores. FY26, 5,381 crores, right? So, you've been in this 5,400 range for 5 years now. If you grow 10-15%, you cross the 6,000 revenue mark in FY27. You think you can do that?
Yes, very much.
Okay.
Pretty much we'll do that.
And then when you say that the higher growth will come in FY27, what is a possible number that you think you can reach on the revenue front in FY27?
So in FY28...
FY28, excuse me.
Yeah. So battery storage will be, live. Our CRM complex will go live. So in FY28, we can see the revenue crossing 10,000 crores for sure.
So how much? Sorry?
10,000 crores top line.
You saying that from 6,000 or 6,200 or 6,500 crores, whatever number you clock in FY27, you will grow nearly 50% in FY28.
Yeah, there's a reason behind it. So if you see today, the market pricing for a 5 megawatt battery storage container is about 4.5 crores. So even if you do a 5 gigawatt first phase, first line in the first year, so you multiply 5 gigawatt into about almost 4 crores. So straight away a 3,000 crores top line you get from there. So we are very positive on the battery storage size, and that is where the major revenue is going to come in FY28.
Does that take your, and I believe you will probably still maintain 25% margins? You will?
No. Margins going to go down overall because the margins in, I think it's going to go down below 20%. If you look at the overall picture of Godavari, it will go down below 20%.
Okay, but at 20% too, you will probably do an operating profit which could be about 2,000 crores in FY28.
Yes, very correct. We should be able to do it if the market sustains like this.
And any fundraising plans for any of these executions?
See, so for the battery storage, we have already, informed everybody we'll be doing a 1:1 debt equity ratio. So we've already invested close to about 500 crores from internal accruals. Another 250 crores will be, invested this year. And remaining, we will be, raising long-term loans from the banks for which the process has started. And apart from that, we will not be raising any funds this year to fund other projects going on.
Okay. So, I'm still thinking about, Abhishek, the 10,000 number, the operating profit number that you'll get, and the pressure that it could come in terms of margins. You're talking about 20%, right? What does it do to your return ratios? What are you projecting there?
See, I am very hopeful. The margin is definitely going to go down because it's a very small margin EBITDA business. The battery storage, you can expect about 7 to 8% on an annual basis. So the top line will definitely go up almost 40-50%. So that will eventually in the longer term shrinks our margin. But on our return to ratio, I think maximum 2 to 3 years on the investment of battery storage.
Okay. So 2 to 3 years is what we should be watching out for on the best business, as we call it. But thank you, Abhishek, so much for joining in. We'll all be looking forward for the company to deliver this kind of performance as well. So that's the management of Godavari Power. The stock, though under pressure today, down almost 2% as we speak. But moving on, Aurionpro, the company has been sharpening its global fintech ambitions with the largest ever US order deal win that they've got. $33 million engagement that has been focused on payments, cloud, and AI-led technology solutions. Now, before we chat with the management on the company's growth plans, Puneet joins us with more details on the order win. Puneet, what does this order win actually mean for the company, according to you?
Well, thank you for that. As you rightly said, $33 million order win, one of the largest in the company's history. And specifically, this will be a 3-year engagement with one of the leading fintech platforms in the United States. They've also mentioned that it marks the company's expansion and the existing relationship is taken forward with this particular customer as well. When you also look at the terms, just a couple of key highlights. They've mentioned that they will deliver proprietary software as well as advanced technological solutions for this one, and starts FY27 well on this note, because the company, in just the last engagement with Mr. Rai post Q4, had mentioned that they wanted to grow 30% in the last year, but ended up with a lower growth for that because of market conditions. Still a 20% growth was reported. So FY27, those will be some of the key numbers to watch with the 1800 crore order book that they have. So it's an exciting time within these particular orders getting added in the Q1 itself.
Okay, Puneet, thank you for that. Let me go across to Ashish Rai, Group CEO at Orion Pro. Thank you so much, Ashish Rai, for joining us. Great to speak with you as always. Let's start by talking about this fintech engagement. This 33 million USD fintech engagement is the largest one for you in the US market, at least. What is the significance?
Hi, lots of significance. First of all, thank you for having me and good morning. Look, I think we mentioned this when the last time we chatted, that we are trying to pivot into US and Europe, or at least double down on it. Of course, we've had some slowdown around Middle East with the war and all. So I think this really is quite significant for us in terms of, one, meeting the objective of expansion in the US, also sort of de-risking some of the Q4 effect that we had around Middle East slowdown and all, right? Although we do believe Middle East will come back. So yeah, and then in terms of just the spend that we are seeing on our technology stack, especially the triggers around AI and the need to really sort of improve upon the technology stack that fintechs in the US have, I think this is a pretty significant milestone for us.
Ashish, to increase revenue breakup in the US, you're about, I think, 12% between US and Europe. Is it a strategic move there, or this is just, one opportunity which has come about? Because I think most of the revenue is still coming from Indian businesses right now.
True, yeah. So not so much Indian, but yeah, you're right. I mean, India is almost about 60% of the revenue, 40% outside, 12-13% between Europe and US. I mean, we do feel Europe and US will go up to 14-15%. I think that's the sort of plan anyway. We continue to push hard in Southeast Asia, continue to push hard in Middle East as well. So it's a function of relative growth, but I think US and Europe are both going to grow strongly.
Okay. Ashish, my question to you is, how does the revenue recognition happen on a deal like this? Because we're talking about what, $33 million over 3 years. So is it going to be equally divided over the next 3 years? Or is this a deal which will be, very heavy in terms of front loading and then gradually will taper?
No, this will more or less be equal. I think, there may be a little bit here or there, but largely that will be equal.
Around 90 to 95 odd crores on an annual basis is what this will do in terms of financials?
Yes. Yeah.
Okay. And what is the kind of margin profile a deal like this would actually have? Because you're talking about cloud, DevOps, and AI support. So the margin profile on a deal like this?
So a fair component of something like this is our own IP and our own product sort of going in, right? Because we are a provider of technology to a number of fintechs in the US, which is essentially payment technology, which we are quite good at. As you know, we also are a payment aggregator in India. We've got a payment stack which is very mature. So I think the margin profile would be pretty good. So we don't give project level margins, but I would say 5 or 6 points above the enterprise level, I would think.
Okay. Ashish, for the longest time that we've spoken to Orion Pro, good morning, this is Neeraj here. The belief has been that there is a long-term compounded annual growth rate story here, which will last for the better part of this decade, maybe even longer, and the numbers could be fairly high. And I'm not talking about mid-teens or high teens, I'm talking about numbers higher than that. At least that's what I remember of one conversation maybe a year back. I'm wondering if within this changed landscape in the world, not just geopolitically, but because of AI as well, do you reckon that that kind of growth story still stays, both the duration and the quantum?
Hi, Neeraj. Yeah, so look, we've been talking about this. Over the last 5 years, we've CAGR'd at 30% and change. Right? I think that's a pretty, so I don't think there's any player in the industry who's CAGR'd at that rate. I feel good about where the growth rates are going to be in the future. We do feel this is our decade, and we'll try to make the next one else as well, right? I think the bottom line is this: you're going after spaces which are very large in terms of demand, right? Whether that's the banking software space and AI space where the demand is really shooting up, whether that's the data center space in India, whether that's closed loop to open loop transformations on the transit side. Each of these is a very large and expanding market. I think the software and the agentic side coming together really puts TAM at a very different level for someone like us who's very focused on AI and agentic execution and the building the next generation of banking software, right? So banking software, give or take, is a $400 billion IT spend, banking IT. Banking operations is probably a 4 trillion to 5 trillion spend, and the TAM essentially brings the two together, right? What is it? Time will tell, but we feel very good about the opportunity. Same thing with data center transit. So I think one is that is very strong. Second is we're expanding our stack significantly over the last year, and this year we are really building out AI native software stack, which is designed for tomorrow. We launched Fintra a month back. We're launching a new product very soon, and we will build out AI native software across every domain we are in and net new domains. We continue to go. So we are atoms to bit player, as you know, so we continue to go around hardware as well and build out a lot of Make in India IP around hardware. So you are a full hardware to software player building products which are in expanding markets, right? So I would think the growth momentum should be strong.
I'm just, Ashish, with all of this, I'm just wondering, what are your revenue growth targets? Because FY26 at the start, we talked about a 30% target. You ended at about 20, robust, no doubt, but at 20. What is your FY27 growth outlook? And you think the 20% target can be matched with the situation we're seeing right now?
Yeah, so look, I'm not specifically assigning any targets. And look, I think I was very clear and transparent that earlier. I think there is too much uncertainty around some of our markets right now. Middle East especially is we don't know. We do see some action coming back, but Q4, I think we were affected quite badly with especially on the banking side, the growth ambitions we had. And I think we want to be watchful. We do feel if your outlook was a medium to long-term outlook, as I would recommend, outlook always should be, I feel very good about where the growth would be, right? Over the short term, I don't want to hazard a guess.
Okay. Ashish, a question I have for you is to take cues from NVIDIA earnings and the commentary that has come in from there. I know there is no direct impact, but sentimentally it's interesting to understand what happens to Indian IT players as well. You know, they've actually highlighted that their upcoming chips are actually flowing directly into your regional AI, native data centers and sovereign tech systems. Now, if you have to look at something like this, if I'm not mistaken, Aurionpro also in March 2026 backed the largest ever data center order, right? What is that telling you with regards to the scope and the expansion that you could see in terms of the boost that the high growth data center vertical could get?
Yeah, so look, I would say the growth is in the future. I think we are all, I think, surprised by the strong growth we've had in the data center space in India. But I would say that's nothing compared to what it would be over the next 4 or 5 years. There is a lot of demand, especially on the inference compute, right? Because if you look at it, a lot of the compute got built out, especially in the Western world around training and all, and even that is expanding. But there is a significant demand for inference compute closer to where the customer is, which is India. You look at any frontier lab, the largest customer base eventually is going to be in India. And I think that means there's a huge latent demand around compute. There's obviously, India has always been undercapacitized, even on the traditional side, right? So all those drivers together and concrete plans that a lot of hyperscalers and players have around building it up, I would say the next several years would be very, very strong uptake in terms of capacity that gets built up in India. Of course, there's a lot of connected components to it, power, land, compute, the inside. But I think we feel from a demand standpoint, we're in a very strong place.
Ashish, great speaking with you. Thank you for coming in and giving us all the details of what your outlook is and, of course, this new big US deal. Best of luck.
Thank you.
Okay, let's talk a bit about Ola Electric. It plans to transition its entire vehicle portfolio to internally manufactured
battery cells. As per the chairman and managing director Bhavish Agarwal, he said this in a shareholder letter that the company plans to scale both electric mobility and battery manufacturing businesses. Now, the announcement comes after quite a painful quarter for the company, with revenues dropping sharply. Puneet, does this kind of an announcement make things any better from a shareholder perspective?
Well, it is improvement from the last year itself in terms of numbers, but as you rightly said, it's been a washout year for the company. Volumes down 40-45%, revenues down 50% as well, and hence the commentary for FY27 becomes very crucial. Next few years, of course, they feel that this will be defined by mobility shift from ICE to EV, as well as energy moving from imported fuels to locally made batteries, and they want to be a key winner in this segment. The other aspect was on what they've said on cash flow, because becomes very important as well, because consolidated cash flow was 91 crores, was the first positive cash flow conversion in Q4 for the company. But the consolidated cash flow for the year, while it improved, it was still negative 775 crores. So there's still a lot of work to be done in terms of the cash flow management for the company, because they'll either have to dilute equity or will have to take debt to fund their expenses as well. Free cash flow improved from 3,300 crores, which was a negative number, to negative 1,497 crores in year as well. It's something to watch. They gave guidance for Q1, 40 to 45,000 units, which will be roughly around 15,000 a month. And while still lower to competition, it's an improvement from the company's 5,000 they did in February. And the second one is on revenue, expected around 550 to 600 crores for Q1. So those are some of the key numbers to watch. I think execution will be very crucial for them.
Okay. I mean, that's a standard line. Execution is always key when any big plans are made. Thank you so much for that, Puneet. We'll take a very quick break. Before we go into the break, just want to mark that the markets have shown a spot of improvement led by banks. Let's pull up the Nifty the Bank Nifty index. You can pull up the intraday. Look at the Nifty 50, also looking decent, but it's the banks that are showing some signs of improvement. Nothing massive, but at least some strength coming into the markets. Of course, the play continues to be stock specific more than anything else. We'll take a short break, but on the other side, two important stories that we're talking about. Abhijit Divanji is going to be joining us to speak about, first, the RBI board meet today, where a bumper dividend could be announced, and how India should defend the rupee. All of that when we return.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in Specialized Investment Fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
All of you work for the same organization, and that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, you were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of
All right, welcome back. Let's talk about the rupee. Amidst the weakness in the rupee, India could be headed for another massive payout from the Reserve Bank of India. Sources are telling NDTV Profit that the RBI board will meet today. Possibly 10 o'clock is when that meeting starts, and consider its dividend payout to the centre for FY26. Piyush joining us live from outside the Reserve Bank of India. Piyush, what's expected in that meeting? What are you hearing?
Good morning, Tamanna. That is right. The RBI board meeting is just about to start, and what we are hearing from our sources is that the RBI's board could approve around 2.7 to 3.5 lakh crore of massive dividend payout to the centre for FY26. This will help the government fiscal position in a big manner. The dividends over the last 3 financial years have actually risen by over 3x. Now the dividend is likely to be aided by the fall in Indian rupee, which has helped expand the balance sheet for RBI to provide this sort of a figure to the government in terms of the surplus. Further, the RBI's interventions in the forex market, them actually the currency printing cost, the money that they make out of it. There are various levers through which the RBI has actually made a surplus in the last financial year. And there is also one interesting aspect to this, Tamanna, that if the RBI had last year set the contingency buffer at 7.5%, if they decide to lower it to say 6.5 to 7% also, there could be a likelihood that the dividend could increase to the government in comparison to the last year. These are some of the things that we are picking up right now, and of course we will track the upcoming dividend announcement. Back to you.
No. Back to us and back to you, Piyush, because the other key piece is the Indian rupee and how the government would take measures to defend the rupee. You were learning a few things. Tell us about it.
Absolutely. We have reported yesterday as well the various steps that the RBI is considering to arrest the fall in Indian rupee, which almost touched 97 level on day before yesterday. And the RBI's interventions in the INR spot market actually helped it to recover by around 70-80 paise yesterday. We understand from our sources that the RBI has likely sold around $2 billion $2 billion US over the last 1 week, and over the last 1 year around $15 billion to help curb the fall in rupee. Specifically, the RBI is also considering, launching the FCNR deposits. The last time this was done was around 13 years back in 2013. Further, the RBI in consultation with the government is also considering whether government should issue sovereign dollar bonds. There are various macro measures as well in terms of easing of ECB guidelines. There are n number of things that the RBI is considering to arrest the fall in Indian rupee, and active forex market intervention is what it is doing presently to ensure. And dollar buy swaps, we did see this week RBI announcing $5 billion INR buy sell swaps, and that more of such swaps are likely to come to stem the fall in Indian rupee. This is what we are picking up from our sources.
Yeah, completely, Piyush. And I know some speculation today that RBI has ruled out any rate hikes or mid-cycle rate hikes, but I think it's a little early and a little dangerous to sort of imagine what and what will not happen in the next few days. We'll have to see how it goes. Thank you so much for that. We should pull up where the rupee is before we start this conversation, because that's the main focus of the discussion. Gaurav Sengupta, Chief Economist, IDFC First Bank, with us this morning. So is Abizar Diwanji, founder at Neostrat Advisors. The rupee looking, better than before, I suppose, because RBI is pulling out the big guns. Welcome to both of you. Abizar, we're talking about two things in this conversation. One is, of course, the dividend payout that's expected today and how the government and the RBI can together come in and defend the rupee. Should they be defending the rupee? I'm going to start with the first part. How key do you think is this figure, this RBI dividend payout figure that we'll be seeing today?
So dividend payout figure in RBI, frankly, pre-2024 was sub a lakh crores. It's now 2.5 lakh crores, going up to expected 3 lakh crores this time. In a way, the RBI dividend actually fills the fiscal deficit of the Indian economy to some extent. It used to be 0.5 lakh crores in 2022, 2023. And now it's become expected to be around 3 lakh crores, which is like, 6x jump. In a way that is useful, because if you look at it with exports down, with a balance of payment issues in the country, with the fact that we have to match our books, the government needs to make sure that they pull out cash from everywhere. So on the one hand, while a deteriorating global economy has led to a fiscal deficit gap within our economy, what the government tends to do is that on the RBI side, you end up making a gain, because what really happens is that as the US dollar expands, the reserves expand, and as and when RBI sells, it ends up selling at a gain, which makes it a profit, and that profit then can be dividend to the government. So in a sense, I think it's capturing the other end of the curve where there is a level of positivity and bringing that into the fiscal calculation. So I think that's a positive, and I think it's expected to be around 3 lakh crores this time.
I mean, 3 lakh crores. I mean, what if there is a positive surprise or a surprise on that front? I don't mean positive or negative, frankly, because it depends which lens you're looking at it from. But for the government to get this money will be absolutely crucial at a time like this. Gaura, any thoughts on this subject? Abhizar outlined it very beautifully. You want to add to this? If the number is circa 3 lakh crores, what does it do to the multiple things that the government may want to do, including take steps on various geopolitical related risk measures and to mitigate them?
It will be impactful. So in the union budget, they have budgeted around 2.7 trillion as the RBI dividend. If anything above that will be very useful, because FY27, there is fiscal slippage risk because of the West Asia crisis. You will have higher subsidy payments, fertilizer, LPG. There's also the 10 rupee per litre excise duty cut will cost the government over a 12-month period around 1 trillion rupees. So as per our estimates, the fiscal slippage risk from the revenue foregone side, as well as the higher expenditure because of the West Asia crisis, can be around 1.6 trillion or 0.4% of GDP. So if the RBI dividend significantly exceeds 2.7 trillion, that will reduce some of the fiscal slippage. But to one point I just want to highlight is, to get a higher dividend, RBI will have to reduce the risk buffer. The risk buffer right now is 7.5% of the balance sheet, and the balance sheet is expanded by 20% in FY26. So automatically you will need a higher provisioning number if you want to still get that 7.5%. So if the dividend is, let's say, a 3.5 trillion, which the market is expecting, that means that they would have to reduce that risk buffer, and they do have leeway. The required risk buffer is somewhere between 4.5% of the balance sheet to 7.5% of the balance sheet. But they'll have to reduce the risk buffer, then only can they get that 3.5 trillion in terms of dividend.
I think important to just get some context for our viewers on the use of this risk buffer, how crucial this risk buffer is, and the impact of reducing the risk buffer. Though, as you say, they have a range, so there's no red line being crossed. But nevertheless, why is it important?
The risk buffer is just one context. RBI as a central bank, among global central bank, is the most well-capitalized central bank in the world. It has the highest level of, if you see the capital ratios. For example, many developed central banks have actually negative capital ratios. So RBI is on the highest side. So from that perspective, reducing the risk buffer from, let's say, a 7.5 to a 6.5 is not an issue. The reason why RBI has this wide range that they did last year itself, between 4.5 to 7.5, is they also realize, as your other panelists mentioned, that over the last few years, the dividend itself is becoming a large revenue delta for the fisc. So they wanted to have the ability to smoothen the dividend payment. So for example, if you had a normal non-West Asia year and RBI is able to generate a massive dividend, they wanted the power to increase the risk buffer and then smoothen the payment to the government. And conversely, if let's say they couldn't earn as much, they could smoothen it by reducing the risk buffer. So the risk buffer, that's 4.5 to 7.5% of the balance sheet, it's more like a smoothing coefficient to ensure that the impact on the central government fiscal, the revenue, the delta, there's not too much fluctuation in the fiscal maths. So that is the main criteria. Apart from the fact, ensuring that if you have, let's say, revaluation loss on FX holding, bond holdings, they have that risk buffer that they can debit that account and then credit to those revaluation accounts. So these are the two functions basically of the risk buffer.
Thank you. I thought that was important to lay that out, Gaura. Abhiza, just want to come to you on, the other part of our story that we're covering, what the government could do. And even as we're speaking, Bloomberg is reporting, quoting traders, that RBI is coming into sell forex, defending the rupee. Now, that can be step one. You can't continue doing that, right? And to close off the fiscal deficit gaps, okay, the dividend can be a little higher, but there's a lot more that we need to do right now. What are some of the tools in the toolbox available?
So one is that, as Gaura also said, that we have a resilient central bank. And the central bank can actually keep providing a lot more short-term benefit, whether it is selling of currency, swaps, providing dividend, reducing risk buffers, all those things. I think we have enough buffer within our central bank system, including the reserves levels that we have, to make sure that in the short run we can product. But we should focus on the larger long term, which is where the government fiscal policy needs to focus on. See, what is our key issues? Oil revenues, around $100 billion bill annually, which is expected to go up to $150 billion maybe because of the oil price increase. So that is a key consideration. We need to make sure that we have policies around making sure that our oil consumption is better. And very frankly, austerity measures are short term, but longer term measures in terms of better roads, better public transports, etc., will need to be built. And I think that we have the buffer for 2-3 years to actually do that, but that focus is not there as yet. There is a focus on infrastructure, but still the clogging is too high. So that's on the oil. The other thing is clearly on the FDI, and this is not a war issue. If you look at our FDI, FPI flows, our FPI flows, I can still understand that, in times of distress, money will move out to safer havens like US dollar and, more safer currencies. So whether our markets correct or don't correct, I think money will still flow out to some extent. And that, I think, will happen in the short run. The FPI flows, we have seen being continuously negative, 2.2 lakh crores this year is going to happen. On the other side, the FDI flows have been down since 2023. And that, I think, is a worry, because it come to 2024, it was like very minuscule. Net FDI flows are literally zero. Now that has picked up a little bit in FY26, around $7.6 billion, $7.5 billion. But that is a short-term measure. That measure needs to continue more. So I think a larger focus on government needs to be on FDI, oil conservation, and to a much larger extent on making sure that the doing of business in India is cured. In the meantime, I think RBI will make sure that short term is taken care of.
Basically, Abhiza, we're talking of short-term measures. Longer term, it's more of a structural, reset that needs to happen as well, right? I agree with you. Two questions, Gaura, I have for you. One is on the domestic liquidity inflow. Now, when the center is going to really spend that 2.7 to 3.5 lakh crores, a huge amount of, say, primary liquidity that will get flushed into the system, right? How is the RBI then going to manage the inflationary aspect of it with this kind of liquidity infusion that happens? And this comes in without really aggressively tightening the monetary stance anywhere else. How are you looking at that aspect?
It's a temporary liquidity infusion. So the money will be credited today to the government account. It'll take around 2 months for the government to spend that money if you see the past expenditure pattern. Right now, government cash surplus is actually on the lower side. We are presuming it's because of higher expenditure due to the West Asia crisis, and also the fact that the revenue has got hit because of all the duty cuts that they have undertaken to protect the consumer. So just to give you a context, the government cash surplus, which ended the year at maybe around 2.5 trillion in March 2026, has gone down to around less than $1 trillion currently. And that sort of sharp fall over a short period of span just explains that in the kind of expenditure that the government might be taking, plus the revenue loss. So this infusion is very necessary from a fiscal perspective. From a liquidity perspective, it will take the government at least a month to spend it. There will be temporary pickup in banking system liquidity, which can be easily managed with RBI doing VRRs, where it temporarily impounds the liquidity. They can take temporary measures to impound the liquidity. But the reason why I say it has to be temporary, because even after this dividend infusion, in the second half of FY27, RBI will need to infuse liquidity, because since the last year, we've seen a very strong pickup in currency withdrawal from the banking system. Last year, 4.5 trillion was withdrawn from the banking system as cash. Also, given the balance of payment, which has been discussed, is expected to be larger than last year. So last year, the banking system lost around 3.5 trillion due to the fact that RBI had to sell dollars to meet the dollar demand of the economy. This year, that selling could be even larger given the West Asia crisis. The fact that your current account deficit alone could be closer to, let's say, a $95 billion mark, which is much higher than what it was last year. Plus, you have the capital account issue, which is a pre-West Asia problem. So this will be a temporary boost to liquidity. RBI can use temporary measures to impound the liquidity. In the second half, RBI will have to infuse liquidity to ensure that the system liquidity doesn't become very tight. And the question on the stance of the policy has been delinked from liquidity condition. The neutral policy stance is mainly relating to the possible trajectory of policy rate. It basically says that there is an equal probability of RBI staying on pause, or RBI hiking rates, or RBI cutting rates. It has been delinked from liquidity. But overall, I think what RBI will try to do, they'll make sure that the weighted average call rate remains near the repo rate, which is exactly what they would require in all circumstances, in all possible monetary policy stances, basically.
Right.
So it can be easily dealt with, since it will only be a temporary liquidity
So basically,
injection.
correct. So the liquidity injection will be short term. Government measures in terms of defending the rupee, as Abhisar was mentioning, is going to be short term. But longer term, a structural shift is what will be needed. Thank you, Gaura. Thank you, Abhisar, so much for joining in. Always a pleasure to speak to both of you and get your insights as well. But moving on from the macros to markets, Pankaj Tibrawal, founder and CIO at Ikigai Asset Manager, joins in. Pankaj, morning and welcome to the show. This is Hiral on the side. Last couple of trading sessions, I would say we've just been playing a tug of war. Nifty literally has not been moving out of that range. It's 100 points range at the max. With the way earnings have panned out right now, FY27 expectation is, yes, there could be an improvement. At least lower double digits is what the street is looking at. However, there are concerns as to what West Asia crisis could do in terms of margins, supply chain issues. There is no clarity in the short term. At this point in time, how are you looking at the entire setup?
Good morning. I think we are towards the fag end of the earnings season. So let's first decode the earnings season and in terms of number of companies reported. So till 2 days back, 360 companies out of the top 500 companies have reported their results. And on an overall basis, it's quite an encouraging results, about 16%. But when I dissect it between large cap, mid cap, and small cap, the picture is very different. Large caps have delivered about 10% earnings growth. Mid caps have delivered 53% earnings growth. And small caps have delivered about 20% earnings growth. And this is the third consecutive quarter in a row that we are seeing that the broader market space has offered better earnings growth than large caps. So the bottom-up approach remains. And in the mid cap, I think you need to make some adjustments because OMCs and a couple of telecom operators, which are part of it, saw huge swings in the profitability. But even if you normalize, in the mid-20s is the earnings growth for mid caps, which is quite healthy. However, one caveat which I would like to give is that the first quarter, which we are in today right now, probably could be a very disappointing quarter because the kind of commentaries we are hearing, people are talking about margin pressures, supply chain issues still remain, and in terms of demand, was quite volatile in the month of April for a lot of sectors. So I think first quarter could see a lot of disruption in terms of earnings because the full pass-through of the raw material and price hikes may not take place. And hence there could be some gross margin and EBITDA margin problems. But if you slightly look into the next few quarters, our basic thesis is that the world before 28th of Feb and the world after 28th of Feb are two different worlds. And the inflation scenario is going to sustain itself going into the next foreseeable future. If that's the case, I think after a long time, your nominal GDP growth will move to 10.5%, 11%. And the corporate India top line growth will also move to double digits, which has not been the case for almost last 12 quarters. And what it means is, even though there is a margin pressure on the gross margin side, fixed costs won't rise at the same proportion as your sales. And hence, you could see EBITDA margins being better than what we have seen in the past. So broadly, I think that will be the case. And in the first leg, our view is the B2B businesses, the upstream businesses will do far better than the B2C businesses because they can reprice their product pricing very fast compared to a B2C. And once the B2B pricing is done, which includes sectors like chemicals, auto banks, some of the other B2B defense players. On the B2C side, we believe that once the first leg is over and raw material cost starts to come down, most of these brands don't pass back the price decline to the consumer, and hence they see margin expansion permanently for a long time. So I think the next leg will be B2C, but the first leg could be B2B. And in the June quarter, there could be dispersion across sectors you could see in terms of earnings growth. So it will be a very tricky market. And I think bottom-up stock picking is getting rewarded. You are seeing across mid and small caps, so many companies delivering very strong results and markets rewarding them. So our sense is that Nifty may be in a range-bound manner, and bottom-up stock picking is the way to go about it. And I think this will be the market where men's versus boys will be separated.
Very interesting. Very interesting. And by the way, guys, I'm told that Pankaj Tibrewal these days is on the front row of so many con calls wherein he's the guy who's asking the first question to managements. It happened in an auto ancillary name, it happened in an EMS name, and probably many more. So Pankaj, you are right out there catching the bull by the horns. You made this very interesting point about there being this dispersion, and you will get to see some sectors do well in the June quarter, some sectors will not. Where is it that you think the market is mispricing this? Either side.
So when I look at the analyst estimates for the next few quarters, I think one thing which the street is missing is the top line growth assumptions. In many cases, the realization increase itself is between 10 to 20%. And add to that the volume growth, your value growth will be far in excess of your volume growth. But when I look at the assumptions of many analysts across sectors, they are still not penciling in that kind of a revenue growth. So if the product realizations stay elevated in many sectors, like, for example, chemicals we are talking about, steel we are talking about. Steel, I think the street is far behind in terms of their estimates for the next 2-3 quarters, which can surprise you. We are talking about the consumer discretionary names. Yesterday, one of the innerwear companies reported after 6 quarters, they reported double-digit revenue growth, and they are very confident about that sustaining. So I think what street is missing is that there has been price hikes, and add to that some volume growth, your top line growth will be far higher than what you're assuming. And that means a lot of that operating leverage at the EBITDA level will start flowing in. I think that's where the disconnect, at least I am seeing in many companies. We were seeing a lot of PVC pipe makers. Their product pricing has gone up by 10 to 15%. But when you look at the assumptions by the street, the top line growth is still about 12 to 15% only. Companies are saying we will grow our volumes by 12 to 14%. So when you add those things together, I think there's a disconnect between top line growth, what the street is assuming, and what our assumption in many of the sectors and companies are.
Pankaj, hi, good morning. Tamanna here. When we last spoke, you talked about how you were 99.5% invested in the markets at the start of this crisis. And at that moment in time, it seemed like, the wisest call. Since, if you look at what's happened since and where we're at, with rupee becoming a real pain point for the Indian equity markets as well as from a foreign perspective or a foreign investor's perspective, would you re-look at that policy? Is this the time to be more careful or to stay fully invested?
So, Tamanna, if you look at the rupee, I have a very different take. Rupee is not only because of crude and balance of payment or current account problem, because your current account is moving from 30 to $35 billion to say $90 billion. So $60 billion incremental won't create such a pressure on rupee, which we have seen over the last 4 5 months. I think the bigger problem has been that importers, which were complacent of not hedging themselves, have suddenly rushed and panicked, and you saw a significant covering on by the importers side. On the other side, because the rupee was depreciating, exporters have been relaxed and they are not supplying dollars incrementally, and they are not hedging themselves. So you have seen a very sharp disconnect on that side, which has led to rupee depreciation. Our view is that rupee is undervalued significantly right now, and I see the opportunities which has come along the way. Our sense is that when you look at the yuan versus rupee, yuan has appreciated around 22% against rupee. And mind you, from 2013 to 2025, yuan rupee trade was in a very narrow range. And in the last 5 months, 6 months, yuan has appreciated 22%. What it means is that when we are meeting companies which are in two parts, one is the export segment. The companies are saying that we are getting inquiries from country we never thought about, because they are the source supplier for Chinese, and we are far more competitive when you look at from a currency perspective now. So exports, in my view, with the lag can start picking up significantly. And in areas where Chinese were dominant and Indians didn't have that share, that's an opportunity I see. The second area where I see is that in many sectors, Chinese competition was very harsh for the last 3 4 years. And three things have happened. One is the currency, which I talked about. Logistic costs have doubled. And the third, the export rebate by Chinese government has been withdrawn. All three things combined, if you look at slightly from a medium-term perspective, many of the domestic sectors have a far better footing in terms of growth, because Chinese competition at the sidelines will be abated. Let me give you a small example. We were doing some channel checks on the PVC pipe manufacturing. In the month of April, we saw the PVC import from China, which is through carbide route and others, our estimation about 290,000 tons, and which created a pressure on PVC pricing. And these shipments were booked in the month of March. But now in the month of May, that number has come down to 105,000 tons only, because Chinese rebates have been withdrawn and yuan has appreciated significantly, and the importer traders are running a huge forex loss. So I think these dynamics will play across differently in many sectors, and I think people who can go deep dive, work hard, and pick out those sectors and stocks, I think will be the winners over the next 6-12 months. On a broader basis, index may remain range bound, but I think it's a bottom-up stock pickers market, I again repeat.
So, where is that, the opportunities you've described, Pankaj, just as an argument, depends now on Indian exporters taking up this chance that they have got. What is the front and center visible opportunities from for an equity investor's perspective? Because the same opportunity you're describing also came post-COVID. It's come at various times, right, for Indian exporters. So that's I would say a larger play. Hopefully it'll happen. Right now, what is the opportunity, and is there any opportunity right now?
Yeah, I mean, that's what I've been saying, Tamanna, that look at sectors where the Chinese imports was significant for the last 2-3 years. On the margin, they have started to come down, which means that the pricing power with the domestic guys increases. And then that's a very, very heartening thing to see. We saw some of the auto and precision engineering companies reporting very strong numbers, and their commentary for the next foreseeable future also looks to be very strong. And they are seeing opportunities which they have never seen in terms of supply chain in the last 5 years. So the point which I'm trying to say is that in this market, you can be negative. There are various macro headwinds, West Asia crisis, so much of uncertainty. But in this crisis, the idea should be to look out for opportunities where market share gains are happening. And let me tell you, in an inflationary situation, we have seen in the past cycles also, the market share tends to move from unorganized smaller players to the leaders of the sector. And you go into con calls right now across sectors which are leaders, you will see that commentary coming out. In the wood panel space, a couple of weeks back, one of the wood panel companies said that we have seen market share shift from unorganized to organized. You saw that in ceramic tiles, that Morbi, which was largely unorganized, had started to see problems and market share shifted to the top 2-3 guys. It may be very near term, but I think that's the trend if inflation is going to stay. Because smaller guys won't have balance sheet, they won't have cash flows, they don't have working capital credit limit. So how they will secure the raw materials, and if they don't secure the raw materials, how they will sell? So intuitively, the leaders of every sector becomes extremely strong in an inflationary environment. They will have their challenges, but the challenges when you look on a relative basis is better. And I think many of the companies will surprise us on the market share gains in this year compared to the past, which we have seen. So I'm quite okay with owning the leaders of across sectors. I think they will surprise us on the market share gains. Challenges remain on raw material, supply chain, everything. And demand destruction will also happen. But I believe that you can see the half glass full, half glass empty. I believe there are opportunities on a bottom-up basis where companies after many quarters are moving into the double-digit demand growth environment, which we have not seen for a long time. And tomorrow the war ends, suppose, and you see every day conflict in situation. Do you get that opportunity again? Answer is no. Okay. So I remain constructive. I know it's against the tide today, but I believe that bottom-up approach is the way to go in this year.
Yeah, but Pankaj, in the past also you've mentioned that geopolitical conflicts somewhere are the best time to make investments. But
yes,
when you're talking about glass half full, half empty, let's quickly talk about the FIs. Your India's underperformance versus emerging markets is close to your historical troughs, and your FPI's underweight in India is at an all-time high. If you have to look at both of these angles, do you think now is the time which is ripe where they will start coming in and that is going to be at an inflection point? We just have 60 seconds.
My view is, again, a very contra view. I think we are at the peak of pessimism as far India is concerned. And normally these are super contrarian indicators as far investments is concerned. You go to any market, nobody is willing to talk about India, only Taiwan, Korea, China, and Brazil. I think at some point of time, if the April kind of performance sustained, so after many months, India stood at 5th or 6th position among all emerging markets in terms of market performance. If it continues for another few months, trust me not, most of these FIs who are maximum underweight on India will start to look to cover their underweight. So we are at peak pessimism. I remain constructive that towards the mid of this year, FIs will relook at India from an allocation perspective. And don't forget, among ROEs and the quality of earnings, we are right at the top in terms of all emerging markets concerned. So once you see earnings growth coming in, market performance being better, I think FIs will come back. So I remain constructive that towards the second half of this year, my optimism is that FIs will revert back. And slightly we have started to see in the last few days, their momentum starting to turn positive. So I remain constructive on FIs returning back to India in the second half once growth starts to show some momentum on India market and Indian corporate earnings.
Pankaj, thank you so much for speaking with us. It's always a pleasure to have you on, and we really enjoy getting your thoughts on what's happening with Indian markets. Pankaj Tibrewal there.
Thank you.
And as we wrap the show, the great news is that markets seem to have lifted a bit and some strength coming in. About 0.5% up on the Nifty. The Bank Nifty is what is driving stocks up. You have consumer durables also doing decently today. And of course, a few defense names popping up here and there. But before we wrap up, guys, did you see that news? Thailand had opened up its country and given a lot of nations visa-free entry. To get that boom in their tourism sector. They have, as of yesterday, slashed those visa-free days, and for Indians, it's from 60 days to 30 days.
30 days, correct.
Yeah, so I don't know who's going for 60 days to Thailand, but but it's it tells you about how tourism can be a double-edged sword, isn't it?
Yeah.
I think, and that is something which I think they as a country are also trying to do in terms of austerity measures, probably.
Yeah.
That could be one of the ways to look at it.
Already a lot of pictures and stories on social media of people struggling with your petrol cans and trying to find a way to get in. So I don't know if 30 days will also help. Then you may need to block in even further. Yeah.
Maybe it's a good problem to have.
Yeah. For Indians, anyway, desh mein jao aur chutti manao.
Exactly.
So that should be easier. All right, with that, it's a wrap on India Market Open. Thank you so much for joining us. But stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
All of you work for the same organization, and that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So, what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
The news, Ayush. Since when do we do scripts? Fair point.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, today is Mahima Vajrajani. And if you haven't already, do start sending in those queries on the number that's flashing on the top of the screen, and also call us on the landline number as well. But a very quick check of how the markets are doing. It's been an interesting day of today's trading session to end this week yet again of what we've seen on the Nifty 50, where started off in the green, continuing to be so, and we are above the 23,700 mark. It's a crucial level for the index at this point of time. We continue to monitor if we can go past that 23,800 mark as well, which is a key crucial support level for the index, and then build on to those gains starting next week. But for now, we'll take that with both hands at this point of time. If you also look at the movers for the Nifty 50 individually, you are seeing some pressure on stocks like Max Health post results for the Nifty 50. So let's look at the heat map now, and that'll give you that perspective for the individual movers as well. So you're seeing that pressure on Max Health, and that's continuing to be so, down almost 6%. ITC, the expectation weren't the greatest either way in this quarter, so down almost 2%. Sun Pharma, Power Grid, as well as ONGC are some of the other losers, but largely a green screen that you're seeing. So Asian Paints Axis Bank, Shriram Finance, Geo Finance, as well as ICICI Bank are some of the other movers in the green right now. So you're seeing continuous, at least buying in certain of these names. The sectoral heat map also shows you a similar picture as of now. So pull up that one as well. In terms of the Nifty private banks, seeing some buying but not with too much rigor, while the media, healthcare, pharma index is down today. Pharma just taking a breather after being one of the torch bearers essentially over the last couple of weeks. And the advanced decline ratio, before we move on to the broader market coverage and your stock related queries as well, because yesterday was a clear day with 4:1 kind of favoring the advances as well at one point of time. Right now, very close to that. So 1500 gainers to 1000 declines right now. So 1.5 in terms of the favor for the advances as of now. But the broader market, Mahima, continues to dominate the news floor as well as the individual movers, what we are seeing today.
Yeah, and I think the factor that, you know, every day in the second half the market changes its mood is something that we'll be watching out for today as well. Because yesterday also we started at a high note, but then ended not on a very positive note, right? Nifty ended flat almost. So I think that's something that we'll be watching out for. But yesterday there was strength where broader markets were concerned. But today, the mid cap 150 and the small cap 250, let's try to pull that up and see as to where they're trading at right now. The small cap 250 just by about 0.05 odd percent, and this, the mid cap 150 is trading almost flat as we speak, and that's you know, kind of indicative of what the advanced decline ratio is also suggesting. Quickly, if I can try to pull up the BSE 500 as well and see as to what are the counters buzzing in trade there. Sheela Foam still continues to gain 7% higher. There's something like an RCF, Chemplast, Sterlite Tech doing fairly well, but on the flip side, you have Engineers India, which is down 7%. Max Health, Sun TV, Wellspun Living are some of the other names that are facing pressure. But with that, let me also welcome in our guest for the day. We're joined by Sameer Dalal of Natwarlal & Sons Stockbrokers and Somil Mehta, Head Alternate Research at Mirae Asset Sher Khan joining us now. Welcome to both of you gentlemen and a very good morning to you. I'll start by taking the first question that we have on trend. Our viewer wants to know about the technical levels with regards to where trend goes. So Somil, I'll come to you on this one. What are the charts suggesting?
Absolutely. I knew this was coming to me. Good morning to everyone. Trend has just started moving up. It has taken support at very crucial levels. Now, today's session, it is already trading about 20 and 40 daily moving average. 4 to 5 trading session back, it has taken support at 40 daily moving average and the lower Bollinger Band on the daily charts. All of these are very good signs for the stock. Now, if we talk about last, couple of months, it has broken out of an ending diagonal pattern, expanding ending diagonal pattern on the daily charts. However, the only hurdle at this point of time is 200 daily exponential moving average, which is around 4,360-70 levels. But I think my view would be positive in the short term, in the medium term, both. Now the levels. The first support in the very short term is 20 daily moving average, which is 4,173, and another support, which is the previous swing low, which is 3,980. So my view would be positive, and my first target in the short term would be 4,500, and the next target would be 4,850.
Got that view, Somil, and of course, welcome to the show. The next question coming in now. And this one's on Sagility. Raj from Hyderabad is built up quite a big of position, 18,000 shares that he's holding on the counter at 42, and asking what he should do now. Can he hold for the long term? Sameer, very good morning to you. One of those plays, niche plays, right, in the healthcare focus space, would you recommend to continue holding for the long term?
Yeah, good morning, Puneet, and good morning to all your viewers. I guess one can choose to hold on to Sagility. Look, yes, the entire IT space, and they cater to a bit of IT services for the healthcare space, is facing difficulty. But I don't think in healthcare use of AI is going to be able to be that much in the initial stages. And even if it is there, they're going to need the assisted services that companies like Sagility and all provide. So I think the company will show some positive movement when it comes to new orders, new executions, top line, bottom line growth. Just that, the stock has seen a stark run up ever since listing. I think it listed at about 24, 25, and then it's run up to almost 55, and then you've seen a slight bit of correction. but it could be a 6-month kind of a period before you actually see a major run up. So hold for the time being. If it goes below 38, you could probably add some more.
Got that view, Samir. The next question coming in now, it's on JM Financials. Lalita from Bangalore wants to know about the counter. She's bought it at 131. Somil, anything on the charts? Stock's not moving too much today and has been in that stagnant position. Anything that you can recommend for Lalita?
In the very short term, I don't see anything happening here. I'll be a little negative because it's trading below all the averages, 200, 20, 40, all the averages, making lower tops, low bottoms. So my view would be a little negative. However, my suggestion would be to stay away. On the upside, if you want to go long, the breakout level is above 149. Once it crosses above 149, I think the next level would be around 165. So wait for the breakout. At this point of time, stay away. Once it gives you a breakout, then you can go long.
Right, so that's the view on JM Financial. I think we've got our first caller for the day. Manav is calling us from Gurugram. Manav, a very good morning to you. What's your query about?
Hi, good morning to everyone. So today I have a query on some suggestions I require on solar sector. So I'm a little bit invested in the thermal sector as well as the wind energy as well. So just wanted to diversify a little, but I got little funds for in the solar sector. So I will be glad to know some few good suggestions for a longer period of time, maybe 4 years or 5 years, something like that.
Okay, all right. Manav, got your question. I'll take this up. I'm smiling so much because now Samir knows that we don't plan these queries at all. So Samir, I'll come to you on this one. Your view on the entire solar space and your pick, of course.
Yeah, so Manav, very positive on the solar space. I've been saying this. If you're a regular viewer of NDTV Profit Ask Show, you would have realized that the stock they're showing you on the screen is my top pick, Sterling and Wilson Solar in the solar energy space. I think over the next 5 to 10 years, you're going to see massive investments happening here. We need to reduce our dependence on energy from external sources. The easiest way to do it in India is wind and solar, right? We can also do thermal, but thermal takes time for setting up. It takes a 3 to 4 year lag. Solar parks can be set up in 6 to 8 months. The challenge for all of this is basically how do you distribute this transmission and distribution. So that is, if the government can start addressing that quickly, and we can get the benefits of the solar coming through, it'll be great. So Sterling and Wilson is our top pick in the space. The second one that we really like is a company called KPI Green, which does a very differentiated business model in the sense that they own a land or they rent out land from farmers or from whoever. Then they build solar parks on it for other companies who are given a fixed price, and they maintain it, execute it, get the generation, and all the credits are given to that respective company. Apart from that, they do their IP as well, meaning they set up their own solar parks and sell the power into the market. Both businesses are growing quite well. You're going to see them becoming 4 times their size when it comes to managing what they're managing. So great opportunity there. Companies like Wari are also good, but the problem with a company like Wari is that you're paying top dollar for it at this point of time versus the other two, you are paying a reasonable valuation. Wari is a fully vertically integrated player. Sadly, they've split up their EPC businesses to another company, which is called, I forget the name of the company, but Wari something only, which is trading at about $1,000. So what you get in Wari Energies is just the solar cell and the solar panel manufacturing, which is also great. But there I feel there's going to be a bit of overcapacity in the near term. Plus the US has put certain amounts of import duty. So I feel that is going to be a slow mover. But the other two, which I mentioned, I'm very positive on at this point of time.
Got the view. I think, as we're showing as well, Wari Renewables, I think Samir, the company that Samir was talking about, and didn't take us too long, just 4 questions to get the major question out of the way, at least for this week as well. But go across and take the next question now. This is coming in from, from Sayanth from Kolkata. And actually, the reason it's a very interesting question because he wants to know about Ather Energy for the long-term perspective. But Samir, I know your view that you feel it's slightly more expensive in terms of valuations, but his question is slightly more interesting. He feels that it could be running a similar play to what Eicher Motors did a few years ago. What would you recommend here? Should he wait? Should he enter? Especially that they are also getting into capacity expansion this year, and then the EV bikes come next year. So there are some plays for re-rating. But do you feel that right now the valuations capture that?
I think the valuations are more than capture that. I think that even factoring in all of that, it's trading at extremely expensive valuations. Look, we believe that the electric bike segment is something that is going to grow leaps and bounds going forward. But competition in this space is extremely stiff. So apart from companies like Ather and Ola, you also have your old two-wheeler companies, Hero, Bajaj, TVS, Eicher, all getting into this space, making bikes, making scooters. So competition is going to be very high. And given that, one misstep somewhere along the way when you're trading at these valuations, if your expansion plan falters, if there's some issues, Ola had some problems with their servicing. If something like that comes up, suddenly the stock, can nosedive, and then people are going to question why these valuations are at these levels. So from that risk reward perspective, even from a longer term, yes, you will make money, but the risk reward at this point of time is not in your favor. From that perspective, I think there are other counters you could buy. If you ask me, actually look at their traditional businesses. You want to invest in Ather indirectly, you do that through Hero MotoCorp. So not only are you getting the Hero's entire business, but you're also getting 33% of Ather because they own 30% of Ather Energy. So that might be a better way to play it where, valuations are a little better, plus the traditional business, plus the Hero electric vehicles, plus the Ather, you get all together wrapped in one. So that might be a better way to play it than just a pure all-out Ather.
Okay, all right. So that's the view coming in on, of course, Ola, Ather as well as Hero Moto. But the next caller, I think Shiva is calling us from Bengaluru. Shiva, a very good morning to you. Your query, I think, is about Cello.
Yes, ma'am. So good morning to all. So my query is about Cello. Being in a consumer durable sector, I see its financials are good, but from past few months, from the time I'm holding from last 6 months and above, and I see it's falling down. Can I understand the, long-term perspective of this, and also if I have to add anything in the near term, what would be the correct range of it?
Okay, all right. Got your question. I think I'll take this up with Somil. Somil, from its highs of around 673, it's seen a continuous fall, right? What do you suggest? Do you think the charts are still bearish, or this is the time when tides will turn?
Yeah, I think the trend is down, so I like to be with the trend. It's been struggling to even go above 40 daily exponential moving average. So there's no strength there at this point of time. Once it starts, just settling down above the averages and starts making higher top, higher bottom on the, on the higher degree time frame, weekly, monthly, quarterly charts, then probably there would be more, strength or confidence on the trend. But at this point of time, avoid. My view would be bearish. On the upside, those resistance would be around 40 daily moving average is around 415, and another resistance is around 445. Once it closes above 445 and sustains above that level, I think then the next level would be 500. So my view at this point of time is bearish, but once it starts making higher top, higher bottom and closes above the averages, then probably there could be a reversal, but at this point of time, bearish.
All right. Okay. So that's the view coming on Cello World. But, just taking a quick detour from, the stock queries, Man Industries has been in focus because its arm has gone ahead and bought 100% stake in National Pipe Company in Saudi Arabia. And to talk more about this and to understand as to what this means for company, we are now joined by Nikhil Mansukhani, the MD of Man Industries, joining us now. Nikhil, a very good morning to you, and thank you so much for taking out the time. My first question to you is that, with regards to this acquisition, it's being done roughly by about 1,000 odd crore. What is the kind of revenue, EBITDA, as well as margin accretion that you're expecting out of this in the next 2 to 3 years? And when do you expect this to be kind of meaningfully EPS accretive?
So hi, good morning, Mahima, and thank you for the opportunity to speak.
So basically, the opportunity is that we have bought a ongoing business. It's got all the API accreditations and all the approvals of Aramco and all the government bodies. In fact, we have bought it already with $120 million, approximately 1,100 crores of order book for this year. And plus forward-looking order book, we can do approximately in the next 3 to 4 years around 3,000 to 4,000 crores of top line from this particular company, and at a comfortable EBITDA around 15%. So all in all, it's a great buy for the company. It sits in perfect with the opportunity and acquisition which we got and the expansion plans of the company. And it boosts us with immediate revenue from the next quarter itself. And that will be starting to reflect in the overall balance sheet as well.
You mentioned the margins for this particular acquisition is around 15%. Is that correct?
Yes.
So then where do you expect the blending margins to go by the end of FY27 and maybe early FY28?
So I think we should be at a blended margin between 15 to 16%, which would be, more accurate to, continuously achieve that numbers.
And, NPC already supplies to Aramco as well as Qatar Petroleum, as you rightly mentioned. So what kind of cross-selling opportunities does this provide you?
So basically what happens is a lot of the business which you get in Saudi, you don't get India directly because of the duties and because of the not being present over there and not having a presence. By having this presence in Saudi, not only that we can give larger orders to Saudi, but any orders which we are not able to cater from there, we can give it to Man Industries, and that would further support the order book.
Just one last question. I think you've also spoken about adding a coating meal facility at NPC. Is that in the works? And if yes, what is the kind of capex plan and how are you going to fund it?
Yeah, so it's
we've got some audio issue, technical issue with regards to the management, but certainly the stock is not reacting much to it. In fact, it's down 1.8%, and probably the market is cautious with regards to the size of acquisition, but is going to be margin accretive for sure for the company, is what the management has said. But with that, it's time for a rapid fire round. Samir as well as Soumya, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Nalco. Our viewer wants to know as to whether this is a good bet to enter right now from a long-term perspective. Samir, your view?
No, not from a long-term perspective. Short term, 3 months, 6 months, okay, but not long.
Got the next one's IRFC, bought at 148 by a viewer, 1,000 shares. So currently sitting on a loss, Soumil. Should he continue to hold, wait for some price appreciation?
Yes, I think so. Hold on to it. In the very short term, my overall view is negative. So probably will bounce back till 110.
Okay, the next one is on Bata India. Our viewer Renu from Bengaluru has been holding this since November 2025, and 125 shares is what she has. She says she can continue to hold this for the next 2 years. Is that a good idea, Samir?
So it's one of my pain points as well. I'm holding on to it, so my suggestion is hold.
Got well. The next one's Trident. I think Samir, we've discussed this in the past, but our viewers holding shares at 30 rupees and holding for the last 3 years. Would you recommend him to continue holding or switch out right now?
I say switch out. Buy Gokul exports for my textile export business.
Okay, the next one is on Cupid. Sushila from Bellary is holding at the levels of 127. 2,557 shares is what she's holding. Soumil, on the chart, what are the targets that you're seeing?
Hold, my target should be 140.
The next question coming in now, it's on Kalyan Jewellers, bought at 452, and he's been sitting on a loss for the last 2 years, I think. Just asking Samir if he should average down because he's not in the profit, is what his question is.
Absolutely, please, it's a buy for me.
Okay, the next one is on Central Bank of India. Our viewers bought 300 shares at the levels of 37 rupees. From a 3 months perspective, continue to hold, Soumil?
Hold, definitely.
Bhuvana is bought into sale at 112, Soumil. Should she continue to hold or book out the profits because it's been a considerable good ride for her?
Keep a stop loss around 188 and hold.
Okay, PNB Housing is the next one. 100 shares bought at the levels of 480. Buy, sell or hold at the current market price. Thomas wants to know. Soumil, your view?
PNB housing, it has run up a lot. If you want to book profits in the short term, yes. But overall trend remains positive. I'm positive on the stock.
Got Emphasis bought by Shobha at 2,771. Samir, should he hold on to this counter in the mid-cap space? What would be your recommendation?
So I guess it's a hold at this point. I'm not very bullish on the entire space, but hold on to it.
Cenoris Pharma bought at the levels of 707. 50 shares is what Neha from Bengaluru is holding. Targeted stop loss for the next 3 months. Somil?
Hold.
LTM bought at 4,600 by Manoj, so he's currently sitting on a loss. Samir, they've done a $500 million acquisition today, but do you think that he should continue to hold or average down? What would you recommend?
No, I'm not recommending a buy at all. Hold on, maybe and rallies exit.
Okay, the next one is from Kameshwara Rao, who's asking about MTAR Tech. Samir, does a fresh entry right now in this counter from a long-term perspective make sense?
Don't have this one under coverage, unfortunately.
Okay.
Good. We got one on sale, but Swamil on Tata Steel as well. Shriram has bought at 111, so he's sitting on massive profits. Should he exit now?
No, hold on to it. It's a great company. Metal cycle is moving up, so I'll be very positive.
Okay, Eternal, is this the right time to enter for the next 3 years? Sanjay is asking this. Samir?
No, not yet.
The next one is coming in from Pradeep, who's a long-term investor, but he's also a senior citizen and holding to Saxsoft at 82. Samir, would you recommend him to switch out, buy a better name, or is this one okay and should he book out his profits now?
I don't know this company at all.
Swamil, anything on the charts, do you think that momentum is done? He bought it at 82.
I think it should go up till 165. My target should be 165. Keep a stop loss around 128.
Got it. Well, that is the end of the first round of the rapid fire in this edition of Ask Profit. We'll take a lot more stock-related queries on the other side with Samir. And Swamil, thanks so much for joining in and giving us your views as always on this Friday morning. But viewers, a very short break. A lot more stock-related queries on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
All of you work for the same organization, and that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, you were seeing the emergence of a first-generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So, what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaign.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either call us or WhatsApp us and send all your stock-related queries. And on this side of the show, we're also joined by Devin Mehta, who's the Managing Technical and Derivative Analyst at IDBI Capital, joining us now. Devin, a very good morning to you. The next question, in fact, that we have is on Balaji Amines. This is from our viewer who has not mentioned the name. No, he has. Rajesh Maheshwari from Indore. He's holding 85 shares at an average price of 2485 and wants a short to medium term outlook on this chemical stock. Should he stay invested or exit, Devin?
Yeah, good morning. So, if we consider the stock and the chart structure of Balaji Amines, the overall structure is good right now. We can see a golden crossover levels on the lower side. So, I think one should hold this particular counter. The strong support is placed at 1500 levels. So, I think 1500 can be the stop loss for this counter, and this counter can further move towards 1925 in short to medium term. So, I think the stock can be holded at this current levels.
Got that view. The next question coming in, and this one's on VA Tech Vabag. We'll be joined by the management today, I think at 12 o'clock in the show, so you can join in for that as well. But Samir, it's been a good set of numbers for the company as well. What would you recommend in this counter? Do you think valuations are priced in at this point of time, or could be looked at this juncture as well?
Oh yeah, results were very good. I mean, better than what I think most people were working with. Look, the water treatment, sewage treatment business in India still has a long opportunity, long way to grow. I think it's not only the India opportunity, they also have overseas exposure where, in the Middle East and all of these places, after this war ends, if any damage is done to any of these salination plants or repair work, upgradation, so whatever, there's going to be great opportunity. So today, of course, 4:30, we'll be trying to attend the management con call, but we remain constructive. Yes, valuations, I'm not saying they're super rich, but they are fairly priced. So the stock will probably be a slow mover. One can probably hold on to it. Corrections closer to 12:30, 12:50 would be a right time to buy. I think the stock was there maybe a month and a half ago. So around those levels would be a good buy.
Okay, all right. The next one that we have is on PI Industries. Our viewer, Sankar Narayanan, has been holding 30 shares at the levels of 2894 and wants to know if he can add at the current levels from a long-term perspective is what he's asking. So after 2 days of seeing pressure on this counter, today it's up by about 2.6%. But Samir, your view on PI Industries?
Look, it's a great company when it comes to the fertilizer space, the way they've managed their capital efficiently, the new products that they keep bringing in from overseas, and then not only selling here, but then re-exporting it to markets where they can. The last couple of quarters have been a little difficult for them, given the fact that commodity prices have been rising. And more importantly, what had happened is the stock had run up far ahead of fundamentals. So even after such a sharp correction, the stock is, I think, still trading at about 30 times earnings, right? Somewhere around those 30, 32, or I'm not sure exactly what the number would be in today's price, but valuations are not cheap in any which way. So from that perspective, we got to see once growth returns for them, and that at that point I might be able to suggest a buy, but at this point of time where we stand on valuations and growth, it's just a hold.
The next caller now from Hyderabad, and Narayan has a stock query for us. Narayan, very good morning to you. What's your query?
Yeah, good morning everyone. My name is Narendra, not Narayan.
Oh, pardon
So
me.
I'm from,
Go ahead. Sorry, Narendra. Go ahead with your query. I think my producers don't like me too much.
Yeah. So currently I have 2 lakhs. So I wanted to invest on MTR or Azad Engineering or ABB Power. Which one I will invest?
So you wanted to invest in ABB Power, and which is the other counter you said?
ABB Power or Azad Engineering or MTR Technologies.
Okay, got it. And this is from a long-term view or a short-term view?
I'm looking for long term.
Long-term view. Okay, got it. Sameer, then I think on MTAR Tech, you gave us your view, but on the other couple of counters, Azad Engineering, again, one of the beneficiaries of that aerospace play. I think so did Sansera yesterday, stellar numbers there. And on ABB Power, if you cover the counter, either of those that you like right now for the long term?
So Azad, we don't cover. I mean, I know what they do, but I don't cover it. Maybe we do have a view on. We remain constructive. But you see, the stock has run up quite a bit. If you go back 2.5 months, just 2 months, on the chart also you can show it on TV, the stock was closer to 5,000 rupees. 5,000 ran up to 7,200, I think, in a matter of a month and a half, right? Ever since that, the results came, the results were a little below par and the stock has corrected. So we are positive, but we think closer to maybe 5,800 to 6,000 is a better price to accumulate the stock. It's not an all-out buy. We think the entire energy sector is going to see great demand going forward. Their export business will also see some upticks. It's a long-term buy, but at better valuation. So wait for a 10% correction. I think a week ago it was 6,300. So wait for a correction and then buy.
Okay, all right. The next one that we have is on Sterlite Tech. Our viewer Rajesh from Hyderabad is holding 300 shares at the levels of 150. He wants to know that from a slightly long-term perspective, what are the charts indicating? Devin, I'll come to you on this one. Today the stock is locked in upper circuit, but your view on the charts?
I think overall structure is positive for this particular counter. This can be holded with a trailing stop loss of 385 until and unless it is holding above this particular level, which coincides with 20-day exponential moving average. The stock will sustain on the higher side, and we can see the good strength in this counter. It can move further towards 500 mark. I think this can be holded with 385 as a trailing stop loss.
Got that view, and stocks up 51% in the last 1 month as well. And I think we'll correct. I think the weekly chart you were showing wasn't correct. Stocks up almost 10% in the last 5 days itself as well, and has been a very strong outperformer. Continues to be locked in our circuit. There you go. What a move for this counter as well. The next question coming in now. It's on Solar Industries. Rohini from Bangalore is holding shares at 15,720. So even at those levels, stock was expensive, but Rohini has got in and now is reaping the rewards. Sameer, by any chance, do you have coverage on this counter? Because in the defense play, a lot of analysts also have this as the preferred play. What's your view?
Yeah, so we did think the company was good, but the valuations were rich, like you rightfully said, even at 15,000. The view doesn't change at 18,000. We still think the valuations are very rich. Look, sometimes the market can stay irrational longer than you can assume, right? So right now, a lot of these defense counters like MTR Tech, Solar, HAL, BEL, all are in a lot of interest because of the raging wars happening in the Middle East and Russia. People say that defense buildups need to happen. But, over a period of time, I think people will realize that you can't make money when you buy stocks at extremely high valuations. And that, I think, is going to be the problem even in a solar industry, even though its defense exposure is constantly increasing and, the top line is growing, bottom line is growing. But growth also, you have to pay at a reasonable valuation. And from that perspective, it's an avoid for us. We haven't bought it. And at the moment also, we prefer to stay a little away from it.
All right, we've got our next caller. Chandu is calling us from Hyderabad. Chandu, go ahead, ask your question.
Yeah, good morning, Hal. So I'm actually a fan of Sameer actually. Daily watching this show actually. So I bought like a Keystone Realtor actually, around 2,500 quantity. There's average price of 430.
Okay.
So what is the view on long term? I want to know from Sameer.
Sure, Chandu. I'll ask your question to him, and I'm sure Sameer is smiling there. Sameer, your view on Keystone?
Yes, first of all, again, thank you for the kind words. Always feels nice to hear those. I continue to have a positive view on Keystone Realty. Yes, the stock is corrected quite a bit from, I think it went up all the way to 600. In fact, if you look at it at 630 rupees QIP and raised money as well, right? So the company had managed to reduce their debt quite significantly back then. Ever since that, what you've seen is the slowdown, a slight bit of a slowdown in the real estate space, because of which we are seeing, stocks coming off. I mean, it's not only Keystone, it's across the board. It's the entire sector that has taken a hit. But let's look at a company which is very low on debt, which is working more on redevelopment, which has a very decent sized land bank, which is constantly increasing the project launches they do, especially in the metros like Bombay, where demand has been outstripped. I mean, it has been extremely robust and strong. Yes, it's taken a bit of a slowdown recently, but once the markets pick up, I think you'll see Keystone bouncing back really quickly. I think this is a good opportunity to buy the stock to add on. Yes, it's not too much lower than what you bought. It's 10% down. And you've got a decent size. I don't know your portfolio, but for me at this price, I would be adding on some more.
Got that view, Samir, and thanks so much for the detailed view as well. So hopefully that answers your question, Chandu. Next one's coming in from Rao. He's been holding on to BEL at 453, and he's been sending us his query regularly. He used to hold 8,000. I think he's bought 2,000 more shares now, but currently sitting on a loss here. What would you recommend here, Devin, on this counter? Should he continue to hold?
Yes, as far as BL is concerned, I think 410 can be the strict stop loss for this particular counter, because it is very close to 200 exponential moving average. I think until and unless it is holding above that, we can see some bounce back in this particular counter towards 435 levels. But on the low side, if it reaches 410, I would recommend to exit. So strict stop loss can be 410 and it can be holded. If we witness some bounce back, one can try to exit near 435 levels.
Okay, all right. The next one, Devin, is on something like a Delta Corp. Our viewer says that he's bought 200 shares. He's not mentioned the price, but says that he's sitting on a huge loss. It's one of those stocks where you get stuck. Considering that he's still continuing to hold, what's your view? What should he do? Devin?
For Delta,
yeah.
Yes. So for Delta Corp, I think it is trading into a range. On the lower side, there is support around 67.5, whereas on the higher side, it is facing resistance above 80. So until and unless it is in range, I do not recommend anything. One can hold this counter. On the higher side, if it surpasses 80 levels, then we can see some good breakout towards the next resistance of 95 levels. But on the lower side, 65 is the strong support. So I think one can hold with a stop loss of 65. If it breaches 80, then we can see 95 levels coming in Delta Corp.
Well, let's go across and take another caller now from Telangana. And, Kalyani is dialing in for a stock query. Kalyani, very good morning to you. What's your query?
Yeah, good morning to you both and both the analysts, sir. And this is my query is regarding Shilchar Technologies and Keynes Technologies. Which is better to buy now? And please, I need this Mr. Samir Dalal's analysis.
Okay, so you want to buy into both of these counters currently and you don't hold them. Is that right, Kalyani?
Yeah, I don't hold them. I want to pick up one stock. Which is better of them?
Got it. Well, Samir, you heard the question as well between Keynes Tech and Shilchar. Of course, Keynes Tech, we saw what happened in Q4. What would you recommend Kalyani to do?
So, Keynes Tech is also one of the counters in the EMS space that has had a tough time. And I think it's not going to be an easy turnaround. Although a lot of the negativity, yes, to some extent has been priced in, I think the stock is going to grind for a bit longer. We have been looking at it, studying it, but we are still not recommending a buy on it. The other one I haven't even heard of. But if you want to make a play in the EMS space, the one I would recommend for anyone, and I've been saying this on your channel multiple times, is Dixon Technologies. And I think the stock is up 400-500 rupees today also. But it's a matter of time before they get the go-ahead for the new telephones for the Chinese player. Once that gets going, what you're going to see is a jump in the top line and the operating leverages play out. They've put in a bit of capital. That capital is not being utilized well, because of which ROEs have come off a bit. We think they will all move back up. Valuations have corrected substantially from where it was at 18,000 now. Earnings have caught up to a large extent, but the stock is down. So this is a good time to add on to a Dixon Tech. And I think that is the play I would be making on the EMS space for the next 2 years.
Okay, so that's the view coming in on Dixon. In fact, even the chart's looking very attractive. But, on Keynes Tech, there's one more question that we have from our viewer, Rayulu, who's asking about this from a technical perspective. He says he's bought it at the levels of 3,800 and 388 is the quantity. He says that can he expect the stock coming back to his buying price or not in the near term? Devin, your view on the charts?
I think in the near term, we do not expect this move. There was a breakdown seen below 3,300 levels. 3,500 levels. We have seen a breakdown in this particular counter, and after that, the volumes were huge, and stock have already broken important support. So I think this bounce back will be cooled off, and we cannot see the near term bounce back towards that levels. But yes, 3,500 is the resistance. One should try to exit in this bounce.
Vivek from Chennai wants to know, in terms of what he wants to invest actually in some of the pharma stocks, Samir, and wants a 1 to 2 year perspective on what could be a better play. Is there anything that you're looking at, Samir, in pharma right now?
So, Sun Pharma actually is one of the picks that we do like. From the perspective that what they're doing in branded generics in the US market is something that could lead to huge opportunity growth. But there's a slight overhang, unfortunately, that's come in is the acquisition that they're making, which is going to lever their balance sheet. No doubt it's going to be a long-term positive, but from the next 1.5 years, again, like I said, because of this acquisition, interest costs going up, it could be a little negative in the sense that the stock might have to consolidate for a while. But if one wants to take a call from a mid-cap kind of a pharma space, the two stocks that we kind of have been positive on, one is Glenmark. Glenmark has actually seen a huge run-up, no doubt, over the last couple of years. But we think there's a great opportunity of growth in that counter. We think the stock would probably move up to 3,200 given where it sits. And the second is Wockhardt Pharma, the new drug that they've launched. It's still not really seen the light of day. And once the numbers for those start playing out, I think Wockhardt is something that will do really well. So those are the two mid-cap, and the large cap, Sun is our top pick. But like I said, it's going to be a slow mover.
Okay, all right. So that's the view on the entire pharma space. So the next one is from Arun, who's writing us from Chennai. He's holding 2,000 shares of ITC. He's not mentioned the buying price, but wants to know as to whether he can continue to hold this for the next 2 years, and if this is the right point to maybe add more of these counters. Samir, your view, because first half still is of FY27 still is not looking very attractive for ITC, right? So the pressure will continue in terms of where cigarette volumes go, cigarette revenues go. So overall, what's your view on ITC right now? Should he enter right now, wait for some more time from a long-term perspective?
So I would be entering right now. Okay, so let's discuss the earnings for 2 minutes quickly. If you look at the earnings, yes, the cigarette business did not show growth in volume. And you can't really look at revenue growth there because that's the extra excise that they collect, which they pay off to the government. So it's kind of a net off situation. So yes, the cigarette business was a damp. Now, but let's look at the FMCG business. The FMCG business continues to grow. And what was most interesting is when you look at the segmental, the EBITDA margin of the FMCG business is continuously increasing. It's reached almost 10%. It's become sizable in nature, and this is something that they could probably demerge over the next 2 years, right? That would lead to a massive value unlocking because FMCG by itself trades at much higher valuation multiples than what the cigarette business does. The cigarette business can continue to command its 20% this thing, but once the delisting happens, I think there'll be value unlocking. So from that perspective, ITC looks positive. We believe the cigarette business, yes, in the short term will see pain. In fact, I believe there's going to be another hike in cigarette prices, which could in fact lead to decrease in the volumes. But eventually, look, given the youth, given the population, given the fact that people want to have that cigarette and youngsters are getting in, the number of people are increasing. I think long term, both these businesses will do well, and this is a buy for me at this point of time.
Got that view, Samir. I mean, it'd be very interesting to see if the demerger does take place. True, massive re-rating opportunity there as well. Let me go across, take a quick query on Ola Electric. Sudarshan from Hyderabad is holding shares at 76. Devin, should he still continue to hold? What do the charts suggest?
I think yes, the stock can be holded with a stop loss of 33.9 levels. That level is at 50-day exponential moving average. It coincides with that level. I think overall structure is sideways as of now. If it breaches 37.8 levels, we can see some good up move in this counter towards 42. So yes, one can hold this counter with a trailing stop loss for the target of 42.
Got it. The next question coming in from caller actually dialing from Hyderabad, and Shashidhar has a stock query for us. Shashidhar, very good morning to you. What's your query?
Very good morning. My query to Mr. Samir, sir. I'm holding this HR Motors 100 shares at 6,200.
Okay.
Recently bought.
Okay.
Okay. What it's for long-term perspective? What is whether it can hold or it can exit?
Got it. Well, Samir, Aisha's earnings today as well, and they made some important moves, right? They've announced a capacity expansion also to go up to 20 lakhs. Do you think that valuations are slightly pricey, or should Shashidhar continue to hold at 6,200?
Yeah, so valuations are clearly pricey, right? There's no questions asked about it, but I think one can continue to hold on to it. Look, what they've done with the bikes that they cater to is fantastic. They kind of created a market when they did, which didn't exist, and they've captured a huge share of it. Now they're moving into the electric side as well. We think that market is going to open up a huge traction for them. Adding capacity is great, but eventually it boils down to sales, right, Puneet? So for me, we would like to continue to watch that sales momentum continues for them in a strong way. I believe it will. So even though valuations are expensive, I don't think you're going to see sharp corrections in this counter, so hold on to it. But if you do see corrections, in fact, I would recommend closer to, it's a sharp correction. I'm talking about 5,500, 5,400 levels would be a buy for me, but hold on to it because long term we remain very constructive.
Okay, all right. So that's the view coming on Eicher Motors. The next one is on Mazagon Dock. Our viewer Chandra has bought 270 shares at the levels of 2342. What are the charts suggesting, Devin? Continue to hold.
Yes, one can hold this particular counter. There is a support on the lower side at 2,385 levels. So yes, the stock can be holded. Overall structure remains kind of sideways. Choppy move is seen in this particular counter on the high side. 2540 is the strong resistance, which is 200 exponential moving average. I think if it breaches that particular level, then we can see some further up move in this counter towards 2,690 levels. So yes, structure is constructive right now. On the high side, there is a resistance, but if it surpasses, we can see some further up move. Whereas on the lower side, we have a strong support at 2,380 levels. So yes, one can hold with this stop loss for the target of 2,690 levels.
Well, got the view, Devin, but it's now time for the rapid fire round in this edition of Ask Profit. Samir as well as Devin, keep your answers as short as possible so that we can take as many in the next 3 to 4 minutes. First question is on Zaggle. Our viewer Ravi has bought shares at 330. Samir, should he average down right now? What would you recommend, if any, coverage?
So he just started studying it. Still not got a view on it.
Devin, anything on the charts?
No, I think structure remains weak. One should try to exit on bounce.
JSW Energy, Samir, your view from a 2-year perspective. Umar from Bengaluru wants to know.
Oh, absolutely. It's a good buy at this point of time.
Got it. Gandhar Tech is the other one. Actually, let's pull up the counter because I'm not sure of where it is right now. It's our viewer bought it at 376. Gandhar is what I'm talking about. And he is a long-term investor holding since December of 2023. Gandhar Oil now down to 169. But Devin, anything on the charts that you could recommend and help out our viewer?
Definitely, the stock is very much positive on charts. I think 178 can be the target. On the low side, support is at 150.
Okay, the next one is on Marksans Pharma. Surya from Hyderabad wants to know if this is the right time to enter from a 1-year perspective. Devin?
I think yes, pharma sector is overall looking good. One can enter this particular counter for short to medium term as well. On the lower side, support is placed at 200, whereas this can move towards 240 levels.
Got it. Well, ITC Hotels for the long term. Radhakrishnan is asking this question. Samir, would you recommend him to continue holding, buy more?
ITC Hotels is definitely a buy.
Okay, this is an interesting one. MRF, our viewer's father had bought it when the IPO came in early 90s. He's still continuing to hold. Samir, your view, should he still continue to hold?
No, absolutely. Tire sector, very positive. MRF, one of the top players in the space. I think hold on. The stock will keep moving up. You'll get no bonus or no dividend. I mean, not dividend, but you won't get a stock split. You're just going to see the price going up over time.
Got it. The next question coming in now. It's on Sun. Our viewer has bought shares at 545. Should he hold on Devin for his 50 shares?
Is it Sun TV?
Yes, that one.
Sure. So I think the structure is weak. I think after earning, we have seen a breakdown in this counter. One should try to exit on bounce. Resistance is at 520.
Got it.
KFin Technologies bought at the levels of 981. Shankar from Dubai wants to know if we can continue to hold from a long-term perspective. Samir, any view?
So KFin by itself is also a buy, but between the two, I prefer CAMS over KFin. KFin also will do well, but I think CAMS will generate far higher returns over a longer period.
Okay.
Got it. Stylim Industries, Himanshu from Kanpur is holding on to shares at 1750 is what he's saying. Has done well for him. He's asking if, Samir, do you have any coverage for the next 2 to 3 years? He wants a view.
Sorry, no view on Stylim.
Devin, should he exit now, book his profit?
Yes, I think one should book his profits. I think it is overbought zone. It is at overbought zone right now.
Got it.
CG Power, 2000 shares bought at the levels of 670. Continue to hold, Devin. CG Power.
Yes, CG Power, I think structure is positive. One should hold with a stop loss of 805. It can move towards 920 in the short term.
Okay.
Samir, between Karnataka Bank and City Union Bank, any view that you have or within that space, anything you like?
So between the two, City Union Bank, independently of the banking space, top pick is IndusInd Bank in the slightly smaller ones, then IDFC, and in the large ones, HDFC followed by Axis.
Okay, Bank of India bought at the levels of 143. Our viewer is sitting on a loss. 3 months view on this one. Venkat Reddy wants to know. Devin?
I think structure is weak. One should try to exit.
Okay, all right. That brings us to the end of this second rapid fire round as well. Samir and Devin, thank you so much for taking all the time and helping us answer all those stock related questions. But viewers, like I said, completely out of time on this edition of Ask Profit. But do stay tuned. KYC comes up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
All of you work for the same organization, and that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own?
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the
That mutual
worst
fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K.
Hello and welcome to KYC, a show where we decode the most interesting companies. Let's see if you can guess which company is on your radar today. First up, I'm Hiral Dadia. A company which is a MNC housing finance company. Your second clue, IHC recently became the new promoters. And the key over here is the legacy books are absolutely out. It's a fresh new beginning. New guidance for FY27 and FY30 is what the management has given. Do you know which one is it? I will tell you. The company that we are going to talk to about is Sammaan Capital. An interesting one with the way moves have happened in the markets as well with the Sammaan Capital. I do have a couple of questions to ask the management. They will be decoding new beginnings absolutely from scratch. And this is a zero starting point when it comes to the asset quality as well. So what happens from here on? From there, let's look at the other questions that that we'll be asking the management. What can that trigger be, which can be unexpected, where the provisions could actually increase in FY27, if any? What are their views on the revenue and the yield compressions that could be coming in as well? Apart from that, you're talking about rising interest costs, as well as the temporary spike that will come in here, or is this going to be here to stay? When you're talking about the cost of funds trajectory, how is that going to look like going ahead? Because you have seen recent upgrades that have come in. So does this really normalize and cool off? And you're talking about bridging the gap for the net interest margins and the ROAs from here. So what is that FY30 target on both these parameters? Apart from this, we'll be talking about navigating the dispersal velocity and the product diversification that the company will be looking at. And lastly, analyzing the promoter strategy and the capital structure. What are the key timelines from here on? This is what we are going to talk about. And on the show, we'll have Gagan Banga, MD and CEO of Sammaan Capital, who will be joining us on NDTV Profit. But let me take you through about the company. As we know now, it's a housing finance company who's offering home loans and loan against property as well. That's the basic work that they do. And now they have a new promoter, which is Avenir IHC. And their current stake is around 28.5%. And now it actually becomes a part of the Abu Dhabi-based IHC PJSC company. Now, IHC, as we know, their stake will be increasing to 43.5% upon the 3,198 crores warrant infusion that will happen. However, this is only subject to the conversions once they happen. Apart from that, if you talk about the IHC stake, they are directly operating and oversight through a nominee director and the board, and this is a subcommittee that we have over here. So that's the kind of control that IHC will have. And if you're talking about the total assets, you're talking about $121 billion under AUM. That's the base you'll look at. Now, IHC has committed $1 billion plus for Sammaan Capital as well. And this is to focus on gold, green, micro-construction and bridge loans by FY30. Now, the key highlights, let's look at the net worth. 18,991 crores. Now, this does not really include the 3,198 crore warrant conversion. So, that's that additional that we will be looking at that will be received upon conversion of the warrants. Apart from that, if you have to look at the capital adequacy ratio, that stands at 20.3. You're talking about the liquidity coverage ratio, which is at around 139 versus a regulatory requirement of 100%, so way above that. And the key positive triggers, it's getting a de-risked loan book. That is one of the keys because all your legacy businesses are out, your legacy issues are out, and your cumulative collection efficiency now is at around 99.1%. Now, you're opening up an AUM of 53,160 crores. That's your opening book. And you have a ROA of 1.6%, which is supporting it. Now, apart from that, a 1.9% annualized credit cost on the total disbursement book of 3.6 lakh crores. That's what are the key positives. Now, they did have a recent credit upgrade as well, and this is post the IHC announcement. What will that do? That will reduce the cost of borrowings, and it will actually become best in class with peers as well. Secondly, if you talk about the market response that they've got post this credit rating upgrade, is stronger credit confidence and a good funding outlook. Now, the SCL bond deals, they have tightened by almost 100 basis points since the rating upgrade. So, this is one of the key positives that you should be looking at. And the street is seeming very bullish because now the new promoter, which is IHC, they are with them coming in, the street is expecting a re-rating in terms of where the stock price goes. Apart from that, their capital position has strengthened post the infusion that has come in. Asset quality, absolutely comfortable because they're starting with a zero. And the presence that the company has when you talk about the retail mortgage finance market, that is good. Valuations, absolutely attractive, and there is clarity when it comes to key parameters for the future. So that's what you're looking at in terms of why the street is bullish. Now, let me quickly take you through the rating parameters. You know, this time around, we've made the rating parameters slightly different because the company is different and the way we are going to look at the company is different. Q4 performance, the credit rating upgrade that has come in, loan book status, the policy outlook from here on, shareholding patterns, street credentials, valuations, and your projections outlook. These are the 8 parameters that we are going to watch out for in terms of where Samman Capital will be rated on NDTV Profit today. Now, first up, let's look at the capital, the Q4 earnings. Now, what has come in over here? Your con-call commentary remains absolutely strong. There have been one-off adjustments that we saw in the fourth quarter where a 8,105 crore loss was reported because of that one-off adjustment. However, the street is still bullish when you talk about the growth prospects after the new promoter that has come in here. Your asset quality, you're starting in from scratch, your net NPS and your gross on NPS absolutely flat. So that's what you're talking about in terms of where Q4 earnings go. Now, let's talk about the credit rating. Now, after IHC has come in, they have got an upgrade coming in from CRISIL as well. CRISIL actually, from AA stable to AA positive stable. Likewise, from a AA negative, this is a double upgrade by CARE and a triple upgrade, I would say, from a ICRA as well to a AA positive stable. So, this is one of the key positives here. Let's look at the loan book here. Now, that has been fully de-risked. If you have to start off with fresh. Housing, 30,962 is the kind of, exposure that they have. The remainder, bigger one is the secured business, but your CRE project is fairly new. 53,160 crores is the fully de-risked loan book that the company will be starting with. Now, when you're talking about the policy outlook, if you look at their targeted portfolio mix, your secured retail is around 60% of the mix, and your semi-secured and wholesale becomes 20%. So there is equal weightage over there. And they've said that they will be maintaining this till perpetuity. This is what they're looking at in terms of the policy. So steady policy in terms of the dividend payout as well, which is, a little more than 25% in terms of where profitability goes. Now, let's look at the liquidity status. 6 months repayments in cash or 10 to 15% of the borrowings, whichever is higher. That is what they're looking at in terms of borrowings. And they've said that they will be asset light, where 30% of total disbursals is what they will maintain in terms of the policy. Now, shareholding, as we know, IHC, 28.5% is where their share stands. After that, you have FIs who have around 17.8%. Public is around 39.7, your DII is around 12.6, and employee welfare, as we know, is still a short portion. But because of the new promoter coming in, this pattern is looking absolutely strong. Let's quickly look at the overall credentials now as well. In the last, I'm talking about the performance. Last 6 months, stock has not really done too much to a percent up move, but in the last 1 year, 23% is the kind of returns. I'm not sure whether we should be looking at this 7% aspect as well, because now everything that we start over here is fresh, taking cues from what the management has announced in the fourth quarter. And the write-offs that have happened. So this is going to be key, and hence it's a mixture here, and hence we've given it a neutral rating there. Let's look at where valuations go. Now, if you have to talk about valuations, again, a neutral, the reason being is, if you're talking about the 12-month forward price to book, your current is 0.9 times versus your 5-year average, which is 0.6 times, which is telling you that somewhere it is slightly more expensive as compared to your average. But whether the cleanup actually, demands this kind of valuation is the key question that we have. But a sideways rating in terms of, where the valuations go. Let's look at the outlook from here on. If you have to look at the disbursal growth guidance that they've given, 30,100 crores in FY27, moving up to 92,000 crores. 3 times FY27 is what you're looking at in terms of FY30. Likewise, if you have to look at the AUM growth as well, more than 2 times is the kind of growth that they're anticipating. And profits, from 1,400 crores in FY27, you're looking at a jump to 5,600 crores. And this outlook is absolutely worth a thumbs up. And that's the reason why this number. Likewise, for net interest margins, the substantial improvement coming in there. The reduction that they're expecting in the cost of funds from a 9.3% to a 7.8%, again a thumbs up. And the improvement on return on assets from a 1.8% to a 8.1%. This is absolutely something which is music to the eyes, but it's going to be interesting to see what the management has to say about it. Let's look at the overall ratings now basis all of this. 1, 2 neutrals, whereas you have credit rating and policy outlook, which is a positive because they are talking about continuity in terms of policy outlook. Shareholding with the IHC coming in a positive, and your outlook is positive, whereas your street credentials, because the way your 5-year returns have been versus what it is now, is a neutral. Valuation slightly expensive as compared to your 5-year average. So your final rating with all the push and pull has come to a 6 on 8 on a Sammaan Capital. Now, let's understand if the management is going to be happy with this one or is going to look out for improving more. We'll have Gagan Banga, MD and CEO of Sammaan Capital, who will be joining us on the other side of the break. Stay tuned.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back to Know Your Company with me, Hiral Dadia. You know, we've been talking about a company which is probably starting from scratch, if I would have to say, at least in terms of the wipeout of everything that was negative. Gagan Banga, Managing Director and CEO of Saban Capital, joins in. Gagan, welcome to the show. Always a pleasure to speak to you. You know, my question coming to you is a massive business model restructuring is what we've seen in the fourth quarter. Now, the asset quality and restructuring residuals is what I want to talk to you about, because the zero NPA sustainability model is going to be excellent to look at. But help us decode these new beginnings to maintain this and start at a zero NPA model.
Yes. So, firstly, thanks for having me on the show. See, with IHC coming in as a promoter, unlike several other occasions at which during which we've tried to kind of restart a new business model or change the strategy, etc. This is not that. So I don't call this Saman 2.0 or 3.0. This is absolutely a new life under the parentage of IHC. And the uniqueness of this is that while as an outcome of IHC becoming the promoter of the company, that makes us the largest multinational non-bank finance company. But it is also unique that with 53,000 crores of assets, we have a zero and a net and gross NPA. As we start doing business, there would be regular credit costs. This year, we intend to disburse about 30,000 crores, next year about 50,000 crores. So there would be credit costs attached to those 30 and 50,000 crores. Of the starting book, or what we call the opening AUM of 53 odd thousand crores, whatever provisions, whatever buffers were required have all been taken care of. Now, on a net basis, net of recoveries, there is no provision required. So the terminal credit costs have all been accounted for, which have worked out to be approximately 1.9% on an annualized basis. So that's really where we are. Now, as we look to start, this is mortgages is something that we will continue to grow. In due course, we are also starting at least 3 new products, which should get to about 20% of our incremental disbursals next financial year and 50% of our incremental disbursals in financial year 29. So that's broadly the roadmap that we've laid out for ourselves.
Gagan, everything perfect in terms of the roadmap, because that's where NDTV Profit has given it a thumbs up as well. Help us understand, are there any legacy wholesale tail risks that still prevail, number one? And two, is there any unexpected provisioning that could be triggered in FY27 that you're already baking in?
No, there is all provisioning, all buffering, etc. has been done. On top of that, we are carrying a management overlay, which is approximately, I think, 3 to 4% of the book. So that's fairly substantial to tackle for any sort of a macroeconomic situation which may arise. As a micro on the opening AUM, there is absolutely nothing, which is why we've taken the extreme step. It was only a 1.5% sort of NPA that anyways this book had. Even that has been fully provided for, and we therefore start with zero. So the zero is not just a messaging to catch someone's eye. Zero is an assurance that this book is truly taken care of. More importantly, for the management as well as for all stakeholders, via you, what I would like to, without any qualification of any sort, in a very straightforward manner, communicate and commit that the legacy book, which has been there for the business for a long time, along with all the other issues which we've been tackling, have been finally shut, sealed, and locked away. They are not something which we are going to be spending any time or any bandwidth on.
Okay, so that's with regards to where provisioning goes. Now, Gagan, if you have to look at the revenue trajectory, if you have to look at the kind of yield compressions that could potentially come in the short term, what is your view and how are you envisioning those numbers short term and then longer term?
Sure. So as we move from a double A category or a double A minus combo category to now a firm double A plus by all domestic rating agencies, the marginal cost of funds, so whatever we incrementally borrow, should be typically down 160 basis points, which would then blend in with our approximately 50,000 crores of stock borrowings. And as a result of that, in due course of time, this 160 basis points will come in over the next 12 to 18 months. I expect at least 130 basis points of that to come in. We also firmly believe and are very confident of the fact that AA plus is just the first stop, and we should be able to, once we've utilized the AA plus ratings to demonstrate that the borrowing profile of the company has truly changed and is being accepted by the market, we would be looking at a AAA over the next 3 to 4 quarters. And as that happens, maybe 4 to 6 quarters, but certainly not longer than that. So somewhere towards the end of this financial year, middle of next financial year, we should be a AAA. That would result into an additional saving of 100.
Okay. We've just lost Gagan as well. We'll come back and try getting him. But overall, if you see in terms of from what Gagan is saying as well, you're talking of the kind of interest. Yes, Gagan, what do you have for, you can continue with the answer.
Yeah. So I was saying in the short term, 160 basis points on marginal costs, and through the course of the next 2 years, 270 basis points on marginal costs.
Okay. And what about the rising interest cost? Is there a temporary spike that you're seeing, or will it be here to stay?
No, as borrowings increase, the absolute value of interest will certainly increase. The percentage cost would go down. As business increases, borrowings increase. If we are going towards a 2 lakh crore sort of AUM over the next 4 years, then certainly the absolute value of interest costs have to increase. So will commensurately the absolute value of interest revenue and related revenue increase. So that's how the company will make more profits.
Right. Gagan, another question that comes to my mind right now as we speak is the AUM target that you have. Now, yes, it is aggressive. To add to this, you're looking at product diversification, right? Go in betweens. Now, how do you plan to scale this product diversification as well? Because you will have to incur prohibitive operating expenses here as well. I mean, it's not going to be possible where your OPEX does not go up. And two, the reliance that you have for co-lending, because you're transitioning to an asset-light model, right? So if any of your partner banks or any of your partners change their policy or their risk appetite goes down, is there a risk to your AUM target then?
Okay, so I'll answer that in 3 parts. One, most certainly, before we start any product, we have to invest in people, branches, systems. All of that comes at its own cost, which is where the opening net worth of 19,000 crores supporting opening AUM of 50,000 crores with a 1.6% ROA makes us unique. If, let's say, we had the net worth, but we did not have the book, then we would have had to burn 6,000-7,000 crores to set up capacity, which would be disbursing, let's say, 50,000 crores per year. So, which is why I keep saying that think of this provisioning as just notional amount. If we had not done all of this, we would not have the capital and a clean book, and we would have anyways landed up spending that much more on expenses. This 50,000 crore earning is certainly going to support our future earnings. The branch network, which we already have, will give us a leg up. So we are carrying a lot of excess capacity as far as branches and people are concerned. Our existing people productivity, I would imagine over the next 18 months, would go up at least 3x. So whatever growth we are expecting in the mortgage business per se can happen without too many people getting added. All the people that will get added would be for the new businesses, which we have the earning power to support. So absolutely like interest rate, like as the book expands, interest costs on an absolute value would go up, but the interest earnings would be higher. Similarly, the OpEx would go up, but as a result, the interest earning and the other related earning would be much higher. And we actually expect that our cost income ratio, which is currently at about 50%, will decline to about 26-27% by financial year 30. The second part is on the asset light strategy. We had pivoted completely to the asset light strategy. That was part of our past. Today, asset light is an option. It's something which has scaled up for us and is well tested. We have a lovely relationship going with 24 banks, but our reliance is actually going to reduce on asset light to be now from 100% to now be just 30%. With those many more products. So it's actually de-risking more than risking.
Okay. My question to you, because we're running short of time, Gagan, is I know IHC has come in, but what has happened to the FI holding to the company? They have substantially come down in the fourth quarter, right? From 25% to under 18% in FY26. How do you plan to address that concern with the severe dip that we've seen in terms of the global investor confidence? Would you, if I have to put it like that, is there something where you're already speaking to FIs in terms of the financial space, the company as a whole?
Oh, for sure. Investor interaction, especially now that the silent period is over and we can go out there and engage, has already started. I believe all types of institutions, foreign and domestic institutions, are looking at us. We are meeting several of them over the next 4 to 6 weeks. IHC is supporting us completely and is also putting us across several institutions which are part of their ecosystem. I would imagine that the institutional ownership, foreign and domestic put together, would be moving up very shortly, very quickly, and that's specifically an area of focus for the company.
That's an interesting takeaway, Gagan, as we end this conversation as well. But thank you so much for joining in. Always a pleasure to speak to you as well. And thank you, everyone, for joining us and watching KYC on NDTV Profit. Lots more lined up. I hope you enjoyed this discussion without Sharad and with me, Hiral Dadia, today. Thanks for watching.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
All of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the
That
worst
mutual fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook?
LIC, after a strong third quarter, has also come out with a strong fourth quarter as well. And to decode these numbers and also the outlook for LIC, we are joined in by Sri R. Doreswamy. He's the MD and CEO of LIC. Good afternoon, sir. It's always a pleasure to have you. Third quarter numbers were good. Fourth quarter also numbers were good. Do you see this momentum going ahead? And there's a lot of improvement coming in the operational numbers also, especially the VNB numbers, the AP numbers. How is it looking, and does this continue in the first quarter also?
Good afternoon. As you have noticed, we have been trying to improve our performance over a period of last 4 years, and it has been a continuous focus to see that the corporation performs at a much higher level. The efforts that we have taken have started yielding results, and we have seen a continuous growth on both Q3 and Q4. You have seen the good performance of the corporation coming up. We expect this to continue. Our performance in April has also been good. We have shown good growth. The numbers are already in public domain. And we hope to do well in Q1 as well as in the current financial year as well.
Right, and the con call, there was an important statement coming in that your margins will be gravitating towards the private peers. Now, what's this timeline looking like for this, and how this momentum will be there, especially on the margin expansion front? That is where some growth levers are also coming in.
See, when we went public, we gave some kind of targets on these numbers to happen in the first 5 years. And whatever we had mentioned as those targets, we have already reached, be it the product mix, be it the margin numbers, be it the channel diversification. All those areas we have been able to focus and reach those numbers. So as of now, we are at 21% plus in margins, and I'm sure that our growth momentum in this also will continue. But you should be aware that VNB margins are dependent on multiple factors, some of which are outside factors also play a role in that. But we are confident that our efforts will continue to bear fruit, and we'll be able to inch towards what we wanted to achieve as quickly as possible.
Of course, there's also an expectation of consolidation in the product mix, going ahead with par and non-par products. The way the momentum is coming, especially in the non-par products, looking at it. So now is the story structurally changing from a par-led insurer to a high-margin insurer for LIC?
When before going public, when we were focusing more on par, or rather we are a completely par company. From then, when on listing, we started a directional shift towards increasing the non-par portfolio, and we have built up a good number of new products on the non-par portfolio. And with all the efforts that we have taken in the last 4 years, we have now reached 35% share of non-par in terms of APE. And we hope that this is the area that we should be settling around. Of course, this can change a bit here and there, but depending upon the flair, depending upon the market situations, depending upon where the people's focus go, we may have a 1 or 2% this side, that side, but we would like to see that we are in the range of 35 to 38 in terms of non-par share to APE.
Fair enough. But to put in perspective, there's a lot of buzz happening on the NSE stake sale also. Is there anything there? And if kind of realizations, if it happens, where does the benefit come in?
You are aware that LIC has been having a unified fund. So all investments of ours were in the unified fund before listing. And NSE, our holding has been quite long, and it's part of our participating book as of today. It's a substantial investment that we have. So whatever gains we get will be aimed at towards reaching the policyholders. That's the full aim. And any gain that we make in par book will go on to help the policyholders' returns improve.
That ratio is there.
Yeah.
90.
Yeah, if it is whatever is in par, the profits that we earn in par, 90% goes to the policyholders and 10% come to the shareholders.
Right.
That component which remains in non-par book will be 100% profits go to the shareholders.
Fair enough. And sir, just wanted to understand, now you have around 3.5 lakh Bima Sakhis. That's around 59% present in the Gram Panchayats. It's a very interesting take, especially on the women empowerment and this segment. If you're talking about it, how does this distribution network work out? What's the outlook for this?
See, the focus when we launched the Bima Sakhi scheme at the hands of our Honorable Prime Minister, the focus was on women empowerment. The focus was on expanding LIC's presence in the rural markets and covering the entire geography of the country. The primary focus of women empowerment, we have been able to make substantial progress as of now. And as you said, we have covered 59% of the Gram Panchayats in the country. And we are continuing to focus on the remaining Panchayats where we don't have a presence. Our focus is to reach as quickly as possible. Of course, all efforts will be on there to reach that. We have one Bima Sakhi in every Gram Panchayat. That will continue. But simultaneously, the existing the Bima Sakhis also, we are focusing on training as well as on empowerment so that their income will go up there, and they will also be contributing towards covering all the insurable population of the country.
Fair enough. And the concerns in the industry, sir, a little bit of concerns are there. Just as an industry player, I just want your views on the competition, any kind of regulation or distribution transitions. Any concern is there if LIC is trying to mitigate that?
No, actually, from the moment the market opened up in 2000, we have players in the market competing with LIC on life insurance front as well. Even earlier than that, it is not that LIC was not having competition, because we compete with all the financial sector players to have a share of that wallet of the customer. So we are working only on that savings component of the individual customers and the organization, so that there has always been competition. But with the opening of the industry, competition directly in life insurance products has started happening, and more than 25 players today. The competition is intense. But all of you are aware that the new act, the Insurance Act amendment, has also allowed 100% FDI in insurance.
And that is why a lot of buzz is there in the industry also. But does that mean just as an insurance player, now the foreign entities are coming and having a full ownership rather than just a JV? Just to get that perspective, does that make it a re-rating candidate for the Indian insurance space also, the way the world looks?
Actually, this has been the view taken by the government as well as the regulator, that making the FDI into 100% will enable some players who are not wanting to enter the country as a JV partner will be able to come. We have to wait and see how many new players, but we expect some more players to enter certainly. And already you have seen the foreign partner taking a stake in a big stake in an insurance company and trying to build their base through that also. So we expect that the competition will become more intense as days progress with all the reforms that is happening in the country. But we are gearing up to see that corporation lives up.
Exactly. So LIC is gearing up for foreign competition.
Yeah, no, foreign competition is already there, only as a joint venture partner. Even if it has to be 100%, we'll be able to.
Fair enough. Also, for the investors, this time there is a bonus angle, there's a dividend also. I was just seeing the numbers, the dividend policy has also increased. So we can expect the certain dividend allocation policy on the higher side for FY27 as well. Already there is a bonus and dividend element already there now.
Yes, actually, on completion of 3 years on the listing side, we have built our reserves slowly over a period of last 3 years, and now when we have reached a level of reserves, we thought we should now be using that to reward the shareholders as well. So as a first step in the last quarter, what we did was we announced a bonus issue of 1:1. So with that, the liquidity or the number of shares available in the market is also going up. That is the first step we have taken. Once our annual results have been announced and we arrived at the final profit for the year, we thought that this reward to the shareholders will take to the next level, which is declaration of dividend. Last year we declared 12 rupees per share on the pre-bonus number of shares. This year with the bonus issue, the number of shares have got doubled. So on the double the number of shares, now we have declared a 10 rupee per share dividend, which is almost 66.6% more than what was declared last year. We hope to continue to do well. We hope to continue to focus on improved performance metrics, which includes the profitability of the organization as well. And based on that, we'll be able to continue to give good rewards to the shareholders in the days to come. That's what.
And so the last question, since your listing has been a journey of 4 years, it was the largest listing I had been to the IPO. It was very big. Now after this LIC 1.0 after listing, but now for the next 4 years, where does LIC stand?
LIC would like to continue to be a very nimble-footed player, as close to the matching or improving on the competition.
Right.
We would like to see that we contribute to the industry growth. Our focus will be to see that the vision of the government as well as the vision of the regulator of insurance for all by 2047 is achieved, and if that has to be achieved, the contribution of LIC should be much bigger. So we are looking at a consistent growth, expanding our reach to every part of the country, continue to cover all segments, and see that we show a profitable and sustainable growth.
That was the management of LIC, quite optimistic on the growth plans and has given a robust growth plan going forward. But if you look at the market, the Nifty, after 5 days of consolidation, we are seeing some kind of substantial up move in the market. It's up close to around 140 odd points, but 23,800 continues to act as a strong resistance. Now we need to close decisively about this level for any bull market, for any more buying to come in into the markets. Now, what has led to today's rally? It's largely the private banks that have been leading the rally. In fact, that is also one of the reasons why the Nifty Bank Index is trading in green. On the flip side, the pharma names have been struggling in trade. Nifty Pharma or Nifty Healthcare are the top losers, sectoral losers in trade. Among F&O names, if you look at, on the gaining side, we have Dixon Tech, Astral, Keynes, some buying interest that we are seeing when it comes to EMS names. Both Keynes and Dixon are up 4%. Dalmia Bharat, after deal with Adani Group, the stock is up nearly 3% in trade. Astral is up around 4%. Similarly, Supreme Industries. So some buying interests that we are seeing when it comes to EMS name and plastic pipe manufacturers as well. Sona BLW is also up 2.5%. On the losing side among the F&O names, it's Aurobindo Pharma and Glenmark Pharma that are down in trade. Aurobindo Pharma largely post the weak set of numbers. Max Healthcare again weak set of numbers. Paytm after the block deal, we are seeing this downtick coming in for the counter, down around 3% in trade. Moving on to the next management on the show, and that's Vatek Wabag. Now, if you look at the fourth quarter, strong execution is something that we had seen, and that is what has led to a strong top-line growth for the company. But on the margin front, that has come down a bit, and this could largely be on the back of cost pressures. Now, to understand more in detail, we are joined by the CFO of the company of Vatek. So, sir, firstly, to start off with, given the fact that you have a significant exposure towards the Middle East and given the crisis that we are seeing, any delays or any impact on the execution that you saw, any project delays, any cost overruns? Because I believe you get around 30 to 35% of your order book from West Asia.
Hi, good morning. Thank you for having us on your show. I think let me start with what we have done. And obviously, these are trying times, but I think subject to that, we have still done a very, very good quarter and closed the year on a high. This is our historic high year, over 4,000 crores of total income, delivering the 13 to 15% band of EBITDA that we have guided the market, and closing with again historic high net cash of close to 1,000 crores, about 950 crores is what we closed with. Our ROE numbers are about 15%, ROCE close to 20%. So on all metrics, we have delivered what we had guided as outlook to the market. We are a geographical spread company. That is our strength as well. We are present in India, Middle East, Africa, SAARC, CR, CIS. So that way it gives a lot of geographical diversity and risk diversification as well. And what we need to see, especially in these times, is that how our sector is performing. These are times when our sector thrives because water is a basic necessity. The water projects will not stop. In fact, with the current geopolitical tensions, we will see that the governments in these regions will only build more redundancies and reserves. So it's always a sector with a tailwind that we are in. Coming to execution, our projects in these regions or otherwise have been doing very well, very good execution. There have been no disruptions as such. Our plants are not close to the assets that are getting targeted or anything. We do water desalination, reuse, industrial water. So from our sector perspective, it's been fairly good, delivering good margins, and also in the regions where we've been doing very well.
So no cost, so no execution impact because of the Middle East war is the key line coming in here. One thing I wanted to check with you, Q4 margins were pretty much, somewhat it was impacted because of cost pressures. Was the outlook for FY27 specifically for Q1 and Q2?
So I think we've given a more multi-annual outlook already, where we said that the band of EBITDA will stay in the 13 to 15%. And that we are holding on. We execute large contracts, and these are multi-annual contracts. The large contracts usually carry a cost pass-through clause through the escalation clauses, especially the large multilateral ones, which we generally focus on. So that way, we do not see that the cost pressures will impact our margins. Yes, like any other sector, we will have our own challenges during these times, but we've always found a way to manage, and we have thrived in the past also, whether it is during the COVID, post-COVID, or during the various geopolitical tensions. You have seen us deliver what we have promised. So from that perspective, we are confident of staying on course with the guided outlook for the medium term that we've already put out.
Understand that over the long term, your margins would definitely be in the band of around 13 to 15%. But in the fourth quarter, we have seen that slipping down to 11.6%. What I wanted to understand is that could there be further more downside for short term for the first quarter and the second quarter?
See, I don't know how you compute the numbers, but the way we see it is at EBITDA at about 12 to 13% for quarter four, but on an annual basis, it is at 13.3%. Which includes all the operational efficiencies that we have already done. In fact, the way to look at it is, even if you consider those cost pressures, our results have delivered in these times. And we are only looking ahead at a time where things should improve as we move forward. As I said, I would repeat, the contracts that we have are largely with multilaterals and large bilateral arrangements, sovereign guarantees, federal government guaranteed contracts. So that way the cost pass-through clauses are usually there in the municipal contracts, and the industrial contracts are usually very short term. So we'll be able to tie up our procurement and finish the execution fast. So that way we will be able to manage our margins well, and whether it is in the short, medium or long term, we are confident of staying in this guided level of EBITDA margins.
Great to hear that you have a pass-through clause and all in most of your contracts. Okay, just wanted to understand for FY27, what is the kind of order inflow that you're expecting? What is the mix between domestic and international orders? On that front, if you could share some details.
We have not given a number, but we have already given an outlook that we will stay above 3x of our revenues in terms of our order book. Today, we are over 4x, and we are confident of maintaining that. The pipeline is extremely robust. whether it is in India or in the Middle East or in the African region. As I said, the tailwinds are very good for this sector. We're present in over 25 countries, more than 30 countries. We do business development. So that way, opportunities keep opening up. This year, we did about 7,500 crores of order intake. Last year, we did about 5,700 crores. So there is also a clear trend that as we move forward, we will continue to pick up new orders progressively and keep our order book at over 3x. And from an outlook today, we are well placed in a couple of large projects already, whether it is in Saudi or in Kuwait, which we expect to convert. Plus, there is a long pipeline that we see in various stages, which we are working on. So we are that way confident of continuing to grow our order book. From the last year, we already grown it by over 25%. We will continue to endeavor growing that as we move forward as well.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for Wartek Wabag. Well, that was the management. Moving on to our next story, that is passenger vehicle makers are continuing to raise prices as input cost pressures remain elevated. Maruti Suzuki has now joined peers like Tata Motors, M&M and Hyundai in announcing price hike across different models. Let's get in Danish with more details on the same.
Well, Maruti Suzuki has become the latest automaker to announce price hikes, and from June, Maruti cars will get costlier by up to 30,000 rupees, which means that from June onwards, Maruti cars will become costlier between 1 to 4% depending on the model type. And this is for the first time after the previous year's GST cuts that we saw that Maruti is hiking its prices. And one of the reasons why this is happening is, in fact, the reason that the input cost pressure is a lot on the companies, and this is on the backdrop of the West Asia crisis that we are seeing. And because of the West Asia crisis, there is cost pressure not only on the raw material prices but also on shipping of these components, and so there is a supply chain challenge that the industry is facing. Apart from this, if we see, Maruti Suzuki has become the latest company to announce these price hikes. Previously, we saw that Tata Motors, M&M and Hyundai had also announced a price hike a few months back. But now, with Maruti being the largest player, we are seeing that the prices of Maruti cars will be going up. But now the big question remains that in the current scenario, whether the car companies will increase prices in the future or not, because in the current circumstances, we are seeing that there is a huge pressure on the input cost, and even the petrol and diesel prices are rising. And now it is totally up to the car companies whether they will be able to, absorb these prices or pass it on to the customers.
And moving on to our next management on the show, that is Happy Forgings. Now, a steady set of numbers is what the company has reported, and a good surprise on the margin front is what we have seen for the fourth quarter of FY26. What led to this? Let's get in Mr. Ashish Garg, the MD of the company, to explain us. Sir, firstly, to start off with, a positive surprise on the margin front, 240 basis points up on a YOY basis and 70 basis points up on a Q-on-Q basis. What led to this margin surprise in the fourth quarter, and is this margin level sustainable going forward?
First of all, thank you for the show. And regards to the margin, the realization of the company has been stable despite of a fall in the raw material prices, which has led to improvement in the gross margin realization. And that's largely because of the new product mix and the new acquisition of the new businesses, which are far more complex, and industrial and the PV businesses, which are ramping up, which is helping us to improve these margins.
And this 31.5% margin, would that remain sustainable, or would you stick to your band of 29 to 31%?
So we are in an inflationary market right now because of the geopolitical condition. We are looking at price hikes, also looking at a price hike on raw material prices as well as on the input cost, which is raw material is a pass through for us. For inflationary, price, we are in discussion with our customers, and most of which will be passed through. So we expect that the margins will be range bound 29 to 32%, for this year. It can do better. It depends on the ramp up and the pass through of the inflationary costs. But that's what we are guiding for this year.
Could you just give us some idea of by what percentage has your raw material cost increased? How much of a price hike do you require? And how confident are you that your clients or your customers would agree to take this price hike? Because I don't see many auto OEMs taking a big price hike for their final products in a big way.
So if you look at a trajectory for the last 5 years, every time when there is a price hike, it's a pass-through mechanism. And in that case, largely, the cost sheets that we work on are very transparent, and that basis, these hikes are passed on. Certainly, sometimes there is a lag of 1 quarter or 1 month, but there's a pass-through mechanism which is there in our costing acceptance. Similarly, steel is a pass-through for us, which is passed on with 1 month lag. On a raw material side, we are expecting a hike of almost 10%. And on a manufacturing cost side, we are also expecting a hike of almost 14 to 15%. So that's on it. And if you look at our energy cost today is around 7%, including fuel. And power cost is more or less for us is stable. Whereas the energy cost is, whereas the fuel cost is 1%, which is currently has gone up by 0.3, 0.4%, for which we are in discussions. So we are very hopeful to recover these from our OEMs from 1st of April onwards.
Any additional capacity that is coming online in FY27, and how much incremental revenue will that add? Any guidance on that front if you could share?
So we have already started with 10,000 ton forging press line, which started in Q4 of last financial year. We are also starting with 4,000 ton press line very soon, which is dedicated for the PASCAR sector, for which we have incremental orders in hand starting from second quarter onwards. So going forward, the guidance is that we are expecting a high teen kind of a growth in terms of our units or in terms of tonnage growth, whereas the inflationary growth will be additional to this.
I believe you have around 50 to 55% of your market share when it comes to the CV segment, and I believe the CV segment contributes around 37% to your top line. There are talks that the CV upcycle that we had seen might have just topped out. Any signs that you're seeing?
Our current market share on the CV side is around 32%, and it is expected to grow up to 42% in this year. And that's largely on the work that has been done by the company in the last 2-3 years by acquiring these customers where ramp up is happening now. So they'll probably help us in the growth. As far as PV is concerned, over there as well, we are able to increase our market share from in various areas. And on the farm side, we expect a market share growth of almost 4 to 5%. In terms of the FADA, retail level sales that has come for April, that has actually surprised us, where MHCV growth has been around close to 15%, whereas farm equipment growth is close to 22%, which clearly shows there is not enough inventory in the pipeline. So, as far as production is concerned, we expect that production rate will be good in this year.
Okay. And any impact on your export orders that you have seen because of the recent crisis, any delays in shipment? And I believe you have around 7 to 8% exposure to the US market. How much can that increase over the next couple of years?
So our direct exposure to the US market is around 4 to 5%. And we expect this exposure to North American market will grow because of the new PASCAR program starting in this year from second quarter, which is largely for North America. So we expect this to be in a range of, going forward in a range of 7 to 8% for this year. And with the industrial businesses improving, this will further grow.
Okay. Well, thank you, sir. Thank you for joining us and giving us the way forward. Well, that was the management of Happy Forgings expecting mid-teens growth, revenue growth going forward. Well, that's all we have on the show today. Stay tuned and keep watching NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we...
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the profit pit with all the action in the markets today. Sharad, good afternoon. You know, it's interesting to see how the rupee has now gone below that 96 level from the positive side. So there is that appreciation that has come in. We're talking about the RBI intervention. There is a RBI dividend that is slated to be announced as well to the government, and a whole host of stocks which are moving on the back of earnings. What is the market mirroring right now?
Well, good afternoon, Hiral, and you're right, the market is mirroring strength, and of course this technical strength is coming in. A good opening, and it was sustaining when it comes to the markets, and a little bit correction, but nevertheless it's still up 0.5%. But Hiral, the magic is in Nifty Bank. Look at that technical setup, it's better than Nifty. And there is a sentiment, you know, being aided. You spoke about RBI as well. Some buzz flows also coming in that there might not be a rate hike right now. So it's kind of relieving the banking stocks. But let's get into more details. Is the market factoring something more? Apart from the domestic cues which I'm talking about, is there some optimism happening on the US-Iran talks? That's something to watch out for. But as of now, the momentum is strong for the benchmark indices, and hopefully it can sustain going ahead. That's what the options data is suggesting. The Nifty short-term resistance where the bounce has happened, actually from the top, actually it's at 23,800. And also let's look at the other key factor as the Nifty Bank's technical setup. That is showing a good strength, and a good volume buying is also coming, at least in the mid-cap banking names as well. Value buying continues in small and mid-caps, and that is a healthy indicator for the overall markets. A good breadth coming in when it comes to the buys. There's a buzz on no rate hike, and this is aiding the sentiment for the banking as well as the other financials also. That's why these are the top sectoral gainers in the day's trade also. But let's look into something more. Rupee below 96, RBI intervention, and for the second straight day, Hiral, we can say the rupee is strengthening. So this is of course aiding the sentiments, and the global yields continue to cool off for the second straight day. We saw the Asian markets, and now we are seeing the Indian markets as well. But nevertheless, if you are a trader, avoid large trades or carry over the weekend, because still clarity needs to be there. So this is a very important focus area. But remember, Q4 earnings is something which we are all tracking. We are at the fag end of it. We have Hindalco, Sun Pharma and Eicher Motors which will be coming out with the numbers, and near the end of the Nifty earnings also. So we'll be tracking the earnings as well.
But overall, the sentiment here is positive. Hopefully, it should continue, especially on the rupee intervention front from RBI, and some more positive momentum can come in going into the weekend.
Absolutely. That's why Monday will be very important to watch out for. Thank you, Sharad, for that. Let's look at the watch list. All your new age companies, Meesho, Nykaa, reacting today in trade. Nykaa obviously on the back of numbers, but Meesho is up really 11% in the last 1 month. You have Ola Electric. The first operating cash flow positive quarter is what they've reported. You have EMS companies which is seeing fresh buying like a Dixon and Keynes. Strong earnings on the back of which JSW Cement is up in trade. You had a block deal as well there. Viatech Wabag is in focus on the back of an order win. Paytm, a 964 crore block is what we saw at a 3% discount. You're talking about a central bank which is under pressure on the back of the OFS announcement. And Sun Pharma, Max Healthcare, Lakshmi Dental, Ramco, all of these companies which are reacting to numbers. So that's what we are watching out for in terms of the watch list today. But let me head across to Sharad to talk to us about the companies which are in focus and take the rapid fire with Krupali Prakash Kumar Nakar, independent research analyst.
Thanks a lot, Hiral, for that. Good afternoon, Krupali. It's always a pleasure to have you at NDTV Profit. We'll start our rapid fire segment, and the first stock is Meesho. Your views on it? Of course, stock has been volatile, but is there any good risk-reward ratio or a trade to be made?
So Sharad, I believe that Meesho's path has been negative since a long time, and it has a high PB ratio that is 17x more with no earnings. So fundamentally, stock is not performing well. If we see technically, the stock is down 24% from all-time high, 52-week high, if we consider. So my recommendation to the investor who already has this stock can hold, and new investors should wait for profitability to come into the market.
Right. There's an interesting funda techno kind of a take coming in on this. It's a hold if you're already having Meesho. But let's look at the EMS players. We have Dixon Tech, Keynes. There's a good momentum happening here. Of course, this technical strength is also coming good. On a weekly setup, how does this look on the charts?
So if we see on a weekly setup, the stock has declined 37% over past 1 year. So this is significantly underperforming Sensex with 9.55% drop. So it was all-time high, 18,500 up, and now it is almost around 11,000. So it's kind of in a correction phase. So it may find a support, but the momentum looks weak technically. Fundamentally, stock is performing very well. ROE, ROC is exceptionally good. So my recommendation would be buy on dips for long-term investor. And there is a possibility of 28% revenue growth and 33% PAT over the full year.
That's pretty interesting. Krupali, Viatech Wabag, of course, a good order coming in as well. Stock buzzing well on the volumes also. Your view on that?
So Viatech Wabag is consolidating income from 40,000 crore and PAT is 370 crore. So fundamentally, if we see, the order book is robust, but long-term revenue growth has been sluggish. So low promoter holding is a structural concern in this particular stock. If you see technically, the stock has corrected from 2050 to 1400 and now it is stabilizing. So my recommendation would be that buy for the long term, as water is a theme, is a structure. Top 3 global desalination player it is, and stronger order book. So valuations are reasonable. My target for the stock is 1800 to 2000 over next 12 months.
Right. And Krupali, your view on Paytm? Of course, the selling pressure coming in on the block deal. But do you think now Paytm, after a good rally recently, will it come under consolidation phase right now?
So for that, we need to watch on ROE improving. So currently it's dragged historically. Stock has surged 55% since last 1 year, and it is trading above 52-week high. So I have a target somewhere around 1376 with a high of 1600. So my recommendation on Paytm would be buy, as profitability inflection is real. First profitable year is a re-rating event, and for a new investor it will be a nice entry. Within 12 to 18 months we can see Paytm somewhere around 1400 to 1600.
That's an interesting target coming in. What about central bank? They have launched their OFS also, and today itself is for non-retail and for tomorrow it's for retail investors. Any view or any trade is there to be made here?
See, fundamentally, central bank is doing really well. The asset quality has improved. The NII is growing. but one-off tax hit dented in Q4. So low promoter kind of is a problem, low promoter. And technically speaking, if you see, the stock has been in a persistent downward trend. So it is underperforming. So it's trading near 52-week low. So there is no clear reversal sign yet technically. So if investors already have the stock, they can hold it. New investors should wait for a little bit upward movement. After that, they can start investing.
Right, that's a pretty interesting take coming in. We are at the end of the rapid fire round right now. Over to you, Hiral. What are the trending stocks you're picking up?
Thank you for that, Sharad. You know, yesterday and the last couple of days, you've seen that Tech Mahindra, which has always been on the list there. And let's see what's actually trending today. If we can just have the Google trends and the stocks which are trending on Google on the screens to understand which are the stocks that we should be watching out for as we speak. Infosys, interestingly, KPIT Tech Mahindra continues there. HCL Info, so a lot of IT companies which are making it to the list today along with the Bharat Forge. Kripali, Hiral on this side, from a Infosys, KPIT Tech, you have a Tech Mahindra and a Bharat Forge. Anything that you like on the charts?
So I would like to go for Infosys because I believe that Infosys will definitely bounce back, and they have come up with the new AI softwares and the company is working on developing AI models. So I believe that Infosys would do good in next 1 year.
A pretty interesting take coming in from Krupali, but consumption space has kept Mahima busy all throughout. Lot of earnings coming in, and I'll be keeping on coming to you. The first one is, of course, Varun Beverages. Interesting news flows coming in. There's a contract extension, but is there something more to it?
Yes, so I think there is more to it, and as you rightly mentioned, it's a contract extension with PepsiCo, but with a caveat this time, and a positive one, because what they've said is that now the company, they've removed the condition of, kind of restricting Varun Beverages from carrying, out any business beyond PepsiCo. So they can now do other businesses other than PepsiCo. They've recently, in fact, inked partnership with Carlsberg in Africa. So basically, this means that, of course, first one, long-term partnership with PepsiCo still remains intact. Plus, this provides them flexibility to explore other consumer categories. And like I said, they've already announced the beer business with Carlsberg in Africa. Jeffries has, by the way, maintained buy with a target price of 615. What they're saying is that more positively, this opens up opportunity for the company, and this is good for Varun Beverages' long-term, growth as well. And the company has significant retail presence and execution capabilities to kind of take up such activities as well. And that's why we're seeing the buzz on the counter.
Thanks a lot, Mahima, for that. But Hiral, I just wanted to understand and get a little bit of perspective on the ITC and other stocks which you are tracking.
Yeah, I mean, ITC, I know Mahima takes it beautifully, but overall, the revenues have come in below estimates, and this has largely been impacted by the cigarette revenue as well. Your EBIT and PAT has been a beat, largely led by the price hikes that we've been talking about. FMCG growth has been intact. Agribusiness impacted by the West Asia conflict, and you have the paper business where the EBIT has improved substantially. Q1 FY27 is when the impact of the sharp tax hike will actually be visible. So that's going to be a quarter that we should be watching out for. Citi has maintained a sell. They have a target price of 290 on the counter. Let's pull up the stock and see what's happening there. Jeffries has a hold. They have a target price of 350. They're saying that the price hikes are only partial while volume and margins will be affected, and the stock is likely to stay range bound in the near term. Macquarie has maintained a neutral and they have a target price of 330 on the counter, and they're saying that ITC could see a sharp profitability hit in the first quarter of FY27, and that's the reason why the stock is also under pressure. So Sharad, that's with regards to ITC, but I think a lot more that we need to watch out for. I mean, Honasa, Varun Beverages, everything that we're talking about.
Yes, it's largely looking like a consumption-led news flow coming in. And again, we are back with Mahima. Interesting numbers from Honasa also. They changed the business model also, the inventory part, right?
Yeah, so that had happened a few quarters ago, and this is the quarter where now they're starting to see benefits of that coming in, right? Q4 business update was giving a pretty good idea of how the business has fared this quarter, and that's happened so, right? Overall, highest ever, revenue, EBITDA as well as PAT is what they've seen this quarter. Margins have reached the highest ever levels as well. Mamaearth has delivered a teen growth in terms of Q4 stands, and overall overall further offline distribution has been strengthened. Plus, the focus categories have grown by about 35% odd. Revenue has seen a growth of 23%, EBITDA at 77 crore versus that of just 27 crore in Q4 FY25. Margins at 11.7% and net profit has almost more than doubled at 69 odd crore. Now, in terms of guidance, this is an important one. I think that's why the stock has been buzzing, because they've said that they are expecting a high teens revenue growth going forward as well, and 100 basis points annual EBITDA expansion is what the company is expecting. And that's why I think a lot of brokerages have kind of gone ahead and hiked their target prices for Honasa as well. So this is the overall view of how Q4 has panned out for Honasa.
Thanks a lot, Mahima, for that. Of course, the consumption space will keep you busy for this fag end of the earnings season. But now we are joined in by Gaurang Shah. Good afternoon, Gaurang. It's always a pleasure to have you. We are discussing a lot of consumption names, be it Varun Beverages, Honasa, and Hiral was also discussing ITC. Anything looking good? Of course, at times, the valuation is something which is a question mark at times which you raise on the consumption names. But anything here for a trade?
Well, so thank you so much, Sharat, for having me on the show. Good afternoon to all the viewers of NDTV Profit, to you and your entire team. A small disclosure, all recommendations that I'll be sharing with you this afternoon on the show, Sharat, they are part of our fundamental search team recommendations from a long-term point of view. Our company, Jyojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, out of the names that you mentioned, ITC is something that we have been positive for a pretty long period of time. Yes, there have been recent news flows which have actually had a negative impact in terms of the hike in cigarette prices. First for the longer length one, then now they're talking about smaller as well. So this may play a little bit of short to medium term kind of an overhang, but as we all know, ITC has a diversified business. And we expect the personal care as well as the agribusiness to do well. The only problem remains is in terms of the scarcity of monsoon, as mentioned by the Met Department, 92 to 94% long-term average is shortfall. But other than this, I think other companies that have delivered numbers and where we feel there is a lot of positivity, the two companies are Tata Consumer and Godrej Consumer, Sharad. We remain positive over there. As far as Honasa Consumer is concerned, I think it's been after a very long time that they have delivered this set of numbers. The only thing that will remain to see is how long can they deliver consistency, Sharad, because this is a highly competitive business, and to survive, you need some innovative business strategies.
Okay, so innovative business strategies is what is working for a Honasa probably. But moving on, Pharma Pack is in focus. In fact, healthcare is in focus as well. We have Aurobindo Pharma and Max Healthcare that we're going to talk about. Varsha's here. Varsha, Aurobindo Pharma. I mean, the question in Q4 was what happens to US segments in terms of business. And that's what is a downer for Aurobindo, what I believe. What are the key takeaways there? Because the stock is down about 5 to 6% right now.
Yes, absolutely. And the point over here is, of course, because of Revlimid, the US has seen that pressure. But the numbers were below estimates. Now, if you see US business that dipped or slipped sharply, revenue overall was in line, though was with Bloomberg estimates, but EBITDA margin, if you see, came at around 20% versus estimates of 21%, and overall growth remained subdued, and there was no benefit of Pen-G seen in this quarter. Onto the US business, well, it was around $387 million, which was below estimates. Revenue declined 8% quarter on quarter in constant currency, and this decline, of course, was led by seasonality impact and the lower Revlimid sales, which is across the pharma chain. Base business, if you see, remains stable despite declines. ARV business, though, was up 6.4% year on year. Europe grew 30% year on year. But overall, if you see the business impact, US weakness and seasonality led to subdued growth, and operational performance remained largely stable. But on con call, management did say that they are expecting $2 billion of US revenue in maybe 2 to 3 years, and are expecting double-digit growth in Europe. But overall, if you see, the numbers did not meet estimates, and hence you're seeing the stock is actually down almost 6% in trade.
Thank you so much for that. So that's Aurobindo Pharma. I'm just thinking whether we should be talking about Sun Pharma next, or should we be talking about Max Healthcare? But because Max Healthcare has also reported numbers, Let's actually ask Varsha what is the view there, because clearly the stock under pressure, there has been a downtick there, and it's mainly the oncology business. However, some bit of correction coming in there, Varsha.
Yes, and that is because of oncology business only. The change in the mix has led to, subdued numbers, I would say. The growth was actually impacted by adverse case mix and oncology decline. Margins were under pressure due to pre-operating cost and hiring. We have seen a lot of hiring because of, a lot of expansion coming into picture. Expansion phase has led to near-term, drag on profitability and higher cost, and tax impact has limiting PAT growth despite revenue growth that the company has seen. Now, on to the case mix impact, because this is important. If you see, oncology share declined to 21% versus 26% last year and 24% in last quarter. So there's a huge decline in the oncology business, and hence we have seen this subdued numbers because oncology is a higher margin business. This decline was due to discontinuation of select chemotherapy drugs for institutional patients. Ex-oncology revenue grew 15% though, and the shift in mix reduced contribution from high value treatments. Lastly, on capex and expansion plans, they have acquired 58% stake in Kalinga Hospital, and they have approved 1400 crore investment for 712 bed hospital in Lucknow. So overall, because of the change in mix has led to the pressure in Max Healthcare stock.
Okay. Thank you so much for that, Varsha. Stay with us. We may come back to you on Sun Pharma. But Gaurang, Max Healthcare, which has reported numbers, Aurobindo Pharma as well. Post the earnings, what is your view? Would you be a buyer?
Hi, Hiral. Good afternoon to you as well. So we remain positive on both Max Healthcare and Aurobindo Pharma. With respect to Max Healthcare, as Varsha was pointing out, because of capex and more employees coming in, this is a short to medium term kind of an hangover, and of course the drag on oncology business. But long term, our sense is that pharma and healthcare would be in spotlight for all the good reasons.
Well, Varsha, interestingly, Sun Pharma is also in focus. Numbers will be coming out today. Varsha, what are you picking up from this? What are the expected numbers?
Overall, when it comes to numbers, revenue is expected to rise 12% year on year. EBITDA may rise 6%. Well, there may be some bit of pressure in margins at 27% versus 29%, and net profit may rise 28%. But overall, if I were to talk about the US business, the US is expected to have $500 million of sale, which is up 5% quarter on quarter. Specialty business, because that's what, so every business has a story, and specialty is the story for Sun Pharma. So global specialty sales are expected at $400 million, growth of 36% year on year, though growth will be driven by Unloxit launch and supported by Lexilvi, and the strong prescription growth in Illumia, which is again their specialty product. Now onto the geographical expansion, India business is expected to grow 13% year on year, and growth will be supported by recent launch of generic semaglutide, which is a weight loss drug, and of course our ROW and emerging markets are expected to grow 16% year on year. US is expected, the sales are expected around $500 million. So you should keep a watch on this. Growth will be supported by specialty and innovative medicines, and quarter on quarter performance is expected to be flat or slightly lower. Lastly, key monitorables, of course, ramp up in specialty portfolio, sustainability of Illumia growth, and US business stability are some of the key things that investors should keep a watch on.
Okay, thank you for that, Varsha. So that's with regards to where Sun Pharma goes. Gaurang, any expectations that you have from Sun Pharma?
So I think the stock was in news for all the good reasons because of the acquisition that they did some time back. And of course, at that point of time, market thought that they paid a larger price. But then we had the PC, and the management elaborated their business strategy going forward with this kind of acquisition and how value accretive it's going to be. Again, from a short to medium term point of view, there may be a little bit of subdued numbers, but Sun Pharma also, as a disclosure, features in our buy side list in the pharma universe.
Well, now let's move on from this space to the cement space. Interestingly, JSW Cement has come out with its numbers largely the numbers seem to be decent enough. And to get more perspective, we are joined in by Puneet. Puneet, this quarter for the cement companies were largely decent, right?
Most certainly. I think for JSW, the big uptick was because of a strong growth in EBITDA on a year-on-year basis, and hence you're seeing the growth for the company as well. When you look at the numbers, revenue up 11%, but EBITDA was up 52%, and hence the margins at 19.3% was very strong compared to 14%. Net profit also has climbed almost 8x to 371 crores, but when you look at the volumes, up 7% in this quarter, so hasn't been that runway growth, but cost control has helped the company report the higher margins. Cement volumes are up 11% and GGBS volumes are up about 5.4%. When you look at the EBITDA per ton, the total one is at 915, but very interestingly, I think MK had come out with a note where they said that they've not given a breakup between the two segments, but the grey cement EBITDA per ton is 715, so it's still lower in the whole space as well, and hence you've had the new plant, Nagaur plant, come in, and that should help the utilization. But brokerages have been split. So Jeffries has a target price of 150 rupees per share, where they feel they are building in a very strong 19% volume growth in FY27. But MK feels that given the lower EBITDA per ton, their valuations of 125 rupees per share is sufficient at this point of time.
Thanks a lot, Puneet, for that analysis. But Gaurang sir, just wanted to understand for JSW Cement and other cement companies also, is there any kind of, good risk-reward ratio looking good for any cement companies you are tracking, and also your view on JSW Cement?
So, Sharad, this is not a sector that normally a lot of people speak about, but we've been positive on cement for a pretty long period of time, and we've got investment ideas across small cap, mid cap, and large cap. And our understanding is that the consumption of cement is not only gone up in the last couple of quarters, but it is likely to go up as we go into the future. And the primary reason driven by the spend in terms of infrastructure creation and modernizing the existing infrastructure by the government at the center. Then you have state level governments who are doing a lot. You have pickup in terms of real estate. And one more thing that I have personally felt, Sharad, is that there is a lot of consumption of cement in semi-urban and rural India from, those kacha makan to RCC structures. So the drive is going to come in from there. Second point we believe is that because of operational efficiencies, profit margins could possibly better. And one more tailwind positive that we are assuming is a revision of cement bag prices, provided, of course, the CCI doesn't feel that there's cartelization like it was some time back. We have investment ideas. So Sagar Cement is from the small cap universe. From the mid cap universe, we like JK Cement, Ramco Cement, Shree Cement. Amongst the large cap boys, we are positive on Ultratech, ACC, Ambuja, and Grasim.
Right. So these are the important cement picks coming in from Gaurang sir. And also I checked the output data for April. The cement production is strong. But of course, an interesting development coming in from an FI, that's called Capital Group, especially on its views on Adani Group, and their investment is increasing. What are the more details about it? We are again joined in by Puneet. Puneet, what are the details of this?
It's a $2 billion stake that they've built up across a bunch of companies as well. So we'll get you that perspective. So they've increased stake in Adani Group companies, and this has been, acquired in across 3 Adani Group companies. The first one is Adani Ports, Adani Power, as well as Adani Green. Now, on May 5th, Capital Group actually purchased nearly 2% stake in Adani Ports. That was almost 7,400 crores in terms of stakes, or $776 million from the open market. They've also accumulated roughly 1.5 to 2% stake in Adani Power as well as Adani Green as well, and this is showing you some shift essentially post what we've seen in some update essentially from the US court cases amongst others, and towards the next growth phase of both these companies. So that is a positive move at this point of time.
Thanks a lot, Puneet, for that. And we are running short of time. Gaurang sir, just one, if you had to pick up, 2 or 3 important names from Adani Group, what would that be? And of course, there's a standard disclaimer also on them.
So a disclaimer from my side as well, that we currently don't have coverage on Adani Group of companies, but fundamentally strong companies. This is not a recommendation by any ways. I think Adani Enterprise, Adani Power, Adani Ports, these are some of the companies which have very strong balance sheet, and the prospects of increasing the business and translating into earnings is looking very strong.
Gaurang sir, thank you very much for taking out your time, and always a pleasure to have a chat with you. And also, that's all from me, Hiral, and the entire show, entire team who has put the show of trending stocks. But I just like to point out one thing. Our producer, Alisha Ali's, it's the last working day, and she has been a hell of a person and doing important, production for this show. So a shout out to her. And that's all, folks. Stay tuned to NDTV Profit and keep watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own.
For the very first time, you were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months, and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
It trades near the day's high. Auto and banking stocks lead gains while media and pharma indices lag. Ahead of his first visit to New Delhi, US Secretary of State Marco Rubio said Washington wants to sell India as much energy as they'll buy as uncertainty grows over disruptions in the Strait of Hormuz. The state-run Indian Oil has directed its dealers not to impose any restrictions on the sale of petrol and diesel unless specifically ordered by state governments or local authorities. The advisory comes at a time when fuel demand has surged sharply across retail outlets. And on to an NDTV Profit exclusive. All institutional investors have reportedly filed consent letters confirming participation in the much-awaited NSE IPO. Sources also tell your channel that several retail investors have submitted their consent letters as momentum's building steadily around the exchange's potential market debut. Delhi NCR, meanwhile, recorded its warmest night in 14 years as scorching heatwave conditions continued across the region. The IMD has issued an orange alert amid rising temperatures and prolonged hot weather. And amid mounting pressure over alleged illegal bike taxi operations, executives from Ola, Uber and Rapido have reached the Transport Ministry for crucial talks with the minister. The meeting is coming in as the companies face demands for App Store removal and a wider regulatory purview. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well, the top buzzers at this hour, and all while you grab lunch. But before we do that, let's take a very quick look at the markets, and it's looking like a solid picture right now when you talk about benchmarks hovering very close to today's high. That's Nifty as well as Sensex for you right now. When you talk about the entire sectoral picture as well, that's also looking quite sharp for a bunch of sectors across the board. Let's take a look at that as well, because you do have just a few sectors among the major sectors that are holding on to a tinge of red as we speak. And when you take a deeper look at the sectoral picture as well, you're looking at Nifty IT, that's a little bit of a drag right now. You're looking at pharma as well, that's a little bit on the back foot. That said, when you talk about financial services, auto, Nifty, rural, realty and consumption, all of those sectors are holding up quite well and resilient for themselves. When you talk about the entire sectoral picture as well, it's actually a Honasa consumer that's buzzing away in trade. About 11% uptick coming in on this particular counter. And when you talk about some of the other counters as well, something like Deepak Fertilizer, Endurance Tech, all of those counters are buzzing away, up anywhere between 5.5% to about 11% for at least something like a Honasa consumer. But when you talk about the Nifty 50 pack as well, you do have Shriram Finance, Wipro, Asian Paints, Axis Bank, Trent, even some of the heavyweights like HDFC Bank and ICICI Bank in good shape as well. And it's actually the banking pack or the financial services pack that's doing quite well for itself, as you can very clearly see on your screens as well. Among the losers on the flip side are some of the names coming in from IT. There's something like an ITC, Sun Pharma, BEL, Coal India, all of those counters on the back foot. That said, let's quickly take a look at the entire commodities picture as well. So when you talk about oil prices, you're looking at elevated levels, and when you talk about gold, that's remaining steady. So that's largely the kind of pictures that you're looking at for both of these commodities right now. And when you talk about Brent, as you can clearly see on your screens, $104 a barrel for Brent is something that is managing to sustain right now, close to $105 a barrel. And when you talk about US WTI, it's hovering very close to that $98 a barrel level. And that's also something that's proving to be quite the key support level as well when you talk about Brent prices. And we'll keep getting you some more insights as well. And let's start with just that, because Kunal Shah, Head Commodities Research, Nirmal Bang, is joining us right now on the show. Thank you so much, Mr. Shah, for taking time out and joining us, and a very good afternoon. It is looking like a decent afternoon when you talk about the commodities complex as well. There's a little bit of a rebound that you're looking at when you talk about oil prices. And gold seems to be holding its ground right now. Firstly, how are you looking at the oil prices at some of those elevated levels?
I think with whatever is going on right now from last 8 to 10 days, what I'm able to make of is that we are at that point right now where it seems that US wants to make a deal with Iran as soon as possible, because 2 months down the line, there is a midterm election. And if this continues, if oil goes to 120, 140, I think just imagine what's going to happen. So I think right now, the likelihood of US making deal with Iran is very high, and they may give some concessions to Iran or may have some loose ends in the deal where it is more beneficial for Iran. But the deal is very much there. It is going to take place. So maybe 6-7 days, I think it should take place, and that would lead to fall or correction, short-term blip in the oil prices. WTI can go down to $90, Brent can go down to $95 per barrel. So I'm not very optimistic about the oil prices outlook right now, and I'm of the view that the deal should be there by 6 to 7 days.
No, absolutely. And Mr. Shah, since you said that you're not optimistic about the outlook going forward for oil prices, I also wanted to get a sense of what you think about the damage to some of the supply infrastructure Because that has been a key talking point aside from the Hormuz disruption as well. Do you think that the supply concerns seem to have dissipated? Is that the sense that you're looking at when you talk about oil prices?
I think the supply concerns will continue to be there even if there is a peace deal or the Hormuz passage. If Iran and US both opens up, so it's going to take a lot of time for these lost supplies to come back to the market. Maybe 3 to 6 months down the line, we will see at least 50 to 60% of the supply. But sentimentally, if there is no damage or if there is a good passage where the ships can freely enter and leave, I think that is something world wants to see rather than anything. Because after we have seen ceasefire, we haven't seen any major escalation from the both sides. So I think it's just a matter of time where some deal which is agreed by Iran and US both, that to be signed on, and I think that is going to take place, and that's the reason why oil prices have been under pressure from last 2 days and is going to remain under pressure going forward in next week also.
No, absolutely. And, that makes perfect sense in terms of how you should be looking at prices as well. And I also wanted to try and understand what you think about gold as well, because it's been remaining in some of those range-bound levels that we've been looking at. It's a narrow trading range, no doubt. But do you think that the fundamental setup seems to be good?
See, at this point, a couple of things which are not good for gold is slack Indian demand. India's value demand have remained weak. India's investor demand has gone down. And after our Prime Minister have recommended and made an appeal to the Indian nations, Indian nationals, that you should not be buying gold for 1 year, we are seeing a sentimental impact. There has been a constant sell-off in gold ETF. We are seeing constant pullback everywhere. So I am of the view that we are not going to see any sharp increase in demand, and that can lead to some fall in near term for $4,400 are kind of levels where gold should settle. And going forward during the end of the year, we can see gold settling at 4,800.
No, absolutely, and that makes sense in terms of those levels as well. But if somebody is waiting by for fresh buys
So somebody, if they want to buy gold, they should wait a bit, and rather than jumping it and buying right now, wait for the correction. Gold is already expensive by 8 to 10% because of the hike in duty from 6% to 15%. So if there is a fall of gold in international market by $100 to $150, that would be a great opportunity again to enter a long position for the 8 to 10% CAGR return for next 2 years.
No, absolutely, and thank you so much for putting all of that into perspective as well. But going forward as well, in terms of the near-term perspective, what do you then expect for gold prices in terms of the ranges? What are the key levels that, you're looking at? That's something that, we've right about managed to also talk about with Mr. Shah as well right now. So some of those insights that he was giving us right now when it comes to gold as well as oil. So wait around for fresh buys. This is not the time to be investing fresh when it comes to bullion. That's the word coming in from Mr. Shah. But on that note, it's time for a very quick break. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization.
Yeah.
And that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So, what's the worst that can happen?
What was the
That
worst
mutual fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all.
Welcome back. Thank you so much for staying tuned in. You're tuned into Lunchtime Trades, and it's time now to take a look at the pharma space right now, because you do have a very bullish note coming in from Bernstein that has initiated outperform on not one, not two, but 3 counters. Zydus Life, Lupin and Sun Pharma are the counters that are making it to their radar. Let's also quickly talk about some of their target prices as well. So about 1,400 rupees thereabout. For Zydus Life, Lupin, you're looking at 2,700 rupees. Sun Pharma as well, 2,200 rupees. And these are the counters that they've maintained and initiated, in fact, an outperform on. But they've also initiated a market perform coming in on Aurobindo Pharma. Let's also talk about some of the triggers that they've broadly highlighted. So in terms of triggers, they're talking about how niche therapies, specialty are really driving biopharma growth right now, incremental innovation, and they're really backing some of those innovation-led counters. They're saying that innovation is going to be building rainmakers when it comes to biopharma. They're talking about quality culture and agentic AI that's going to be powering innovation ecosystem as well. And let's also talk about valuations, because this is pharma that you're talking about, and Bernstein, in fact, is saying that these valuations right now are quite attractive. Policy uncertainties are seeming to wind down right now. So if that's a concern that's kept you away from the entire pack, Bernstein is in fact suggesting that they seem to be winding down right now. Now, Zydus growth is going to be accelerating on the back of innovation and wellness. For Lupin, in terms of the triggers, they're talking about innovation yet again in terms of how it's going to be driving the turnaround story going forward. And Sun Pharma as well, that's going to be continuing EPS growth. But with that in mind, let's also move on and talk about your salary structure. Now, that's going to be getting a quiet but significant reset right now as new labor rules push companies to raise the basic pay component to at least 50% of the total salary. So that means higher PF, lower take home, and more money locked away for the long term. In fact, Mahima is joining in to break down what all of these calculations really mean for you.
Right, so Shansi, as you rightly mentioned, the new labor code, I mean, we've talked about this, that companies will have to ensure that the basic pay is at least 50% of the total salary. The government basically is trying to, help with the mentality of saving, strong saving going forward. Earlier, what used to happen is companies used to keep basic pay low, more money came through allowances and lower PF deductions used to happen. But now basic salary goes up to 50%, PF contribution also rises automatically, and more money gets locked away instead of coming to your bank account. So it'll go to of course your savings account and not to your bank account. So your CTC may rise, but enhanced salary might not rise, and that's the reason as to why this time a lot of increments have happened, but the enhanced salary has come down. Many employers are seeing salary hikes on paper, but very little increase is actually being credited to their bank accounts. Overall, companies are increasing PF contribution, reworking allowances, moving some payouts to variable pay, and including more long-term benefits inside CTC like gratuity pay as well. So this is the overall view of what's happening and why you are seeing less credit as compared to your hike that you've received.
All right, then, thank you so much, Mahima, for joining us with all of those updates. So that's about your paycheck, but let's also move on from your paycheck to your stock portfolio. And if you're looking at some of these earnings counters, let's also tell you which ones you should be watching out for this afternoon as well. In fact, Shivam is joining in with that entire list right now. Shivam, which are the earnings counters that you're looking at right now?
Well, yes, the first stock in our list today is Honasa Consumer, as the company has reported a strong set of numbers for Q4. In fact, the performance of the company has also improved, with their margins reaching to their highest ever levels in past. And the brand, the Mama Earth, has also delivered a strong set of returns and a growth. Now, coming to the offline distribution, that has also seen a stronger growth in terms of the offline distribution network, and the focus categories have also grew by around 35% and more. Now, coming to the financials, the revenue of the company has been up around 23%, and EBITDA margin has grown to around 11.7% from 5.1%, and profit stands at 69.2 crores, which is a growth of 178 crores. Now, next stock is Max Healthcare, and the stock has reported a weak set of earnings for Q4, and the bottom line has missed the expectations that was been on the profit side. Now, the growth was impacted by the adverse case mix, and also there was a segmental decline in the oncology performance. In terms of margin, the margins have been under pressure due to higher pre-operating cost and hiring, and also as the company is in expansion phase, that has led to the near-term drag on a profitability, and higher cost and tax impact has been the key draggers for the profit in this quarter. Last stock is Aurobindo Pharma, which has also reported a weak set of numbers, as the US business has performed lower. The US business has numbers have dipped sharply and were below the estimates, with their revenue being in line with the estimates, and margin has been up around 20%. Now, there has been also the decline in revenue, which was mainly due to the seasonality impact, and the base business has remained stable despite this seasonality impact. Now, the revenue of the company was up around 5.6%, and net profit has also been seen at around 2% up.
No, absolutely, and thank you so much, Shimam, for joining us with all of those updates. So something like a Honasa Consumer is buzzing away in trade, 10% uptick coming in on that. Even JSW Cement is doing quite well for itself, 8.4% uptick right now. And when you talk about the revenue as well as profit, you've seen quite the surge coming in for the fourth quarter. In fact, Puneet joining in with all of those updates here.
Well, thank you for that. It's definitely good set of numbers from the company as well. And there's also been a large block deal that happened today morning, and that's also leading to that price move today. But when you look at the numbers, the revenue was up around 11%, but the EBITDA, because of cost savings, is up almost 52% for the company, and the margins hence at 19.3% is up 530 basis points in this quarter. You've also seen that net profit jump almost 8x to 9x at 371 crore versus 34 crores in the same time last year, leading to that positive momentum as well. But when you look at the picture in a more granular detail, you saw the volumes at 3.99 million tons. Specifically, the cement volume out of that was 2.35, and GGBS volume was roughly around a 1.57 million ton as well. That increased by 5%. Cement volume up 11% in this quarter. Now, because of that, the realization also, the company doesn't report in terms of bifurcation, but at 915 rupees EBITDA per ton, MK feels that almost the grey cement out of this is 700 rupees per ton. So it's still at the lower end essentially of the listed players as well. Hence, there could be some improvement of that in the near term. When you look at one of the bigger updates, the Nagaur plant came on stream. That's 3.3 million ton added in capacity as well. And brokerage is a little divided at this point of time. So Jefferies has a target price of 150, and they feel that the management's cost-saving guidance as well as what they have built in, that the realization-driven beat in this quarter was a positive one, and they are building in the 19% volume growth. But MK, on the other hand, feels that at 125 rupees per share, which is their target price, combines and suffices at this point of time. Hence, they feel that it's enough at 11 times the EV to EBITDA. And in terms of the large block deal, almost 3.1% equity had changed hands, and a large private equity sold their stake. And hence, you're seeing that up move on the price today as well because of another key reason, as I just mentioned.
Absolutely, and thank you so much, Puneet, for putting all of that into perspective. So there you go, that's one counter that you should be looking at as well this afternoon. But let's also move on and get you some other news and updates as well. And the national capital is reeling with the heat wave situation, and afternoons these days have become particularly brutal for people working outside office. Gig workers have said that they're not provided with any heat protecting materials, while the outlet where they wait does not offer water and a small cooler. It doesn't meet the requirements as well. In fact, NDTV's Anushka Garg joining in with the ground report here.
It is almost the end of May and the temperature in the national capital is nearing around 45 degree to 48 degrees Celsius, and in the afternoon the heat is particularly brutal. Today NDTV has reached on the ground amongst all the gig workers who are here, and we are trying to talk to them about how they are managing in this particular heat that everybody is right now facing in the capital. We'll just go straight to them to know what kind of difficulties they are facing on ground. आपका नाम क्या है?
मैम अनमोल।
सर, हम देख रहे हैं कि इन दिनों गर्मी बहुत ज़्यादा पड़ रही है, और क्योंकि आप लोग हमेशा बाहर में ऑर्डर्स वगैरह डिलीवर करते हो, 7-8 मिनट में आप लोग को आसपास के इलाकों में पहुंचना होता है और ऑर्डर डिलीवर करना होता है, तो कितनी प्रॉब्लम्स होती हैं?
मैम बहुत प्रॉब्लम है, ट्रैफिक भी देखना पड़ता है, वहाँ जाके कस्टमर भी कई बार गुस्सा करते हैं कि यहाँ कहाँ रह गए, और गर्मी भी बहुत पड़ रही है मैम। यस सर।
तो कुछ फैसिलिटीज़ मिलती हैं आपको?
मैम वैसे हाँ, पानी भी है, कूलर भी, इतनी प्रॉब्लम।
पानी और कूलर
हाँ स्टोर पे है, अवेलेबल है।
लेकिन जब आप बाहर निकलते तो उसके लिए कुछ आपके पास गियर्स है, सेफ्टी गियर?
ऐसा कोई भी सेफ्टी नहीं है।
ऐसा कुछ भी नहीं?
नहीं।
आपका नाम क्या है सर?
वीरेंद्र कुमार।
सर, हम देख रहे हैं गर्मी बहुत ज़्यादा पड़ रही है, और ऐसे में जो लोग बाहर काम करते हैं उनके लिए काफ़ी ज़्यादा मुश्किल हो जाता है कई बार सर्वाइव कर पाना, बीमार पड़ते रहते हैं, हीट स्ट्रोक जैसी जो दिक्कत है वो लोगों को झेलनी पड़ती है। आप लोग के लिए कितना मुश्किल है बाहर रहना?
मैम मुश्किल तो है, क्योंकि अभी गर्मी बहुत ज़्यादा पड़ रहा है, इसकी वजह से मुश्किल तो बहुत है, तो दिक्कत तो कर जाते हैं। और दूसरी बात है ट्रैफिक बहुत ज़्यादा यहाँ पे लगते हैं, तो ट्रैफिक की वजह से हम लोगों का कई बार वो ट्रैफिक का नियम भी जो है वो तोड़ना पड़ता है। हाँ, तो क्योंकि टाइम भी ज़्यादा नहीं होता हम लोगों के पास।
आजकल 45 डिग्री 48 डिग्री ऐसे तापमान जा रहा है, तो कुछ ऐसा आप लोग को दिया जाता है फैसिलिटी जिससे आप गर्मी से सुरक्षित रह सके?
नहीं, गर्मी सुरक्षित तो बस यहाँ पे कूलर है, पानी है, इसके बाद हम लोग को राइडर के लिए कुछ फैसिलिटी बाहर में है नहीं, हम लोग खुद अपना व्यवस्था करते हैं।
तो सेफ्टी गियर्स वगैरह नहीं है जैसे हम लोग देखते हैं आजकल, जरा हीट प्रोटेक्टेंट्स वगैरह दिया जाता है?
ऐसा कुछ नहीं है, ऐसा कुछ नहीं मिला है कंपनी तरफ से, बस हम लोग अपना सेफ्टी खुद रखते हैं।
कोई एक्स्ट्रा टिप्स वगैरह दोपहर के टाइम में?
हाँ कभी कल मिलता है, बाकी इसका जो रूल होता है इसके हिसाब से मिलते हैं, बाकी नहीं मिलते, कभी नहीं मिलते ऐसे कुछ।
The majority of the gig workers have said that while sometimes they do get opportunities and they do get tipped to work in the afternoon hours and it gets paid, but sometimes they don't even get the extra concession for working in the brutal heat that can be seen in Delhi NCR nowadays. We are outside a similar outlet of Zomato and Instamart here in Jhandewalan. We are showing you the visuals of what the facilities are here outside the very outlet where several of the gig workers are gathered and have in fact spoken to NDTV, telling about all the difficulties that they are facing because of the brutal heat and how no concessions have been given to them so that they can in fact work in a better way.
Alright, then let's move on from one news update to another now. Clashes broke out at Garib Nagar in Bandra East during an anti-encroachment drive after authorities demolished 2 mosques in the area along with other structures, including houses that have been termed as encroachment. Jui Jadhav also joining in with all of those important details.
Today, on the 4th consecutive day, the demolition work of unauthorized construction at Bandra East Garib Nagar is going on. Today, the work has started vigorously and also the police vigilance is visible. Since a few days ago, stones were pelted on the police. The police have increased their patrols today since yesterday. Today, the police will be more vigilant because today is Jummah and the community members come together to offer prayers. Since today is Jummah, police have suspicions that today if the community people will come together, they might take law and order in their hands, and thus police are also very much alert. Almost 90% of the work has been completed, and this work will be completed 100% tomorrow is what that is said by the Chief Public Relation Officer. So by tomorrow, this entire land will be cleared and handed over to the government for the further construction purpose.
Alright, then there you go. A lion's share of the work has been completed and the rest of it is going to be completed by tomorrow as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
At the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own?
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the
That
worst
mutual fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing today in trade, either on the back of price or volumes. So let's see what's on the show today. Firstly, we'll be speaking with the management of Datamatics Global. Now, the stock is down nearly 3% and this is largely because the revenue growth was quite weak for the company, but we have seen an improvement on the margin front on both YOY and sequential basis as well. Apart from this, we'll be discussing stocks like Lakshmi Dental. It has reported its highest ever quarterly revenue with a 22% growth, and even if you look at the volumes, they are quite strong, nearly 16 times. The stock has locked in an upper circuit of 20%. Another counter which has locked in an upper circuit of 20% is Ramco Systems. Revenue growth was led by acceleration of the recurring revenue, and apart from that, if you look at the order bookings for the company, that also stood strong at close to $51.7 million. When it comes to Manali Petrochem, the growth was largely led by improved realization and steady performance of overseas subsidiary. The stock is up nearly 14%. What were the other factors that aided the company is something that we'll try to decode on the show with our fundamental guest as well. Now, if you look at the market, Nifty, after 5 days of consolidation, we are seeing some big up move. The market is up, the Nifty is up nearly 150 odd points in trade, but 23,800 seems to be a strong resistance here. It is struggling to stay above or cross decisively that mark, but if it does, then it would be taken positively by the market. And today's rally is largely led by the private bank index. If you look at the sectoral index trend, can clearly see it's the banking and the private banking names that have been leading the index and overall sectoral map as well. The Nifty Private Bank Index is up nearly 1.7% in trade. On the flip side is the pharma names and the healthcare names that are struggling, largely on the back of weak numbers. Aurobindo Pharma was down around 7%, which is pulling the Nifty Pharma down in trade. But again, a good day for the Nifty small cap names as well. So Varsha, which are the key stocks here that have been buzzing?
Well, let's pull up this chart of OCCL because that stock is buzzing. This is on the back of strong Q4 numbers wherein, revenue was up almost, if I'm not wrong, 38%. There you go. The stock is up 20% in trade on the back of strong Q4 numbers, though there was some bit of pressure in margin, but overall, yes, a strong growth. Then you have DAM Capital Advisors, again, buzzing in trade on the back of volumes. There you go. The stock is up almost 6% in trade. You have Unitech also in focus. Ganesha Eco is also, is buzzing on the back of Q4 numbers, and Lakshmi Dental, of course, strong growth over here also. So a lot of companies are in focus, of course, because of the earning season, I would say. On the losers side though, let's see what are the stocks which are on the losing trend. You have Sharda Motors, which is under pressure in trade. NGL Finecam is also, there you go, Sharda is down almost 5%. You have NGL Finecam, which is in pressure today. You have JNK India also sulking in trade, and GMM Pfaudler, of course, this stock is down on the back of weak numbers that we are seeing. So overall, a good day for the market, I would say, when it comes to small cap. But one stock which is in focus is, of course, Datamatics on the back of Q4 numbers and what lies ahead for the medium term growth and what are the key drivers for next 2 to 3 years of growth. We are here joined by Mr. Rahul Kanodia, who is Vice Chairman and CEO at Datamatics Global Services. Mr. Kanodia, welcome at NDTV Profit. Always pleasure to have you. We've seen, though there was an improvement in margin when it comes to EBITDA margin, but revenue growth has been modest, at 4% year on year. What is holding back the top line acceleration, and should one expect the earnings recovery from Q1 FY27?
So actually, for the full year, if you look at the year to year, we've got about a 15.3% revenue growth. It is a quarter to quarter comparison that you're doing, which is Q4 of last year versus Q4 of this year, where we had a 4% year on year growth. Partly driven by the acquisition that we made in a company called T&Q, and of course, partly organic performance as well. The margins have improved, particularly because we've been able to bring in operational efficiency through automation, some cost control and tightening of the belt, as well as launching a new platforms, which have begun to show some revenues, the agentic AI platforms.
Okay, so mid-single digit was, I believe, the guidance that you had given earlier for the full financial year, and that is something you have achieved. What for FY27? Yes. Can we see revenue acceleration from here on?
We should see a little, it'll be probably higher single digits. Right now, there's still a fair amount of uncertainty in the world as far as the war is concerned and the disruptions that AI may create. So we're looking at about, high single digits in terms of top line growth, organic.
And including acquisition?
We are looking at some companies, but there's nothing serious that is in dialogue right now.
No, sir. You said organic growth of high single digit. So including acquisition that you had done, what would be the revenue growth then for FY27?
Yes, so the acquisition that we've done are now over, and whatever growth now comes will be organic, unless we make an additional acquisition. So we are in dialogue with some companies for additional acquisition, but there's nothing serious that we are in discussion right now.
FY27?
Margins should improve. Sorry, margins should improve on the back of some more automation and some more operational efficiencies.
So I just wanted to make it clear for our viewers as well. For FY27, you are expecting the revenue growth to be a bit lower compared to what you saw in FY26. Is that correct?
The FY26, if you include the acquisition, it was higher. Organic, we maintain what our projections were. And therefore, organic growth should be about high single digits. If you make an inorganic growth, when you make an acquisition, then it will get bumped up.
Nothing planned so far for FY27?
Say that again?
Nothing planned so far for FY27? No acquisitions planned? Right?
We are in dialogue with some companies, but none of them have matured to the stage of any announcement.
Okay.
Right. And, I just was going through your segments. Just wanted to understand how is the mix between digital operation, then you have digital experience and technologies. So how is the mix expected to evolve maybe in 27 or maybe in next 2 years?
So we should see a slight upswing on the digital experiences. We had talked about in our earnings calls that we were looking at two particular customers who moved to the captive units. We've signed a few new deals and they should ramp up this year. So we will see a slight uptake in the digital experiences. Operations will remain very, very stable, and we should see an upswing in the digital technology piece as well, on the back of several AI-driven opportunities that we are currently in dialogue with.
Okay. I believe 40 to 50 crore is what you had planned for annual investment in FY26. That must have been done. What is the plan for FY27?
We will maintain that at the same level. They are beginning to show some good results, and we've got some new logos acquired on the back of the investments that we made on agentic AI platforms.
Any large deal wins in the marquee segments?
There are some, of course, you can't talk about them till they don't get signed, but yeah, there are some that we've signed. Some that were signed last year will start showing results this year, and then there are a few more that we're in dialogue with.
And so you are expecting some bit of expansion in margin as well. Now for 26, if I'm not wrong, the margins were EBITDA margins were around 19%. Where this can go for 27? Any idea on that?
I think it will remain stable. It should improve actually a little bit. 19 can probably get closer to 20. Yeah, that's roughly where it will be.
Understood. And so also on the digital experience, I think there was some bit pressure in margin. Just wanted to understand what were the key reasons. Is this structural or temporary in nature, or I mean, if any, target that you can give, or if any update you can give on that?
No, it is temporary in nature. We talked about a few of our customers moving to their own captives, and that caused an erosion both in revenue and margin. Having said that, we've signed a few large deals, and they will start ramping up this year. So we should see an improvement next year.
Understood. Also, you're investing heavily when it comes to AI and platforms. You were mentioning about that. How this is impacting? One is of course margins, and when this, when can you expect a meaningful monetization when it comes to these investments?
So the monetization in the sense of revenue streams have started happening, and we already see we launched our True AI platform last quarter. We've already got a few customers in that space where this moving very fast, and we hope to get many more customers and slightly larger ticket ones. So I think it's looking good in terms of, if you look at our EBITDA, if you adjust it for the exceptional items that we had this year, we are running at about 253 crore EBITDA, which is about 12.4%. If our investments are about 40 to 50 crores, you add that back, you have almost 300 crore EBITDA without the investments that we're making. So I think it's a fairly healthy book that we see.
Okay. Sorry, I missed you asking this earlier. You did mention that because of the geopolitical issue, there might be some issues with the company as well. Could you explain what is this kind of issue and what could be the impact of this? Anything on that?
No. There's no issue on the company.
Okay.
It's just that some customers are nervous with that. The business cycle and with the war that you have in the Middle East is still sort of making people nervous. That's all. I mean, no impact on Datamatics.
So decision making could be delayed from the customer side. Is that what you're
Slightly, yes.
Okay.
And your pipeline and deal wins also look strong. When can this start translating into revenue? Any deal wins that you are expecting to come up in Q1 also?
Absolutely. So we have signed a few deals in Q1, and we will be signing a few more in the next 2-3 months. So it's looking strong, and we should have a strong order book within this quarter.
Understood. Well, thank you so much, Mr. Kanodia, for joining us and having a conversation with us. Thank you so much.
Thank you.
Well, this was Datamatics. Expecting, I would say, their margins to remain stable at around 19-20%, and expecting a good revenue when it comes to AI. But with that also, let's invite Asta Jain, who's senior research analyst at HEM Securities. Well, Asta, hi and welcome at NDTV Profit. You heard the management of Datamatics. Do you track this counter, and what's your view when it comes to Q4 numbers and of course growth lying ahead?
Hi, good afternoon to everyone. So, what we feel about this company is that they presented their numbers, and we liked the numbers because what happened, we have seen that some if we barred, exceptional items, etc., then definitely number seems to be on the higher side. Apart from that, what we have heard from the management gives us confidence regarding their deals. So, we believe that this counter is well poised to move above from the current level, and hence we are recommending hold on this counter. So at present moment of a time, we are recommending a hold on this counter, and we are setting the price target for the datamatic services to be somewhere at around 820 to 840 odd levels.
Right, got that view. Well, moving on, Lakshmi Dental, let's pull up that stock. That stock is up almost 20% in trade, and this is on the back of strong Q4 numbers that we have seen. Well, let's analyze it, why Q4 numbers were strong. One is, of course, demand across all segments, which led to, broad-based growth. The dental lab business grew 20% year on year, and international business reported highest ever revenue for the company. Even digital dentistry adoption also increased to 80% penetration in India, helping the company. Now on to the margin drivers. Well, EBITDA margins expanded due to operating leverage and growth, of course, and the gross margin saw a bit of a decline of to 71% versus 78% last year. This was due to higher share of low margin scanner scales, and core dental business margins were of course stable at 76%. So overall, when it comes to the revenue numbers were very strong, and international business was the highlight when it comes to this counter. But Asta, what's your view when it comes to Lakshmi Dental, and what should investors do, considering the huge run up that we have seen of 20% in trade today?
Yes, so we like the numbers, and what is the main focus point of this number is that the PBT. What we have seen a very smart run or a very smart jump in the PBT, that is profit before tax. If I compare it to last quarter, so I think it is approximately more than 90% growth, which which is there in their profit before tax and exceptional item. So we really like the number, and company is able to sustain at a margins which is very robust at around 70%. This is operating profit margin I'm talking about, and this margin has come despite the fact that we know that there are higher scanner sales contribution was there, and we all know that the margin in that segment is not very significant. So talking about this, I think the company seems to be looking very positive at this point of a time. The only thing is that we have seen a sharp run up in today's price. So maybe if it is available at a lower price from here, right now it is quoting somewhere at around 249, 250. So if it is available somewhere at around 240 odd levels, then definitely it is a buy from our side. As well as gold, we are recommending for this counter. Now the price target which we are setting for this counter stands somewhere at around, I suppose, 265 to 270 at the initial levels, and at the higher side we can see this price to be going till the level of 275 as well. So we are liking this counter, but recommending buy on any correction due to 20% rise in today's trade.
So buy on further correction. Got that view. Well, time to dive into the F&O market setup and the Q shaping in trade today, and let's bring in Sharad for more details.
Well, after a lot of weeks, at least I could say on Friday that the technical setup is looking good, and maybe carryover trades can be possible also. And look at it, Trent, Axis Bank, ICICI Bank, all doing well in trade, up more than 2% odd, and it's sustaining, on the key technical levels, and that's a good sign. Of course, small cap, mid cap also is a good action happening, and no major sell-off is happening, and that's a good sign coming in. Of course, indices moves are there, trades are happening, but stock specific, let's have a look what's there. And the long build-up, let's see what's buzzing there in the trade. Largely Varun Beverages in back of important corporate development, and Info Edge also good buying coming in. After a long time, we are seeing some action in this counter. Also, apart from this, looking at the short build-up, it's actually a short covering, to be honest. Bosch is up 4%, and Keynes Tech, the EMS stocks, that is where also we are seeing a good move happening. Also, let's look at the long unwinding Oro Pharma. That's where we are seeing a sell-off happening, and of course on the back of earnings, the sell-off has intensified. Brokerages are also turning a little bearish on this. Amber Enterprises, not a major trade as such, and of course the short build-up which is there, that is happening in Glenmark Pharma and Max Health. These are the stocks in the F&O space. Thank you, Sharad, for that. Moving on to our next small cap stock, that is Ramco System. The stock has hit an upper circuit of 20%, but do remember the stock has been a clear underperformer on a YTD basis and on a 1 month basis if you remove today's move. So what has changed for Ramco Systems in the fourth quarter that led to this uptake of 20%? Let's get in Puneet to understand this.
Thank you for that. It's, as you rightly mentioned, it's been a rank underperformer except today's move. Even in the last 5 years, stocks down 16%, so haven't given any kind of returns to investors. And when you look at, the levels back in July 2015, stock was trading at around 1,000 odd rupees. So been an underperformer for the last decade or so. In quarter four, while the revenues were, almost just up 4% as well, EBITDA at 45%, largely maintaining the 24 to 25% margins that they do. Profits were strong on a quarter-on-quarter basis also because of labor code impact that was in quarter three. So that stood at 21 crores in quarter three and largely no impact in quarter four as well. When you also look at the order booking, that has been decent, giving some potential, at least at $51 million. In terms of revenue growth potential, it's giving some visibility at this point of time. But cash balance also maintained at $13.3 million, is another key aspect. What's leading to the momentum also is the fact that this is the first year over the last 4 years that profits have actually been reported as well. So 42 crore profits reported by the company in FY26, the first in the last 4 years since FY22. Revenue has also crossed 700 crores for the first time in the year of FY26. Last 3 to 4 years has been in that range essentially of 500 to 600 crores. What do you have to watch for is that, the MENA region last year was roughly around 17% of revenue. So if there could be an impact there because of the war is something to watch. Growth commentary for FY27 will be very crucial. But overall, first year of profits over the last 4 years is something to watch out for.
Right. Astha, have you tracked this counter Ramco? Any view why this 20% up, and should anyone even consider buying this counter post this move?
What I believe that the major highlight of whole result is their PBT, which is profit before tax, and that was as high as 200%. Another point is that there is a depreciation element which has shown a significant reduction. If you see Q4 of FY26 number, so I think the depreciation has shown a significant reduction from 35 CR. It was only 23 CR in the current quarter, the quarter 4 of FY26. So a significant 12 crore reduction we have seen in the depreciation. That has also helped in showing good numbers. But overall, I believe a very strong number posted by the company, and on the back of that, we have seen the price momentum as well. Idea here is, as we know, 20% up is not a price level where anyone can suggest to go directly for buying the counter. So if this stock cools down till the level of, because right now it is quoting 475, so if it cool down till the level of, it is quoting 470, so if it cool down till the level of 460 to 460 to 455, then it is a good buying opportunity in this counter. So recommending buying on dips for this counter with a price target of somewhere at around initially 495, and in the long term we can see the price target of 510 odds.
Understood. Well, John Cockrell, let's pull up the chart for the company, 12% up. Now, fundraising is on the cards, but Mahima has all the details on that. Mahima?
Right, so Varsha, as you rightly mentioned, the stock, of course, is buzzing on the back of the news update coming in where the company has said that they are going to consider fundraise via equity or debt on 26th of May. Overall, we'll have to wait and watch out for as to what will be the amount, what will be the use of the fund as well. But the stock has been buzzing since its Q1 numbers as well. The company follows calendar year. And overall, it's been a sharp turnaround quarter in terms of where profits go, both EBITDA as well as PAT. In terms of the numbers, consolidated basis, revenue saw an uptick of around 56%. EBITDA turned positive at that 4.9 crore versus that of a loss of 1.5 crore earlier in Q4 FY25. PAT turned positive at that 7 odd crore versus that of a loss of 2.9 crore earlier. In terms of where the order book goes, order book stood at around 3,300 odd crores for this particular counter. In terms of the consolidation of that's been happening for the company with regards to the metal business. There's creation of JCMI Belgium business and transfer carved out metal business. JCIL is going to acquire 100% stake in JCMI with effect from 1st Jan 2026, and consideration is not going to exceed 50 million euros, and deferred payment the facility of deferred payment will be available for this one over 5 years with no interest obligation under the FEMA regulation. So this is the overall view of what's happening with the counter, how Q1 fared, and why it's buzzing in trade today.
Right, understood. Well, thank you so much, Mahima, for all the details. Asta, what's your view when it comes to John Cockerell? You know, normally after fundraise, the stock normally sees pressure. But if you have any view on this company, considering the order book and of course the Q1 numbers as well.
Yes, because they have used December as a calendar year. So December is always their full year or completion of full financial year. So it is a Q1 number, of course. Now, what I'm seeing right now is that there are two things. Of course, they have posted very strong set of numbers if we just go for the Q1 number. But what I find that there is a strong other income element in those numbers. So if you just see those numbers, 9 crore is the other income which has been posted by this company, and profit after tax is 7 crore. So if I remove the whole other income item, definitely the profit seems to be not at that higher side. And second point, which I think the market might be liking, is a turnaround story, because in the last quarter of the same last year's same quarter, they have posted losses. So maybe markets are going towards that direction, that it is a turnaround story. But if in depth we go for the result, then definitely the other income element is high, and that is main driving the profit. Right now, the result is not working so much strongly for the price momentum. This is only due to the news flow which have come in. My idea here is just wait and watch. Don't jump into this counter at this moment of a time. Let it stabilize. Let the details come and then make any sort of entry, because Q1 numbers are a good. Prima facie, they seem to be turnaround. But if you go in depth, it is the other income element that is driving the profit. So we just recommending hold. No buyer's recommendation is recommended from our side. Just hold this counter for the price target of somewhere at around 6,200 to 6,300.
Well, the next counter on the list, next stock on the list is Manali Petrochem. It's up around 14% in trade, and the stock is trading at its 5-month high. And even volumes are quite strong. What led to this strong performance in the fourth quarter? Because what I could see here is the margins have still declined, though revenue and EBITDA are fairly up. Let's get in Shivam with more details on this.
Well, yes, Manali Petrochem has reported a strong set of quarter 4 earnings, and starting with the key highlights, the growth in the revenue and margin has been supported by the improved realizations, and in terms of profitability too, we have seen an improvement, and that was on the back of the strategic raw material purchasing and selective participation in markets. Now also we have seen a 160% of growth in profit, and that was due to exceptional profit on the gain of on the divestment of Notre Dame and its subsidiary Notre Dame Europe, and the company has recorded around 52 crores of exceptional gain due to that. Now also for the overseas subsidiaries, the company has recorded a steady performance, and the company continues to focus on operational efficiency, cost control and product mix. Now the management remains cautious on the near-term outlook, and that is due to the continuing volatility in input cost and global trade operations. If you look at the PE valuations of the Manali Petrochem against its peers, the Manali Petrochem currently trades at 15.5x, and the DCW is trading at 28.69 times. The Rain Industries is trading at 17.45 times. So on valuations basis also, the stock is trading at lower valuations, and in terms of stock performance also, the company has given over 11% of returns on weekly, monthly and yearly basis.
Okay, Astha, any view on Manali Petrochem? Because the numbers do you think that the numbers warrant such kind of a move in the share price? Because margins have come down and revenue and EBITDA are up just around 20%.
Yes, so in fact, even I also believe that numbers are not that very much, supportive for this price momentum, but definitely markets might be liking something, and that is why we are seeing that this stock is running away and it is showing 14% gain right now. So what we are recommending at this present moment of a time, because what we have seen in the numbers also that they have done certain selective raw material purchase, strategic raw material purchase, which has led to good improvement in the operating profit as well. So there are certain things which the company has done, and that has yielded in the that has yielded in the numbers. I should not say strong number, but that has yielded into the number. Right now, what we are recommending is a hold for this counter. It is quoting 63.50. It might jump to somewhere at around 65 to 68 odd levels. So these are the targets which we are setting for this counter, and just a hold is a recommendation from our side for this counter.
Right. Well, thank you so much, Asla, for all the details and joining us and having a conversation with us. Thank you so much. Well, moving on, Bloomberg reports that Capital Group is turning more bullish on the Adani pack, pumping in over $2 billion across 3 group companies. At the same time, it's trimming exposure to Reliance, which signals a clear shift in foreign investor preference between India's 2 biggest conglomerates. Well, let's get my colleague Puneet for more details.
Well, thank you for that. As you rightly mentioned, the big FI is now building in to its bet into the Adani Group companies, and there are 3 of them that have been coming into focus. So a $2 billion bet, increasing exposure in these Adani Group companies as well. When you look at, roughly around the 3 companies, Adani Ports is the first one. The second one is Adani Power and Adani Green Energy. These are the 3 counters that are in focus. When you look at the stake purchases, on 5th of May, Capital Group bought nearly 2% stake in Adani Ports. This acquisition was almost of 7,800 crores or $776 million via the open market transaction. Roughly a 1.5 to 2% stake was also built into Adani Power as well as Adani Green as well. And this is, part of what we are seeing as a border transition essentially for foreign investors coming back into these particular counters after there has been clarity coming in from the US Supreme Court as well on the particular court case. So that all is now in the rearview mirror. You've also seen that, the plays essentially in the infra development, energy transition as well as manufacturing push could be some of the other key factors. So that is the big news coming in for investors like the Capital Group now building into the Adani Group stocks.
Thank you, Puneet, for that. Just a disclaimer that this link is on Adani Group, and NDTV Profits holding company AMG is also owned by the Adani Group of companies. Well, that's all we had on today's edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all 3 of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the
That mutual
worst
fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar.
Hello and welcome to NDTV Profit. I am Mahima Vachrajani and with me is as always is Puneet Zaveri and you are watching Ask Profit, the afternoon edition. And this is a show of course that gets all your stock related queries answered. For viewers who are watching us, you can either call us or WhatsApp us on the numbers that are flashing on your screen up there. Before we start doing that, till then you go ahead and start sending your queries. Let's take a quick look as to how the markets are doing. The Nifty 50 right now is trading around 0.6% higher, slightly off from its day's high point, but at least since it's not reversed its gains since the morning, and that's the good part. It's hovering around the 23,700 level, much above the 23,700 levels in fact, and we might see some touching in 23,800 levels if things go well in the next one and a half hour. Let's try to pull up the heat map as well and see as to what are the counters that are doing well in terms of where the heat map goes. Since the start of the trade today, the Nifty 50 heat map, since the start of the trade today, we've seen gains coming in for something like a Trent, Asian Paints, Shriram Finance also doing fairly well, Axis Bank, ICICI Bank also doing fairly well. But on the flip side, you have some pressure coming in on ONGC. Since yesterday, we've seen that pressure with crude prices coming down. You still have continued pressure in ITC, something like a Sun Pharma, and BEL also continues to be under pressure. Bajaj Auto also be seeing some bit of a pressure. Let's try to pull up the Bank Nifty and see as to where that is trading at right now. With regards to where the levels of the Bank Nifty go, it's around that 54,100 levels and up 1.24%. Let's try to pull up the constituents of the Bank Nifty and see as to where those gains are coming in from, and then try to pull up the sectoral heat map as well. There you go, all counters in the green, largely led by Axis, ICICI as well as AU Small Finance Bank. The sectors, quickly if you can see that, because there is action in the broad end of spectrum as well, but there you go, you have private banks topping that chart, followed by second day in a row, defense is seeing gains of about 1.48%. Bank Nifty also up 1.2%, but media continues to be under pressure. Quickly, the mid cap 150 and the small cap 250 paired some of its gains, but the mid cap 150 is still trading around 0.1% higher, and the small cap 250 trading around 1% higher. So that's with regards to where the broad end of spectrum goes. But let me start welcoming our guest for the day, Ruchit Jain, Vice President Equity Technical Research Wealth Management at Motilal Oswal Financial Services, and Avinash Gorakshakar, Founder and Head of Research at Avinash Mentor, will be joining us shortly. But let me start taking the first question. Ruchit, this one is on Dhanuka, and Raghavendra from Bengaluru has got 800 shares at the levels of 1174. He wants to know as to what should be his course of action in the next 3 to 4 odd months. Your view on the chart for Dhanuka Agritech?
Overall, we have seen that the stock has been in a consolidation phase since last 3 months. It is trading at a very crucial point of its 200 DMA resistance, which is around 1200, 1220. So, last couple of days ago, we did see price up move with good volumes, but the stock needs to close above the 1200, 1220 mark. In this case, then we can expect an up move towards 1320, 1330 in the near term. So, as of now, my advice would be to continue to holding your long positions. 1050 will now be seen as a support, so keep stop loss below 1050.
Got that view. Ruchit, welcome to the show, of course. Let me also welcome Avinash now, who's joining us, of course, from Avinash Mentor Services. Avinash, very good afternoon to you. Thanks so much for joining me today. First question, Avinash, from Suman from Kolkata. He wants to know, between City Union Bank as well as Karur Vyasa Bank, what's a better pick at this point of time? What would you recommend? He has both of them. Which one he's asking, which one should he continue to hold for the long term? What would you recommend?
No, I think Puneet, City Union Bank has reported a decent set of numbers, and I think Karur Vyasya Bank also is qualifying as a good long-term bet. But if you compare both the banks, I think City Union Bank has done much better. And I think within the smaller banks, in terms of deposit growth, in terms of disbursement, in terms of asset quality, and the profitability growth. I think if the investor can hold on for the next 12 months, I think City Union Bank can give a better risk reward. I would still say that it's better to have a larger exposure in City Union Bank. Karur Vaishya Bank also should do well. There are many large ultra HNI investors who have invested here, and hopefully next year should be a very strong turnaround year for Karur Vaishya Bank also.
Okay, so that's the view on Karur Vaishya Bank. The next one that we have is on MTAR Tech. Our viewer Sarath from Dubai is asking whether this is the right time to maybe enter this counter from a short-term perspective. Ruchit, your view on the charts?
Because I already have seen a good run-up move over last couple of months, and the momentum readings are a bit overbought. Although the trend is still positive, but from a risk-reward issue perspective, look for buying opportunities if you get any kind of declines in the near future. If you have existing positions, then you can continue to hold on.
Got it. I think Ruchit, might be so done with this question by now, because MTAR, every show he must be going on to, must be questioned in Ruchit, most certainly at this point of time. But Ruchit, let me stick with you also for Voltas. If this one's a slightly more tricky one, right? Because our viewer has bought it at 1289 and sitting at, and it's actually back at that price, had gone to that 1400 level, come back after the results or just before that as well. So any view here also that you can offer at this point of time?
I think it's complete range-bound stock which we have been witnessing. Just look at the stock from last 1.5 years. The stock has not seen any trended phase. Whenever it comes near 1200, it witnesses buying interest over there. On the higher side, it comes near 1500. Again, we see some selling pressure. So I think it's more of a time-wise correction which is going on. The good thing is that the stock is now trading near the lower end of the range. So the downside could be limited from here on. So till it is about 1200, I believe we should continue to hold on. The immediate hurdle on pullback moves would be around 1380, where the 200 EMA is placed. So keep stop loss below 1200 on your existing portions, and when it comes near 1380 on pullback moves, just take a review again.
All right, so that's the view coming in on Voltas. By the way, viewers who are tuning in, you can also give us a call on the number that is flashing on your screen up there. There you go. That's the number that you can go ahead and call us. Vinay, by the way, has done that, and he's calling us from Pune. Vinay, very good afternoon to you. What's your query about?
Yeah, good afternoon. I have a query regarding CDSL. I have CDSL shares, 60 CDSL shares bought at 1380. So shall I sell it and replace it by either Angel Broking, Grow or MCX? That is my question.
Okay, got your question, Vinay. I'll take this up with Avinash. Avinash, you heard your query. Which one would you prefer?
No, I think, the investor, if he's got a short-term view, then I think he could possibly exit CDSL. But otherwise, long-term, I think, CDSL has got a much more competitive moat. It's one of the two players in the depository business. And, because last 2 quarters have not been good, I think the stock has underperformed. But I think if he still wants to get into some of the broking companies, then I think Grow could be a better bet. I think Grow has been growing very rapidly. They're now looking at other areas like wealth management, typically other, wealth management products. So here, I think maybe around the current level, he could accumulate, but keep a time frame of 12 to 15 months. But definitely, I think he's got to give a long time frame because the stock has run up significantly ever since the stock got listed.
Got that view, Avinash, and we noticed that the slight pun that you put in there as well, that you could expect Grow to keep growing at this point of time. But let's go across, take another caller now from Bengaluru. Prasanna has a stock query for us. Prasanna, very good afternoon to you. What's your query? Hi, Prasanna, can you hear me?
Yes, hello.
Yes, hi, Prasanna. We can hear you. Go ahead. Well, I think we seem to have lost him. Just got him back for a second, but then we lost Prasanna again. I think the stock query, though, we have is on MRPL. He's bought these shares at 178. So currently sitting on a loss. Ruchit, what would you recommend on MRPL? Should Prasanna continue to hold this counter for now?
I would advise to keep a sell on rise approach. In case of any pullback move towards 160, 165, take it as an opportunity to lighten up from existing lows.
Okay, all right, so that's the view on MRPL. The next one that we have is from Mayur, who's holding 7,500 shares of Dabur since the IPO, long time ago. He wants to know whether he should hold, sell, even add more. He says he doesn't even remember the price. So, Avinash, I'll come to you on this one. Since he's been a very patient investor with Dabur, what should he do?
No, I think if he's got it from the public issue, then I think he's sitting on a very large profit. I think the important rule in the market is that at least take out your capital. So I think you can reinvest in some other good companies. So I think, medium-term prospects appear to be quite good. We should be having good monsoon, and hopefully rural market picks up. Then that should actually drive a strong volume growth for Dabur. My sense is that these are compounder stocks, Mahima, and these are not going to be multi-baggers. So at best you could expect a 15-16% upside. So I think it's better that he books out some profits, from his old holdings and stays invested here for the next 12 to 15 months.
Just a very light search suggests that it's a 1994 IPO, so he's been holding very, very patiently at this point of time, at least, is Mayur. So he should reap the gains, as Avinash rightly mentioned as well. The next question is also very interesting as well in the FMCG space, because Sriram, who's a regular viewer, has bought into HUL at 1100 rupees. So he's also sitting on good gains. Avinash, I'll stick with you because he's holding 100 shares. And I think the last time the shares were around that level was just around the GST time, 2017. What would you recommend? Because I think he made good returns in the first 5 years. The last 5 have been just a sleeping giant in that sense. What's your view?
No, I think, in these kind of companies, Puneet, these kind of large cap stocks, when they give you these kind of return, it is very prudent that you book out at least some part of your gains, despite the fact that the investor is not holding a very large quantity. Because going forward also on such a large base, I think, what you could expect is just a compounding return. These are not stocks which are going to create wealth in a very short period of time. And the last 5 years, as you rightly mentioned, they have been virtually, the performance has not been anything great to talk about. So at least 25% he can book out and the rest he can hold on. I think if the FMCG sector does well, hopefully on the back of a good monsoon and good rural demand, then I think you could expect a 15-16% upside. So I think the strategy should be partly book out and partly hold on for the next 12 to 18 months.
Okay, all right. So that's the view coming in on HUL as well as the consumption space. But I think we've got Shidi who's calling us from Hyderabad. A very good afternoon to you, Shidi. Go ahead, ask your question.
Yeah, before I go for that, yet another good suit, Puneet, if you remember.
Shidi has been complimenting me on call. Shidi, before I could get to you, you got to me this time around. So many thank you for that. As always, what's your stock query this time? Shidi, can you hear me? We seem to have lost him at the perfect time. He was about to ask a question, but we did hear the right part of it as well. And I think we seem to have lost him on call, and probably we'll probably get him back if we can, or we'll just take a stock query as well. It's on Jain Resource Recycling. Actually, the stock got hammered this time, Avinash, right after the results. Would you recommend if it's a right time to enter? I think they were getting into copper as well because of the shortage globally as well. What would you recommend on this counter if you study the result also? Any view?
No, I think results were quite decent, Puneet. My sense is that, this stock will now consolidate for some time. The stock has been a very strong outperformer ever since the company went public. And I think, the space in which they operate, Puneet, is going to offer a very strong kind of growth going forward. So if at all he wants to buy, I would suggest that buy it in a staggered manner. And I think hopefully the year FY27 should be a lot better. So maybe, rather than putting all your funds in one shot, maybe you could allocate 25-30% and gradually accumulate it over the next, say, 3 to 6 months.
Avinash, also just so what is your read, Avinash, of why did the stock go down by 15-20%? Is this just the good news getting booked in terms of profit? Is that your assumption as well?
Yeah, I think largely profit booking, Puneet, because if you see the numbers, the management commentary post the conference call, I don't think there has been any major negative surprise. And I think, in these kind of market, it's quite evident that once the results come out, the entire excitement goes down. For some time, the stock remains low. So I don't think there's anything wrong with the fundamentals, but I think, yes, investors, I think, who have invested earlier also might be booking out some money. So that could also be one of the reasons. But otherwise, recycling industry, according to me, has got a very bright future. And the next 12 months is going to be a solid year for the company.
Well, thank you so much for that, Avinash. I think we have connected back with Shidi at this point of time. I think, Shidi, I hope you were able to hear Avinash's very detailed response on this particular stock. So I hope it answers your question. And, we just connected back to you just to say thank you for all your kind words and for supporting Ask Profit as always.
Sure. Thank you. Thank you.
We'll connect with you. Yeah, you can connect with us, of course, again on Monday, and we'll take your stock-related queries. But viewers, time now for the rapid-fire round in this edition of Ask Profit. Avinash as well as Ruchit, you know the drill. The first question coming in now, and this one is on Varun Beverages. Our viewers bought shares at 505. What would you recommend here, Avinash? Because he bought it, I think the stock collapsed and is back at that level. Should he continue to hold?
I think continue to hold. I think we should expect a decent financial year, for the coming financial year, that is 27.
Okay, the next one is on Amba Enterprises. 100 shares bought at the levels of 7,400. Vivek wants to know if he can continue to hold this for the next 1 odd year. Ruchit, on the charts?
I would recommend to exit.
Is it a good time to enter Indraprastha Gas, Ruchit?
Yes, can buy. The risk reward ratio is favorable, so pullback move can be expected up to 175.
Okay, Avinash, fresh entry into any 1 or 2 pharma companies that you like from a long-term perspective?
I think pharma companies could be possibly Lupin and Sun Pharma. I think both these companies look quite attractive from a long-term horizon.
Grasim also, Avinash, our viewer bought it at 2931. And yesterday, this is Sai from Hyderabad, and yesterday the results were, I think the stock was also up almost 6%. Any view?
No, I think he should continue to hold. We expect better performances, in the year FY27. So I think he's gotten at the right level. So he should hold on for the next 8 to 12 months.
Okay, Asian Paints, 150 shares bought at the levels of 2750. Continue to hold, add or sell, Ruchit, on the charts?
Continue to hold existing position.
BHEL bought at 73 rupees by Sriram Raghuraman from Chennai. Avinash, he wants to know if he can continue to hold. He's sitting on massive profits. Should he still hold after the run-up?
I think he should hold, but 73 becoming almost 400 plus. So, he should book out some profits. I think encash, some of his gains and hold the rest for the next 12 to 15 months.
Okay, TD Power bought at the levels of 273. 140 shares is what Rohan from Ghaziabad has been holding. Continue to hold. It's been his first multi-bagger stock is what he's saying. TD Power is what I'm talking about. Ruchit, your view on the charts?
Let's continue to hold with stop loss below 1150.
Would you invest in Tata Power at the current levels for the long term? Avinash is the question. And between that as well as Hindustan Copper and Nalco, what's a better player?
I think Hindustan Copper would be better.
Aurobindo Pharma bought at the levels of 1335. Should I sell or hold now? Ruchit, on the charts?
Exit on some pullback moves.
TVS Motor 3 to 6 month view is what our viewer wants. Ruchit, is it a good time to buy?
Yes, can buy at current levels. The risk reward ratio is favorable.
Levels to buy Bellrise, Ruchit. Satyan wants to know the stop loss for this as well.
Already there has been a good run up, so keep stop loss below 200 rupees on your existing positions.
A viewer has bought into Tata Motors PV at 423 after the split. Avinash, should he switch to any other automaker or continue to hold this one?
No, I think he should continue to hold.
Vikran Engineering continue to hold for the next 5 years. Our viewer Sarath from Tirupati wants to know. Avinash?
Yeah, I think definitely, the order book has grown quite strongly, and I think execution has been good. So I think at least for the next 18 to 24 months, the order book visibility looks good. So continue to hold.
Paipit from Assam wants to know about ICICI Bank. He's bought it at 1247. Avinash, should he continue to hold his 300 odd shares?
Yeah, I think ICICI Bank should be held on.
Narayana Hrudara, is this a good time to enter, Ruchit?
Yes, can buy at current level.
The next one's Vari, and a viewer bought it at 1460. So he's sitting on massive profit. Ruchit, is it a good time to sell?
Book partial profits and hold partial positions.
Got it. That was the last question for the rapid fire as well as this edition of Ask Profit. Ruchit as well as Avinash, thanks as always for giving us your inputs on a whole bunch of stocks and spaces. Appreciate your inputs. But viewers, out of time on this edition of the show. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूम
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
At the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own?
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the
That
worst
mutual fund.
mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your...
Hello and welcome. You're watching India Market Close on NDTV Profit. I'm Hiral Daria, and with me is Tamanna Inamdar as well. But clearly, if you see in terms of markets, what is interesting to me is that we've broken above the 23,700 mark, and this is after 5 days of consolidation. Gains of around 100 points, 0.5% coming in there. But if you have to look at the intraday chart, we are not being able to hold on to those intraday highs. We've hit an intraday high of 23,835 today, but from there as well, we've given up those gains, trying to inch lower right now, somewhere in between. But till we stay above 23,700 on closing basis, that will be a positive thing to watch out for. Let's just pull up Bank Nifty on the screens and then we'll look at the advanced decline ratio as well. In terms of Bank Nifty, that somewhere has been little more steadier as compared to Nifty 50. So the setup in terms of Bank Nifty is seeming to be much better as compared to Nifty 50, unlike what we started off in terms of Monday and Tuesday. So this is where the strength is right now. Let's look at the components or the heat map of Nifty 50 and see what's happening to individual stocks as well. Overall, more of greens versus reds, and that's what the advanced decline ratio will tell you. We'll go to that in a while. But clearly, you have names like Trent, one of the top gainers there. Consumption names, again, not making it to the top of the list, but you still have a HUL, which is up 1.5%. Nestle around 0.9%. Titan around 0.3% there. What is losing out is a Max Healthcare completely in terms of where earnings go. ONGC, you have crude which is coming off, which is putting pressure on ONGC. ITC also under pressure on the way the earnings have panned out, and investors and brokerages are looking at margin pressure and a downtake in the first quarter of FY27. Sun Pharma ahead of numbers is down 1.5% as well. Apart from that, from the financials, Shriram Finance, Axis Bank, you have ICICI Bank, Bajaj Finance, which are seeing some smart moves. In fact, it's very interesting to see a Wipro in trade today, 2.5% up move. In fact, this was one of the top calls that was given by Amardev Singh on India Market Open. So anyone who's heard him will see the kind of gains and profits coming in their way. So that's with regards to Wipro, but let's quickly look at the broader markets right now and see what's happening on that front. If you have to look at the mid-cap index, pretty much subtle. The chart really mirrors what's happening on Nifty 50 as well. And the small cap index, this is unlike what we saw over the last couple of days. It was the small cap index which was holding on, and today that's the segment which is really giving up gains, almost trying to inch towards the negative as we speak. Look at the advanced decline ratio and we'll then look at NSE 500 or BSE 500 components. There you go. We started off with 1660 kind of declines in terms of advances. Mild give up has happened over there. We're just 100 stocks down in terms of advances, and your declines as well pretty much steady. It did inch up in the beginning and now the chart has remained absolutely steady. So no major moves that you're seeing over here. Let's look at the mid cap or the broader market components as well. Spark, an interesting move coming in there, 17 to 18%, and post earnings, that's been a stock which has seen some smart moves. Sheela Foam as well. Fertilizer stocks are doing well. So from a RCF to a Deepak Fertilizer, both in the positive. There you go, RCF 4.5% up move. Sterlite Tech, Info Edge, a few of the other names. What's losing out is Engineers India. That again is a earnings reaction. Central Bank on the back of the OFS, Aurobindo Pharma, MedPlus, Sun TV, GMM Pfaudler, all of them have been reacting to numbers. So clearly, it's an event-specific reaction that you're seeing in terms of markets. What is encouraging, Tamanna, for me is that the markets have been able to hold on above that 23,700 mark in trade today.
Absolutely. These are some of the other key triggers that we're seeing today, folks. The Nifty has gained over 100 points after consolidating for the last 5 trading sessions. So, we started this morning talking about how the markets have been really moving nowhere, but at least there was some kind of a breakout today. Clearly, 23,800 is visibly that strong resistance, and the index is trapped in a strict 23,300 to 23,800 band. You're seeing that 500-point move around. A decisive daily close above 23,800 to 23,850 is mandatory now to spark a broad-based short covering rally towards 24,000 plus. As far as the Bank Nifty is concerned, it's mirrored the main index gains after consolidating for 5 trading sessions. Gains today, though, are led largely by private banking names. 54,000 to 54,200 zone is likely to act as an immediate resistance. A strong close above this could open room for further upside. So these are some of the levels that we should look at. But let me go across to Kunal Shah joining us this afternoon. So is Neerav Ashar to get us a take on the markets. Kunal, I want to start with you and how you're looking at the Nifty outlook. Clearly, 23,800 is proving to be a tougher hill to climb than was expected.
Yeah, I think, definitely. If you look at Nifty, what we have seen, the consolidation between this 23,800 to 23,300 on the downside. So now today, the last week, what we had a close somewhere around 23,643. And we need to close above that level, which is likely what we are seeing in today's trading session. If we close above that, we'll get a weekly positive close because today is a Friday. And then probably you might have a gap up on Monday's trading session, and then the move will continue on the upside. So yes, 23,800 is what I'm expecting to be taken out, and eventually markets heading towards 24,200, 300 on the upside. So positionally, I think I'm bullish. Even in dips, if you get into the markets, utilize that as a buying opportunity. Now today, Bank Nifty has been the outperformer, and definitely Bank Nifty was one which was underperforming. So clearly the week has started to gain strength, and I'm expecting even Bank Nifty could have a good short covering move on the upside. So even Bank Nifty continues to remain as a buy. 52,800, 700 now continues to be a very strong support on the downside for the Bank Nifty. And I'm expecting this move to continue on the upside towards the mark of at least 55,400 for the Bank Nifty index.
Okay. Kunal, you're saying that we will break out above that 23,800 mark. So are you looking at it from a closing basis, or you're just talking about it from an intraday basis right now?
So definitely, if we get a close, that will give you a further confirmation. But my sense is that we need to preempt this, because again, you will probably not get a close about 23,800. Even if you don't get it, probably you might have a gap up on Monday, and then market would continue to rally on the upside. So if you are a risk taker, I think this is a time where you should go long, even at current levels. And if you want to give a stop loss, which should be very small, that should be 23,550 on the downside. So sell the target on the upside is 24,200. So I'm expecting the market to continue the move on the upside.
Okay. And what would your top picks be, Kunal?
So again, first, I think IT packs again looks good on the chart, and I think IT could again trigger this rally on the upside. So you're the stock which is there on my radar from the IT pack, where I can see clear-cut short covering moves coming in. That is Tata Elxsi. So Tata Elxsi has already witnessed a good correction from the higher level, and now we are seeing a double bottom formation on the technical charts, and we expect this momentum to continue on the higher end. So one can go long with a stop loss of 4150, looking out for targets of at least 4500 to 4600 on the upside. So Tata Elxsi is my first pick on the buy side. Second pick, where I think again we have witnessed some short covering moves coming in, and that is NBCC. So NBCC again has been taking strong support around that zone of 91. Today again we have seen volume-based buying, plus on the FNO front we are seeing short coverings that have started. I'm expecting a follow-up move on Monday's trading session. So again 94, 95 is where it is currently trading. One can go long with a stop loss of 91, looking for targets of 102 on the upside.
Okay, before we get to Nirav, I want to just highlight what is the stock of the day, and Bosch is a clear contender. It was under pressure yesterday in trade and has gained after positive brokerage notes. Puneet joining in with more details. Puneet, why the choice of Bosch as stock of the day?
Well, thank you for that. It's almost recovered everything that yesterday the stock lost and was under pressure for, and largely basis of ICICI Securities actually upgrading the stock to a buy from a hold rating earlier. Target price now revised to 44,000 versus 40,000 earlier. They also mentioned specifically that they believe that the parent company's focus on the India business has sharpened compared to the recent past, and that's visible in that big acquisition of 9,000 crores for the braking business as well. That is something that they've entered in this particular year, which FY27. They've also specifically mentioned that the content per vehicle growth will also be led by newer segments that they're entering in. And finally, they've highlighted that they expect a 23 to roughly 30% EPS CAGR for the business. And, at roughly around 40 times price to earnings for FY28 is what they've upgraded the stock to as well. But I also want to highlight what happened yesterday, as you rightly mentioned. Management just made one particular comment about FY27, that they are cautiously optimistic given the uncertainty right now. And that took a beating of 4% on the stock yesterday. The geopolitical uncertainties because of Middle East war, overall supply chain environment being fragile, as some of the other things they highlighted. But I just want to quickly highlight what and go make that point forward for the new products that they are entering via joint ventures. The first one is Bosch Limited as well as Brakes and Wheels India announced the JV very recently in this quarter, where they'll be entering the commercial vehicle segment for the first time. This is for Bosch, and with Tata Comp, this is for e-axles, which is used in electric trucks. That is another segment that they've entered with Tata Comp. And finally, what management said, that they are not a player in any of these segments, and hence entry with joint ventures is a strategy that they feel prudent at this point of time. Finally, two things that you have to watch as well, positive triggers going forward. One's on CAFE 3 norms that will come in April 2027 for cars. Could be another big opportunity for Bosch. And the second one is the two-wheeler ADAS opportunity. Regulatory still awaited if that happens, but it's a huge opportunity and Bosch will be a big beneficiary for that as well.
You know, in fact, I want to get to Nirav first and ask him a view on Bosch before we move to anything else. Nirav, is this counter that you're tracking? You know, quite a hefty price tag on it, but definitely has seen some improvement today.
Yeah, good afternoon and thank you for the invite. Actually, if one were to look at MNCs who are present in India, a lot of multinational companies have been focusing on India because now there is demand for there's a lot of thrust on automation, efficiency and operational improvements. Especially the auto ancillaries, their focus has been on localization and value engineering, and that is going to drive the growth going forward. Even as we have seen in the case of Bosch, a lot of new products are going to be introduced in the market because the market is now very mature for all the introduction of the new products, and the JV route is something which the company has decided to go along with. So definitely this is going to have a positive impact as far as the margins are concerned going forward.
Okay, so that's with regards to where Bosch goes. Kunal, if you have to look at Bosch or any of the other auto ancillary companies, the question right now is focus is going to come in terms of EVs, right? So companies which have the levers or the flexibility mechanism to cater to EV companies, potentially they could be gainers, because otherwise there is a supply chain constraint that we're looking at as well when it comes to fuel and the second order effect. Now from charts perspective, where are you seeing value in terms of, you know, the EV or even the automotive ancillary space?
I think overall the auto ancillary space again looks very attractive. On that space, one stock which I would like to highlight over here is Motherson. I think overall in this volatility, what we have seen in the entire markets as well as in the mid cap and the small cap space, I think Motherson has been one stock which has been resilient, one of the outperformer, and I think that outperformance is likely to continue on the upside. So even if I look at the long-term charts over here, I am expecting at least a targets of 170, 175 on the upside in the next 2 to 3 months that could trigger in. The base case over here has been at around 120, which has now become a very strong support. So I think from this 135 to 120 could be a very good zone for accumulation. You can expect 170 on the upside for Motherson.
So that's with Motherson as well as we speak. In fact, the company did report a very good set of numbers. And from there on, the question is how sustainable is it going to be going ahead? Because CapEx plans are absolutely very large when you talk about Motherson. But apart from this, let me also look at a couple of other names that are in focus. But before that, I think I have my colleague Somit Sarkar, who's also joining in with all the chatter from the dealing room. Somit, what do you have for us today? Because markets are slightly in an upbeat mood. Is the dealing room also reflecting the same?
Yes, after 5 days of consolidation, we are seeing some kind of a move in the markets, and this is largely led by banks, and dealers are indicating that there is a basket buying happening on banks of around $750 million US. Hence this up move that we have said, and largely it's been led by private banks in trade. Apart from that, JSW Cement is one counter where 3.1% of equity changed hands today in the morning. Now what dealers indicating here is that a large private equity has sold its stake in a block deal, while multiple large mutual funds have bought the stake. Names like SBI, ICICI Pru, Bandhan Mutual Fund are among the buyers that have bought stake in JSW Cement. For GAIL, the numbers were pretty much bad, but the street is expecting that the management might guide give strong numbers for the marketing segment for FY27. The street is expecting management guidance to be anywhere around 4,000 to 4,500 crore rupees. That is the EBIT number for the marketing segment, and that's the reason, despite the bad set of numbers, the stock is up nearly 2.5% in trade. For Eicher Motors, there are buy flows on the large HNI desk and PMS desk. Dealers are expecting strong Q4 numbers here. And lastly, when it comes to Premier Energies, there are some sell flows that we are seeing on the HNI desk, and this is largely because dealers are expecting a block deal to happen very soon on this counter. The block deal could be anywhere around 3,000 odd crore rupees, but might as well happen in the block window. So keep an eye out for Premier Energies as well.
Okay. All right, thank you for that, Somit Agarwal, there with all of those details. But Dr. Agarwal is next. Dr. Agarwal's healthcare has posted a strong Q4 with healthy growth across revenue and profits, driven by aggressive expansion and steady demand for surgeries. We're joined by Dr. Adil Agarwal, Chief Executive Officer and whole-time Director at Dr. Agarwal's Healthcare, for more on it. Dr. Adil, thank you so much for joining in. What has been standout? Because a solid set of numbers for you this quarter. What are the categories that have worked?
Firstly, thank you for having me on your show. It's a huge honor. So FY26 has obviously been a great year for us. We have delivered both in terms of revenue and EBITDA growth over 20%. This has been aided by a combination of our mature centers growing at about 14%. We have also added approximately 57 new centers over the last 12 months. So we have effectively opened one hospital a week over the last 12 months. So a combination of strong same-store sales growth and a good addition of new centers has actually helped us in terms of this entire 21% growth that we have ended with in FY26.
Dr. Agarwal, good afternoon. This is Hira here. Now, we're talking about how FY27 is going to look like, and I'm sure it's mainly with the kind of expansion that you're looking at. Because if I have to look at the last 1 year, 57 centers is what you've added, and it's almost one center a week if I have to consider in that front. So is growth going to be led through expansions versus demand, or is it the reverse? How are you looking at it?
So the way we think about it is a bulk of our growth still comes in from the growth in our mature facilities. And, over the last 12 months, we have grown at about approximately 13 to 14% of our older mature centers. We hope to continue with that trend going into FY27. This growth will come through a combination of both, number of patients who walk into our centers, plus something which we call as increase in value. So, people opting in for more surgeries, higher end procedures like the higher end cataract surgery procedures, refractive procedures to get rid of your glasses. All of this helps in terms of driving value. So that 13-14% comes in from a combination of both volumes walking in, plus an increase in value by people opting in for more surgeries. The remaining growth will come in from establishing new hospitals. So we are targeting at least 60 centers over the next 12 months. Out of these, 40 will be surgical centers and 20 will be clinics which will be located in smaller micro markets. So a combination of growth in both your mature centers plus our adding about 16 new centers to our network will help in sustaining growth over the next 1 year.
So does this mean you will be prioritizing growth over margins at this stage of the business? Because margins somewhere have remained absolutely steady in the last 1 year. We've not seen that quantum of expansion. And because of the expansion that you're looking at, to some extent, that might even dilute your margins.
Yeah, so I think one of the good things that we have done over the last 12 months, something which we're very happy about, is we've been able to maintain our EBITDA margins at approximately 28.5%. We hope to continue to maintain those margins as our brand continues to, expand and brand equity grows. We start to see a faster time to actually break even in many of our centers. That is actually helping us maintain our margins. So we endeavor over the next 12 months that, our goal will be to kind of maintain the same EBITDA margins that we've been able to maintain despite adding 60 new centers to our network.
Just wondering, Dr. Agarwal, as you add all of this expansion, what really is the model that you're looking at? You're looking at a hub and spoke model. How do you ensure that you add efficiencies, keep your same store sales growth metrics up, even as you expand at this rapid pace?
So if you see, about 65 to 70% of our new expansion will happen in what we call as our core markets. Now, what we consider core markets are predominantly the states of Tamil Nadu, Andhra, Telangana, Karnataka, Maharashtra. Bombay, as we speak, we have about 20 centers in Bombay, and we'll be looking at adding about 6 to 7 centers. So we'll be doing a lot more expansion in our existing markets where we will go a lot deeper. The advantage of opening in existing markets is the brand is already relatively well known. people are familiar with your brand. So, you get walk-ins faster. People trust your brand. You're able to recruit the right kind of clinicians who can deliver the best kind of outcomes. This enables you to break even a lot faster. And that's how we've kind of been able to maintain our margins. So there will be 60 to 70% of our expansion happening in our existing core markets. The remaining 25-30%, we will continue to explore newer markets. For example, in the last 12 months, we have opened 6 new hospitals in the Delhi NCR region that we believe is going to become a future market for us. We are looking at adding about 7 to 8 centers in the Delhi NCR markets like Noida, Ghaziabad, towns in Haryana as well. So that's how we kind of space out our expansion by doing a combination of expanding in your core markets and your non-core markets.
And what is the proportion of cataracts that are dominating your procedures right now, Dr. Adil? How are you aiming to expand beyond this? Because, if you want to also improve profitability, you're going to have to move beyond cataracts.
So if you take, we have done approximately 2.5 lakh surgeries. So the exact number is approximately 2.3 lakh surgeries over the last 12 months. 70% of those volumes of surgeries come in from cataract. But there is a significant volume, which is approximately 30%, which comes through two main streams. One of those is refractive surgeries, and we've been doing a lot of refractive surgeries right now. People, in the younger population who want to get rid of their glasses, they opt for refractive surgeries. Second is, given that India has a high prevalence of diabetes, we get a lot of patients with retinal complications. For them, we do retinal surgeries. And then you have a long tail of a lot of other surgeries, patients who have glaucoma, pediatric surgeries, oculoplastic surgeries, all of those form the remaining tail. But bulk, I would say 65 to 70% of our surgical volumes come in from cataract surgeries, approximately 5 to 8% from refractive surgeries. The rest will come in from retinal surgeries and all the other surgeries. We continue to push the boundaries in terms of the kind of clinical options we provide to many of our patients in terms of higher end procedures. So if you take cataract surgeries itself, if you see, in the last 12 months, we have started to move towards something which we call as robotic cataract surgeries. These are called as femtocataract surgeries, and we have done close to 6,000 of these surgeries. These are the kind of options that we are providing to many of our patients who walk into us.
Sure. Thank you so much, Dr. Adil Agarwal there of Dr. Agarwal's Healthcare. We're staying with the space. Sun Pharma's numbers are out, and we'd just like to look at those very quickly as we see the first set of numbers. They've been with inline profit. In fact, revenues have also met estimates. Profits are at 2,714 crores versus estimates of 2,762 crores. I would say in line, but slightly below. You're seeing that in the stock price, and revenues at 14,611 crores versus an estimate of 14,492 crores. So a beat there as far as the revenues are concerned. EBITDA is also completely in line, 3,954 crores versus an estimate of 3,946 crores. Margins have also come in line at 27% versus 27.2%. You have to wait to get some of those internals in. But if you look at that stock, not showing any great positive reaction at this point after the numbers have come in. Nirav, were you looking at something specific coming out of Sun Pharma?
Well, I think the overall sentiment for Sun Pharma has been positive because of the recent acquisition which has been announced by the company. So, and overall, if one were to look at the pharma scenario, then we've seen some very good numbers as far as the India business is concerned. So, I think I would particularly like to see the numbers of the India business as far as Sun Pharma is concerned, because most of the companies, frontline companies, have reported double-digit growth. So that is, I think, something which I would like to focus on. And overall sentiment for pharma continues to be strong, despite Dr. Reddy's and Cipla having reported weak numbers. I think the markets has given a thumbs up on the basis of the outlook.
Right. Nirav, thanks for that. As you're mentioning, focus is India business and US business. In fact, Varsha is with us. Varsha, India business was expected to grow 13%. US sales, again, we were expecting good 4 to 5% sequential growth to come in there, and that was the focus area. If you're looking at the press release, what are you picking up? Because the stock's not really doing much. I mean, in your macro parameters, it seems pretty much in line.
Yes, absolutely. On to the US business. So US business, if you see, was expected at around 450 to 500 million dollars, which came at around, 459 million dollars, which is lower by 1.1%. But the specialty one, I think there is a miss, I would say, because the innovative medicines, if you see, continue to grow. But this also offset the decline in the generics business, and the US sales, if you see, accounted for approximately 28% of total consolidated revenue. Onto the global innovative medicine, which is the specialty ones, their sales were around $354 million, but the expectations were higher. Expectations were around $400 million. So there you are seeing that miss, I would say, when it comes to Sun Pharma. Also onto the India business, the formulation business, that is India business, grew almost 15% year on year, which accounted 33% of the total consolidated sale. And altogether, if you see FY26, sales were around overall sales were around up 14%. So US business was in line, but specialty business continues to be dragged. But overall, the EBITDA margin also was in line.
Okay, Kunal, I want a quick line from you on Sun Pharma on the charts. It is in line on the face of it. Clearly, there is some concerns here because you're seeing that stock take a bit of a dive, nearly 3% down right now. What would you make on the charts? Is there any opportunity over here, Kunal?
Overall, I think the larger term trend still remains positive, but stock had already seen a good run up in the last 10 to 15 trading session. So probably you might have a cool off here. But again, the support on the downside for the stock, which is important that the stock has to hold, is somewhere around 1780. So 1780, 1790 is the demand zone. If he comes out there and settles, then probably one can again start to go long again for targets of 1900 on the upside.
Okay. We're talking about Sun Pharma there, but just paying attention to what has been happening around the world. So a couple of things. Interesting story from Al Arabia. I'd like to pull that up first. And we're going by what Al Arabia is saying right now, where they're talking about, as per their sources, a agreement or a draft agreement which could be out between Iran and US. A final draft could be out within hours. It's an immediate, comprehensive, unconditional ceasefire on all fronts, including land, sea, and air. A mutual commitment not to target military, civilian, or economic infrastructure, end to military options, and halt media war. Commitments to respect sovereignty, territorial integrity, and non-interference in internal affairs. Guarantees freedom of navigation in the Arabian Gulf, the Strait of Hormuz, and the Gulf of Oman. And joint mechanism to monitor implementation and resolve disputes. Negotiations on outstanding issues would begin within 7 days as per this draft. A gradual lifting of US sanctions in exchange for Iran's commitment to the terms of the agreement as well. And the draft agreement reaffirms compliance with the international law and UN Charter. It would take effect immediately once officially announced by both sides. I also want to play out for you what Marco Rubio has said a short while ago, where he's saying Iran is trying to create a tolling system in the Straits of Hormuz. Listen in.
The Straits, Iran is trying to create a tolling system. They're trying to convince Oman, by the way, to join them in this tolling system in an international waterway. There is not a country in the world that should accept that. I don't know of a country in the world that's in favor of it except Iran, but there's no country in the world that should accept it.
Okay, that's the US Secretary of State. I'm going across to David Roche, a strategist at Quantum Strategy. Now, David, as we've seen several times in the last few days, you don't know which version is true, right? Is the version that Mr. Rubio talking about the right one, or what Al Arabia is reporting the right one? But is there visibility now on a possible wind down of this conflict one way or the other, considering that the ceasefire has not really been broken so far? It's held.
Well, let me put it this way. There is obviously something about to come out, but neither you nor I can say what that is going to be or what the effect will be. All we can say, the two of us, is that we've been through this up the hill and down the hill a great number of times, and we are still where we were, which is a state of war in the Gulf, and now we have to see what will happen now. So that's the first thing to say. The second thing to say is that this agreement has to do two things. Number one, it has to allow for the immediate denuclearization of uranium, of enriched uranium, and the ability to create such enriched uranium in Iran immediately. That's number one. Number two, it has to roll back, and I mean roll back, not just stay the implementation. It has to roll back decisively Iran's control of the Gulf, which is becoming more a reality every day. If there is an agreement to have a ceasefire without those two things happening first, we are nowhere. Because what the Iranians will do is play for time and on reality in the ground concede nothing on either front. So I provided you with the benchmark. Let's look at what comes out and apply those benchmarks. But the likelihood, in my view, is that the Iranians are not offering real concessions, just kind of ceasefire stuff, which is easy, and that this agreement will go nowhere. That's my personal view. But at least I've given you the benchmark for you to have your personal view.
Good afternoon, Hiral here. You know, from what Tamanna was just taking us through as well in terms of what's come out so far, one interesting point I gauge over here is that it's guaranteeing freedom of navigation in the Arabian Gulf, the Strait of Hormuz, and the Gulf of Oman. Whereas you have Rubio, who just made a statement right now that there is a potential where Iran is trying to convince Oman to participate in terms of the tolling, entire tolling strategy that they have as well for the Strait of Hormuz. Both of them slightly conflicting. How do you read into it?
I would say slightly conflicting is like saying a person is half dead. I'm afraid they totally conflict. First of all, on the Iranian-Oman talks, that has been on and off for a long time. The Omanis always have stood in the middle between the other Gulf states and Iran, seeking always to appear as the middle guy. And that's why they constantly want to be the chief negotiator. So that is not news, and it's not going to happen, because Oman has absolutely no interest in allowing the Iranians to impose tariffs on ships passing through their waters. No way. Okay, the second thing is Marco Rubio's statement seems to run counter to what the Saudis or whoever is leaking this Saudi plan are claiming, that the plan guarantees complete freedom of navigation. Well, we'll see. But I personally do not believe that Iran is prepared to step back from its control of the Gulf, because that is its new nuclear weapon. It's its big strategic win coming out of the war, and to give it up would be basically a massive climb down by the IRGC. And while they may say, we'll do that during a truce, it will be meaningless, because they will never go back from trying to claim jurisdiction and power over the Gulf.
Okay, David, thank you so much for speaking with us and just giving us a sense of what is happening geopolitically. But, like we've been saying, we'll believe it when we see it. We'll take a very short break at this point. Come back with what should be your Friday close play. Is it risky to take a position in markets? Is that why we're seeing that sort of cool off as we're going into closing trades? Will we hold up above 23,700 at least? All of that when we return.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization.
Yeah.
And that's when you hatch this plan that, chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management, unfortunately, doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives. Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the
That
worst
mutual fund.
mistake you saw?
Someone investing in equity when
All right, welcome back. I just want to take you through what's happening in markets before we speak to Ashish Chaturmota, who's joining us. He's Managing Director and Fund Manager at Apex PMS JM Financials. But before we get to Ashish, you're seeing markets cool off and cool off rapidly. Though banks are staying pretty stable. It's the broader markets which seem to have lost steam, led by IT stocks to some extent. And, if you look at some of the big losers this morning, Engineers India actually stands out, so does a central bank. What's really staying rock solid is a Honasa consumer. I want to pull up a Keynes Tech as well. You had Dixon popping earlier in the day. All right, we're going in a bit of a lag on the graphics, so I'll slow down. I was talking about Honasa. Let's pull up Honasa. We'll go at that pace. Okay, there you have it. Still stuck about 7.5% up. Let's go to Keynes Tech. Keynes Tech has also been doing pretty well, about 4.5% up. And let's look at Dixon, if we can. Dixon also had an interesting move all day today. So there's some stories out there. I want to look at RCF as well as we can. Good set of numbers on RCF, and you've seen the stock pair out to some extent. But I want to go to Ashish Chaturmota, who's joining us this afternoon. Ashish, are you seeing any positive signs where you'd like to build positions? Because we were speaking to a geopolitical analyst a short while ago who said that something is coming. The question is, we're not sure what.
Hi, good afternoon, Tamanna. So I think, broader market, there is a lot of pressure. In fact, today we saw some rally. Now again, there's a cool off which is happening. There's concerns with regards to inflation, with regards to how the rising crude prices are going to impact our overall, financials. And I think that's going to create some challenges. And also there is concern that in the next 1 or 2 quarter, this inventory gain, which was the case for last one quarter, I think that will start fading, and the real challenges in terms of margins will start getting reflected from next quarter onwards. So I think broader market perspective, large caps are going to face this challenges because the incremental flow of money is not taking place in this space. But definitely in the small mid cap space, and particularly on themes like power, transformers, HVDC segment, AI, data center related themes, wires and cables, we have seen very good traction in terms of earning growth, and there we believe that the incremental allocation is still coming despite very rich valuations which we are witnessing in most of these stocks. But because the earning growth visibility at least for next 2 to 3 years is visible, the order book is full for next 3 to 4 years, markets are rewarding those things, and I think that's where the incremental flow is taking place, and that is one thing. Second is the entire CDMO opportunity, less to do with what is happening globally, more to do with the way a lot of these CDMO players are gaining traction from the innovators globally, and we have seen some companies even saw growth of almost 40, 50, 60% kind of growth in the CDMO business in their overall scheme of things. So I think companies like Laurus Labs, Divi's Lab, for that matter, Sai Life, Naveen Fluorine, they are seeing very good traction even in the current set of environment.
Okay, so CDMO is ruling from the pharma pack. Thank you for that, Ashish. In fact, we have Vinay Rajani from HDFC Securities also joining in. Vinay, welcome to the show. Let's not just talk about markets right now. Tamanna mentioned a couple of names which are moving. Fertilizer pack is up and about. EMS, after the kind of correction that we've seen in the last couple of days, is seeing some buying interest come back from a Keynes Tech to a Dixon. What are charts indicating? Further upside?
Yeah, so Dixon Technology definitely has broken out. The previous swing high was 11,674. Now that has been, this stock did underperform the entire EMS segment, and the stocks are performing. We've seen some correction while the stock like Dixon has started performing well. Its volume is convincing. The stock is above 50 days EMA. Now seems to be heading towards its expo, which is placed around 12,500. So yes, definitely after today's move, it looks like the Dixon is traded higher, and 12,500 is the next resistance for the stock.
Okay, I want to talk about what is strong contender for stock of the day. That's Honasa Consumer, reported more than two-fold jump in its consolidated profit in Q4. Mahima is here, joining with the bull case, which is apparent on the screen, but it's a good time to talk about the bear case as well. Mahima, what's the bull versus bear story?
It's a Tamanna, as you rightly mentioned, Q4 has been a very strong quarter for them, led by both EBITDA and PAT growth, plus revenue growth has also been very strong, backed by volumes. But I think the bear case with regards to this counter is that that the way margins and EBITDA has grown this quarter, whether this kind of growth is sustainable going forward or not, considering that they are going to do store expansion going forward, they're going to put money, cash flow going there. So whether margins will be sustainable at these levels or not is the key question, and that we'll have to see as to once how FY27 fares. The other part, they've said that overall margins did reach the highest level at 11.7%, but this will require reinvestment. If they want to grow going forward, there could be reinvestment going forward, and that could dilute margins as well. With regards to their guidance of overall high teens revenue growth and 100 basis points annual EBITDA expansion, remains very strong, and Street definitely is enthused with that. But where valuations are concerned for all of these new age tech platforms, they were never cheap. They're still not going to be cheap, at least for the next 2 years, because FY27 forward P suggests around 48, and FY28 estimates are also suggesting a PE of around 42 times. So nowhere near cheap is where valuations are concerned. Lastly, in terms of where there are two different views by two brokerage houses. First one is Jefferies, that has said that Honasa is firmly on a strong growth path, but on the flip side there is Citi, which says that of course innovation is going to remain the key, but I think competition, but according to them, competition is intensifying, and that could put pressure in terms of where the volume growth goes. So this is the overall view of the bull and the bear case for something like a Honasa Consumer.
Okay. Ashish, what is the bear case for you, if any, or is it all looking bullish when it comes to Honasa? Because valuations is also a big question now.
Definitely. So I think valuations are expensive, and at the same time, the biggest challenge is the way the competitive intensity is taking place in this space, and that will make sure that this higher valuation will face a lot of challenges. And we have seen earlier also, whenever there's a strong competitive intensity which starts to hit, then the premium valuation starts to see correction. We have seen in the case of Eternal and Swiggy, once Jepto entered the market, and now there's a discussion Amazon is going to come out with very strong entry into this space. We have seen a very strong de-rating in the entire quick commerce and the food delivery business. So I think yes, there's a sharp uptick which has happened, but I think we are avoiding at this juncture.
Avoiding at this juncture. Okay, I have to talk about Minda Corp. Pull up the intraday very quickly. The Q4 numbers, the first look of it are looking smashing. That's why that big spike over there. Net profit at 125 crore versus 52 crores. This is what, a 5x increase in the net profit. Revenue up 29% and 1,704 crores. EBITDA up 33%. And margins actually have remained stable, 11.9 versus 11.6%. We're going to wait for Puneet to come and give us that first cut very quickly. But Ashish, are you looking at Minda Corp? And is this something that looks interesting in that entire space?
Definitely, I think the entire auto ancillary space is looking very encouraging. We have seen numbers of SJS and Sansera. Sansera posted a very strong set of numbers. Same is the case with Minda Corp, posted very, very strong set of numbers. We need to go into details, but the prima facie numbers looks very promising with the kind of the top line growth and the EBITDA margin profile which the company has managed in an environment where rising commodity prices could have hit the margin profile. So I think that's very commendable. From a valuation perspective, also it looks reasonable. And I think stock is headed towards 650, 660 kind of trajectory in days to come. So I think yes, we maintain a very positive view on the stock.
Okay. I want to get a quick technical view also on both of these that we're talking about. Vinay Rajani with us. Vinay, let's talk about Honasa first and then Minda Corp.
Yeah, so Honasa has seen a significant volume jump today, and technical has improved. But let me tell you 1 minute. Honasa. Yeah. So Honasa has surpassed the crucial resistance of 360, which was a previous big gap was there between 300.
One sec. We've lost that link with Vinay, but I want to. Okay, so we'll get his view on Honasa. The other one we were talking about is Minda Corp. Puneet joining in on the first cut on Minda Corp. Puneet, on the face of it, the numbers are looking really good.
Well, yes, thank you for that. It's definitely a good quarter for the company, and the bigger beat that you see actually on the profits is because of one exceptional gain that has happened, and hence that huge spike that you're seeing also on the stock today. But overall, in spite of that big gain, on the EBITDA front, it's been quite strong at 11.9%. So this quarter, what we've seen, even for the auto OEMs as well as for the auto ANCs, that the EBITDA margin, despite the volatility that we've seen in the commodity cost, seems to have been held up at least for now. We've also seen growth as visible in the numbers of Minda Corp as well. Revenue also coming in line for the company at this point of time. And the exceptional item that we're also seeing is largely because of the higher other income that we've seen. So for certain companies, we've seen mark-to-market losses, but in case of Minda Corp, that has been the other differentiating factor for profits. But overall, in terms of the four numbers, all have come in line. EBITDA beat on the back of operational metrics and leverage giving that benefit, and the profits is a beat because of the one-time higher exceptional item as well as the higher other income as well.
But Puneet, an interesting point that you make right now is in terms of the EBITDA margins, which have remained absolutely steady in spite of the volatility. But do you think that is a factor that we'll have to take into consideration in the first quarter of FY27, largely because majority of it, I think, will be factored in there?
Well, most certainly, and I think hence the commentary becomes very crucial, because for someone like Tata Motors, they have said 5 to 6% revenue impact in quarter one. So OEMs facing the heat, and hence we are looking at each and every auto and company also coming out with results giving that kind of commentary where they could see some impact. So for Motherson specifically, they had mentioned that copper prices is a pass-through. For aluminum and energy prices, they have specific client conversations. So we'll of course watch that out for Minda Corp as well, what that piece finds out. But quarter one is expected to be where commodity costs will have a play across the auto pack as well as for the other sectors as well.
Okay, thank you for that,
9% up moved Tamanna on Minda Corp. I mean, that's a good one there.
That is a hot one. And you know, this is a trend that we've seen through this result season, even in the last week when markets were blah, to say the least, if I'm talking about the Nifty here. But your mid and small cap, and I'm not saying Minda is a small cap by any consideration, but your mid space, or I would say your broader markets, some of the results have been smashing. And I know people will automatically say, "Arey, but Q1 mein kya hoega?" That's true. We don't know Q1 mein kya hoega, and we've already seen some of that pain. We don't know the extent of hit. But the fact that fundamentally businesses are growing like this is exactly what the markets have been waiting for.
Yeah, and the markets are rewarding the winners. So it's not that the markets are punishing the winners as well. So that is one of the key positives. So a lot of stock-specific action is what has continued. And again, we're coming to a day where it seems to be a range-bound session time.
Yeah, we're getting right back there, but nothing range-bound about MTAR Tech. Let's put the spotlight now on MTAR Tech, a stock that has delivered stellar run in the recent years, and now cooled off from its highs of the day, still about 2% up. But let's pull up the weekly chart, the yearly chart, and the monthly chart, just to give you a sense of what MTAR Tech has been doing. And for the last 12 months, it has had a 387% increase. This is the kind of rush. Just 53% of that has come in the last 1 month itself. Sharad Dubey is joining us and breaking down all of the reasons why MTAR Tech is shining and also answering the questions about valuations. Sharad.
Well, yes, arguably this is the stock of the month. The people who are holding the stock and the people who are not holding the stock, both of them have a lot of questions, and I'm here to give you the answers over here. Let's see what's the important up move coming in. And remember, the company derives more than 50% revenue from Bloom Energy. That's the story which is playing out, the AI theme story. It's the part of the thesis of India's AI trade supplying power to Bloom Energy. Because of that, both of these stocks are going up. Of course, there's a catch-up coming in. But should a precision equipment manufacturer deserve this valuation? That's the big question to be asked. Also, interestingly, institutions are increasing the stake, while on the other hand, the promoters are selling the stakes. It becomes a very interesting take to look at it, but I'll show you the data to that. The trailing 12-month trailing PE ratios, 5-year peak MTAR Tech was 396 times, and currently it's at 265 times. But hold on, Bloom Energy, it's at 3,000 times the 5-year peak. And you compare that with the current numbers, it's at 2,706 times. So on a fundamental basis, MTAR Tech might look very expensive, but on the AI trade, is it looking like that? And just compare that with Nasdaq, 34 times the 5-year peak, and the current number is just 25 times. So look at the valuation mismatch which is there. And of course, markets are supreme, and right now they are giving that valuation premium. Look at the move which is happening. Over the last 1 year, MTAR Tech is up almost 400%. Bloom Energy is 1576%. But last 1 month and 6 months, MTAR Tech has actually overtaken Bloom Energy also when it comes to the return, 57% return in the last 1 month itself. So it's pretty much interesting how things are panning out, and I have compared that with MTAR Tech and Bloom Energy. But look at the stock price, in April 2021, it was at 1,000 rupees a share. Now after that, for the next 2 years, you could say it was very flattish, but from 2026 onwards, look at the growth coming in. All of this growth, 3,000, 5,000, 6,000, 7,000, 8,000 at levels in the month of May itself. Will it touch the 10,000 mark? That's the big question to be answered. Also, apart from this journey, the recent selling has there on May 21st, 60,000 shares of that stake from the promoters were selling. And if you look at from March 22 onwards, there was a 50% stake for the promoters. And after that, it has been gradually falling, but it is defying the proper market school of thought. And the other way you look at it, the FIs and DIs have been increasing the stake. So this is the picture coming in from the promoter stake sale. But look at the orders. Orders also coming in. The recent order was almost, you could say, 468 crores. It came in on May 22nd. Of course, there's a huge order of 2,200 crores in May 14th, April 1st, 36 crore. And the order book itself is also pretty strong. Only one analyst target price is left. Rest everywhere the target has been hit. Phillip Capital, MOSL, Avendus Spark, Elara Capital. Only that 10,007 rupees target is there. The question is, will it touch that, or will we see some kind of a correction?
Yeah,
just watch out for it, Sharad, as you speak right now. And I think you should be giving Sharad the chart on the wall right now to see the kind of moves that you're seeing on the counter. Sharad, is it going to 10,000 or not?
I don't know that, but there seems to be an impact. It's almost flattish here. So yes, it's below that 8,000 mark.
Yeah, it's been a sharp drop actually. It was about 3.5%, 3% up when you started your piece. It's now you've seen a sharp drop over there as you've been speaking about the valuations and the fact that there is only one analyst reports target yet to be met. Ashish Chaturmurthy, do you track MTAR?
So yes, we have been tracking. In fact, at one point,
do you hold MTAR?
We were holding this stock as well. We made very good returns out of it. Fortunately, we were able to enter the stock somewhere around 3,600. But since the valuation went crazy, at some point of time, we decided to book the gains. So we booked the profits. But yes, because of this very strong visibility coming from Bloom Energy, because of the shortage of gas turbine, Bloom's order book has been consistently increasing, and MTAR has almost 50-60% kind of business coming from Bloom. So that's where the re-rating started happening, and I think the market is rewarding at this point of time on the optionality which this company is having due to the data center theme, as well as even nuclear side of the business market is trying to give that optionality premium. But at this point of time, it looks very expensive. So yes, I think on dips,
I'm seeing Ashish Chaturmuta with that glow, saying that we have moved out when the valuations were too high. Do you think it was the wrong timing or the right timing? I always wonder when people say I had the stock and I moved out. Is there any remorse later, or do you think it was a good idea?
No, so always there will be a FOMO. You understand that there is always FOMO, and the good part is in a very short span, in just 2 months, the stock doubled. So we were fortunate enough to book that gain to get the entry timing right. But definitely, if we would have continued, the rally the upside could have been far different. But it's okay. Means in market you get some trades right, some trade wrong. So I think it's a law of averages which plays out.
Wrong. You think you got MTAR wrong?
So it's about not riding the trend fully. That I would say.
You have seasoned money managers also always have that FOMO. But look at Star Cement as we're speaking. Hiral, just bang on cue.
I mean, the profit number, 20% growth. Just pull up the intraday chart with the kind of spike that's coming in on that profit number that we're picking up. Your revenues are 11 to 12% up move there. It's the margin picture that we have to check over here, because that is what is going to be interesting. EBITDA, 20% upside. 314 odd crores is what you're tracking with regards to Star Cement. And if you have to look at the EBITDA margins as well, that seeming to have improved better. The story over here is across parameters, you've seen cement companies do really well. We spoke about Dalmia, we spoke about JSW Cement this morning as well, and all of them smart moves that we've seen in terms of the markets as well. But clearly, Star Cement, Star today, I think it's still giving up those early gains. Quick view, Ashish, in terms of cement companies right now. First up, Star Cement, and if you have to compare it to its peers.
So honestly, Hiral, we have been avoiding the entire cement space, and we believe that it's the capacity utilization is yet to reach to a number where these companies will make very strong set of numbers. And I think even if you want to play the entire capex or manufacturing, ideally power, transformers, AI, data center, and maybe wires and cables could be a good proxy to ride this trend. So we have been avoiding cement as a basket.
Okay, so you're avoiding cement as a basket. Well, you've seen Star Cement actually see that great spike over there. All right, we're just keeping it quick and pacey this afternoon. A Bloomberg report suggests Capital Group is turning more bullish on the Adani pack, pumping in over $2 billion across 3 group companies. At the same time, it's trimming exposure to Reliance, signaling a clear shift in foreign investor preference. Let me go across to Puneet for more details. Puneet.
Well, thank you for that. Well, it's a big FII building in positions in 3 Adani Group companies, and we'll put that into focus right now. $2 billion stakes already been bought into as well. And they've, of course, pared down the stakes within the other holding company of Reliance Industries. When you also look at the 3 companies now, Adani Ports is the first one that I want to talk about. The other one is Adani Power and Adani Green Energy. These are the 3 companies where stakes have been built into now. On May 5th, the first purchase was made in Adani Ports of nearly a 2% stake, 7,800 crores worth of stake, roughly around $776 million was bought into by the Capital Group into the Adani Port. Apart from that as well, 1.5 to 2% stake being built into Adani Ports as well as Adani Power and Adani Green, pardon me. While a shift in the foreign investor preference has actually now happened, and in terms of the broader transition that we're seeing across a bunch of companies and spaces as well. So purchase towards the next phase of growth, essentially, of India's economic expansion is happening with these Adani set of companies, and capital seems to have taken that bet as of now. Finally, when you look at the infra development, energy transition and manufacturing push, all seem to be covered with these bets. So that's the story today that we're covering on. And of course, this story is by Bloomberg put across through the different segments that Capital Group has built the position into the 3 spaces that we discussed.
Okay, and standard disclaimers there. You're watching this report on NDTV Profit. NDTV is a subsidiary of AMG Media Networks Limited and Adani Group company. All right, so a lot of buzzing stocks this afternoon to talk about. We've been talking about the ones where results are coming, but through the day there have been many such champions that have been moving one way or the other. Parth joining in to wrap that up for us. Parth.
You're right, Tamanna. With the earnings season coming in, just a lot of buzzing stocks. But here are the key ones. Starting with Ramco Systems, the stock has hit an upper circuit of 20% after posting really strong Q4 numbers. Their annual revenue has crossed 700 crore mark for the first time in FY26. Now, this revenue growth was led by 15% growth in their recurring revenue and 25% growth in their payroll business, which the management is looking at as the next growth driver for the company. Their EBITDA also saw a growth of 14% year on year, with EBITDA margins reaching 24%. So really strong numbers. The second one is Max Healthcare, which is on the downside. The stock has lost around 5% today, with the Q4 being on the weaker side. The revenue saw a growth of 10%, but their EBITDA margins were down by 40 basis points to reach 26.8%. Now, this was mainly due to their current expansion, pre-operating and hiring costs, which are creating a drag on their profitability. Also, the company also saw a decline in their oncology segment. And lastly, we have Lakshmi Dental, which has again posted really strong Q4 numbers, and the stock has hit an upper circuit of 20%. They have achieved their highest ever quarterly earnings with a growth of 21.9% year on year. Now, this was led by the highest ever revenue which they got from their international operations, and also there was a very strong recovery in their domestic business as well. Their EBITDA margins also saw a growth of 18.3% versus just 10.5% year on year. So these were the three buzzing stocks that were in most focus today.
Lakshmi Dental locked in upper circuit. Thank you, Parth, for that. Very interesting names there. Ashish, any views on these? And one more I want to add. Engineers India. Biggest single day drop for this PSU since the 4th of June 2024. Almost a year. Weak quarterly performance. The PAT has fallen by nearly a third. You have the EBITDA, which has halved in value terms, and the margins have also nearly halved. And your consultancy and turnkey project revenues have declined. So there is pressure building up in this PSU. Any views on any of these names?
Honestly speaking, Hiral, we have not been tracking these names. I think yes, Engineers India from a capital goods segment we have tracked it, but from a margin profile perspective or order book positioning perspective, we were not very comfortable with the name. So yes, we have avoided it, but definitely within the capital goods space, BHEL is one company which looks very promising from an order book perspective, as well as how they have been executing their recent order book and the way revenue visibility is coming. So I think yes, BHEL on dips looks very, very promising within the public sector, power equipment supplier.
Okay. Ashish, thank you so much for joining us. Let's start wrapping up what's happening in the markets at this last hour. Just about 2.5 minutes to go. And the Nifty pretty much flat. I wouldn't say flat. I would say better than flat. You're about 85 points up. Not able to sustain at 23,800. That's very clearly a tough hill to climb right now. We might close around the 23,750 mark or thereabouts. What has been exciting in the last hour are all of your results which have come in fast and furious. Look at Minda Corp is now the top gainer on the broader markets entirely, about 8% up. Right now as we go into close. Deepak Fertilizers has done well. It's a good day for fertilizer stocks overall, and Deepak Fertilizer about 6.5% up. Elecon Engineering doing well. Honasa has been steady through the day. Keynes Technology, Astral, some of the other gainers that we've been seeing overall. If I talk about some of the losers, Engineers India, and this is something that you've been tracking, largest single day drop, isn't it?
Largest single day drop in almost a year. So a couple of their segments are not doing well. So that's what is putting pressure. In fact, Central Bank of India as well on the government OFS. It started off with a 4% cut this morning. It's deepened 8% there. GMM Fodler is also under pressure on the back of earnings. Max Healthcare, 6.5%, a Nifty 50 stock, which is the top loser as well. So that stock is under pressure. Apart from that, rate gain is pretty interesting on the back of the order win. 9 to 10% up move coming in on that stock. Minda Corp we've already spoken about. Let's just pull up a Nykaa on the screens and let's see what Nykaa is doing, because that was something. Nykaa, that's a Minda Corp. Nykaa trying to again come up but around a % up move is what you're seeing there. But clearly, Tamanna, I think the only encouraging part over here is that we're going to probably close above that 23,700 mark, which is some respite for the markets. Let's pull up Bank Nifty because there is a little bit of pressure still in terms of the private banking space, but the Bank Nifty also has again tried to play catch up. You're up almost 1.4%, trying to inch towards the day's highest levels as we speak. And if you have to look at the private banking space, look at the sectoral indices. If we can just get that heat map to understand what's happening to individual sectors, you will see that pressure there, but your PSU banks are the ones probably which are helping it. Private bank, there you go. It's gone to the day's highs, 1.7% up move there, followed by Bank Nifty, financial services. So it's that space which has got your markets higher. What's losing out is mainly healthcare, which is under pressure.
It's
Media.
healthcare's been a bit of a bummer actually. I mean, Sun Pharma was
Max Healthcare is another one, right? Which has put pressure today.
Just pull up the internals of that that index if we can on the Nifty Healthcare, and I think you will see Sun Pharma there pulling things down, pulling the whole index down. Max is not on this index, but Glen Pharma also another big loser. Aurobindo Pharma also being another loser. I have done quite badly today. Should we just quickly pull up the weekly chart before we wrap up and get to editor's cut? Remember, that's the big one today. I want to look at the Nifty for the week. The mid cap, small cap for the week, 1.36% up. As painful and going nowhere as it seemed, you're closing about 1.5% up. For the Nifty mid cap, 150, it's been about 2% up. Let me pull up the small cap and then we'll just do the Nifty Bank. The small cap index is up about 1.25%, and the Bank Nifty nearly 2% up. So all in all, not too much to complain, but we break it down for you after this very short break. Don't forget to join us on Editor's Cut. Vikas Khemani is with us in the studios after we come back. Thank you for watching. We'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, you know, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit,
for the most incisive market intelligence and mean.
Welcome to the editor's cut. The more things change, the more they seem the same. Is it feeling like one of those weeks? I don't know. I think there has been 1 inch of movement forward if you look at all things considered. On the war front, the ceasefire in its name at least has held. There's no increase in kinetic warfare. Results in some of the mid and small caps have actually been pretty good. And the rupee at least has not closed at 97 at this week. Yeah, so we're back to maybe where we were last week with a little more optimism, you think, guys?
Yeah, you could argue. Let's just see. The last 7 days pattern has been, like we said, up one day, down the next. Yesterday was down, right? Today is up. Let's see if Monday is down.
Yeah, but the question is, we are again to square one. It's been 2 months. Uncertainty has continued. And even the ceasefire that was announced, that has not really done anything to the Strait of Hormuz. And today, again, we've had conflicting views from either sides. So, yeah, we are on square one.
Yeah, you know, so this Al Arabia report, which came in just before we closed shop for the week for markets, I thought was interesting because it's talking about when it claims there's going to be a draft now within the next few hours, and it talks about easing of sanctions on Iran. That's one thing they desperately need. It talks about opening up the Strait of Hormuz fully. Frankly, the world only cares about the Strait of Hormuz. Baki jo ho, so ho. So it does at least talk about that. And I know there's other set of reports in Rubio coming in saying that Oman and Tehran want to get together and put tolls in place. If we can get out of this situation without a permanent toll on the Strait of Hormuz, I think it would have been worth the wait.
100%. I would maybe just go a step further, Tamanna, that let's assume there is a toll. But if it allows passage of crude, and therefore if oil prices come off, and thereby the rupee also improves a bit, it is a better situation than what it is right now for the last 2.5 months.
No, I'll tell you why I don't agree with that. Because logically, absolutely, that agar toll hai, then we'll add it to the cost and it's fine. But then you're assuming that there are logical actors applying that toll, which has not been the case. So once you have given the person who wants to lock the gate the stick, then it can come back
and
at any
can be
time.
Enacted as other places.
You're in the end giving the lock and the key to them, right?
Yeah, that's a precedent. But I think, guys, the biggest rescue act of the week has been of the rupee and the Reserve Bank of India deciding what to do. So I'm just quickly going to give a few pointers that I have put together, my thoughts of what's been happening this week, and then of course Neeraj and Hiral will also follow before we get Vikas Khemani in and hear what he has to say. So the RBI has begun to shore up some defenses to the rupee. They're selling dollars, but my point is that will only go so far. And interest rate hikes at this time is an unlikely first choice. It's actually not a great choice looking at where the economy is. We have reported this week that FCNR deposits, NRI deposits could be high cost options that they are looking at. But like we said again, and Manish Dangi said it on this show last week, these are very high cost options. Again, will not last too much. I just want to pull up for you what Arvind Panagriya put out. And he put out a post yesterday, a long thread. And remember, he's the 16th Finance Commission chairman, a very well-regarded economist. He makes the case for letting the rupee depreciate, even if it's 100, 99, 101. And his case is that if you start defending the rupee, it's first of all not going to happen. An FCNR and NRI bond kind of a situation is just going to be a band-aid. You are going to have to play this out, and in the meantime, use a weak rupee to shore up your exports. My other point, are we actually prepared for a case where the crisis ends? We know it's going to happen, but have we prepared for it? Are you prepared for it on your portfolio? Because the street has largely by now ignored the constant commentary from US and Iran. Sometimes the White House says something, Tehran says something. What matters is that oil continues to trend above $100 a barrel. What will come first? Alternatives to the strait, which some Gulf countries are already beginning to build, or the end of the war? In either case, you need to be well positioned for what will come when the crisis eases. What are those stocks and sectors which would really bounce back? Because it's not going to be something where you have enough of a lead time to take action. And I think one important bit for me was India's melody moment And I think that became the biggest meme this week. We should have got some Melody on the set today. You know what it told me, guys? In that whole story, the love for a nostalgic brand, at least, you know, when I was still in that phase of my life and you had to take toffees to school, okay, on your birthday, Melody was a premium choice.
Yeah.
And the fact that Melody was chosen to be given as a gift, and everyone immediately remembered the jingle of Melody, chocolatey and khud khao or jaan jao. Just want to relate it to the markets. Is it time to look at core fundamentals of investing? Companies that have a path to profitability are not in very sexy sectors, but you know, players like infra, green energy, or even if you look at pharma, FMCG, solid businesses that you can understand. I don't know, maybe that was the Melody moment for me in the markets this week.
Okay, what was yours?
Melody moment for the markets, I think it's AI again for me, because the way AI has been put out,
are you talking about the memes about the event?
No, not about the event. But the way AI as a segment has been panning out right now, I think after NVIDIA earnings as well, it's a lot of food for thought that has come in with regards to the impact it could have in terms of Indian IT as well. I'll come to that, but overall, if you have to look at in terms of markets, we're talking about 2 months of uncertainty that has come in with regards to where the India-US war goes. Now, an interesting point I read from a CLSA note where they're saying that traffic returning to normal in the Strait of Hormuz, the chances have actually come down to 52% from a 75%. So even if things get resolved in the Strait of Hormuz, the traffic becomes of utmost importance. That has come down. Secondly, it's the AI play which is remaining as a dominant story globally. And the question is, are we moving into a zone of excessiveness in terms of AI, where global markets are betting big on AI? When it comes to India, when will that translation happen? And I think that's what the Indian IT companies are now preparing from the conversations that we've had with L&T Tech, a lot of your new age companies as well who are betting big on AI, where they're saying that, okay, investments are being made right now, but I think this is the time we've arrived where benefits will start coming in slowly, steadily. So I think that's my key takeaway there. And secondly, if you have to talk about the Indian markets as well, I mean, from the start of the war, yes, we have recovered, but not to the extent of the global markets, right? The question is, once the recovery comes in, is it going to be the Indian markets who will recover faster than the global markets? That's the key question. And in addition to the Manna's point, where you're talking about path to profitability, where you're talking about companies which could actually deliver, traditional companies. My point is, promoters have actually turned buyers in a couple of Indian companies.
That's true.
And the net promoter buying I was seeing since Jan 2026, we're talking about around $4,200 million worth of buying that has come in from promoters. And your buybacks also after the taxation change, a lot of companies have started doing buybacks right now. So there is little bit of strength that I'm seeing on that aspect.
Okay.
Because of which probably the next big trigger is what markets are just waiting to blow up.
You think so? You're feeling that optimistic?
No, I mean, so I'll make it very quick. The deck is set for that if there is a positive Q, then the markets may do well. Simply because, and just before we get in our guest, just 3 quick lines here to try and tell why. And I've borrowed this from the Morgan Stanley note because Rhythm Desai and team write this note and say, it's interesting. One, that India's performance relative to the 12-month history in the 12-month return. So, okay, the first point is actually this, that India's share of global profits exceeds its global index weight by the highest margin. So the margin between profits and the index weight is actually the highest. It's never been this high. Therefore, there should be a mean reversion. You could also argue that the trailing 12-month relative performance is the worst in history thus far. And therefore, if there is ever a sign or a moment for the markets to do well, it probably has to be this. Remember, amongst everything else, Indian ROE is still trade high, and therefore all of that is a positive. Foreign positioning is still at multi-year lows. Now, even if oil were to cool off and we get in some inflows, maybe the AI trade still stays alive and kicking, and other industries get it, or other countries get that money. But guys, I mean, maybe just maybe we'll look back in history if indeed the conflict were to resolve and oil prices were to cool off and the anti-air trade were to become, because the air trade becomes a bit cheap, we'll look back in history and say that this was the moment wherein this is a good time to put in the money, but people did not put in.
I agree. I agree. And I'll tell you why. Because at the end of the day, the fact is the amount of crude in the world is not evaporated. It's still the same amount of crude in the world. This will resolve itself. It just depends on what comes first. An alternative to the Strait of Hormuz. So from Fujairah now, the UAE is beginning to find an alternative. There is this east-west corridor that Saudi Arabia is beginning to use. The world will find another way, and then Iran will be left with nothing to negotiate. So they also know this. It's clearly a strategic country. So they have to close. They have a timeline closing to actually seal the deal. So a clock is ticking, and that clock is not necessarily Trump. It's everyone else figuring out how to live their lives without the Strait of Hormuz and Iran's presence in it. They can't really afford to do that. Okay, now even as we speak about it, we have Vikas Khemani coming in. Vikas, welcome to the NDTV Profit.
Hello.
Welcome on the show, straight from the boardroom to the set.
Hi.
So we're just talking about whether people will look back at this moment in India's equity history and say they lost out a chance because they were too scared to do something.
That's always the case. Whenever there is a...
No, but this particular one.
No, I think so. If somebody is right now fearful, in hindsight, 2-3 years later, you will always feel that, oh, that was a great moment. Go back to your memory, 2022, when Ukraine war was happening. I remember June, July, May, that was the period where everybody was pessimist. Everybody was like scared. Supply chain issue, inflation, oil high, all those things were very similar, right? Technically, Ukraine war is still, happening, but things sorted out and 23 ended up being a good year. So always, we all know that, whenever everybody is fearful, there's uncertainty around. Those are the periods of opportunity.
But is this that period, Vikas, or can this period come in 6 months down the line? Because global money might still want to move towards the AI trades, even if the war were to resolve.
Time, you cannot time that. I mean, that whether it is 6 months down the line, like I can tell you 2 years down the line for sure, it will look like that. But in 6 months, can that be that fast recovery? I don't think so. It may happen, who knows, but that's a very hard one to call out, right? In equity, there's so many imponderables happening in the global geopolitical situation right now, right? I mean, you tell me when the oil prices are coming down, I'll tell you when markets are going to rally, right? So that's not kind of, nobody can tell you, right? And that's the law of the landscape right now.
No, sorry, what I meant to ask you, Vikas, because I know that you now go global to get in capital as well, right? And a lot of people have said the money may continue moving towards the AI trade countries and companies, even if the conflict were to resolve itself. So sure, there could be a bit of a pop because of oil prices coming off. But with the larger global flows still continue that, and therefore our markets, could they be range bound for the near term?
Near term answer is yes, but I only believe that, see, from a structural perspective, think about it, that whole so-called AI trade, the market cap, profit pool, everything is concentrated, right? Now, to grow from there, what is the probability of growing on that base when the US is 67% market share of the global market cap versus something which is less than 3% of the global market cap? If you have a time horizon of 5 to 10 years, what is the probability of faster moving? See, ultimately, as an investor, we are looking faster. We are not looking for
forever.
We are looking for a long time frame and what can outperform, right? India as a country, if you see last 20-25 years, one of the best performing emerging market in dollar terms, right? It's the only market which is after US pretty much similar kind of return there over a 25 period. Yes, in this period there will be up and down kind of journey which will happen. Last 2 years we haven't done well. Before that we were doing well. So all those kind of things do happen. I don't think India, I think our vulnerability got exposed because of the triple whammy on our current account which we had in last 1 year. And because of that, currency is where it is. And now again, assign the probability that after everything getting worse, what is the probability of it recovering from here? I would say still very high. You need to give time, but that time is 3 months, 6 months, 9 months, who knows?
But because the point being over here is now, the way markets are, the question is there a trigger which is needed? Now, is that trigger going to be in the form of the war getting over? We don't know. Is there a trigger going to be in the form of FI money coming in? We don't know. So if you have to look at that angle, and I'm taking the point from what Neeraj is saying, where money right now is moving out of India, and the money that's going into the AI trade is at the cost of Indian money, right? The FIs who were in India are selling and going there. So do you think that is a trigger moment for India where once they come back, we may probably break out of that range what Neeraj is talking about?
India needs only one trigger, nothing else, which is energy price. War can continue as long as energy price comes down.
Okay.
So only one trigger we need is energy prices coming down. And that will sort out our problems. Right?
Sorry.
And I don't think this is also a bit of a narrative according to me. Money is going to AI trades from India. I don't agree with that. I mean, money has been going out since last 4 or 5 years. I think it is more linked to the Fed rate cycle. Earlier, India was overweight. In last 2 years, because other markets became attractive, India became underweight and they became overweight. But overall, emerging markets haven't received money. They have received outflow. So that is linked to the Fed rate rather than AI trade, according to me. US obviously was receiving, always has received and was receiving a large part of the flows globally, especially in last 10 years. So I don't think that direct link is AI. Market tend to find narratives right now. Like in last 2 days, the narrative has been changing a little bit more towards favoring towards IT services. If you see Jeff Bezos' comment and and I think a month ago nobody would be ready to listen to something like that, right? So I think markets have its own way of building narratives. But I do believe that India has lots of growth drivers, whether it is consumer, whether it is manufacturing, whether it is investment story. I'm not saying we are going to do 30% return a year, but we have a good 6-7% earning growth, the GDP growth story, 13 to 15% earning growth story, sustainable for a very long period of time, which I do believe that very few economies and markets offer. And once you have that conviction, then you go through these kind of periods very peacefully.
Yeah, you're describing it almost like it's a muscle cramp that we're going through. But when you hear, for example, these calls for austerity measures, work from home for a few days a week. Today, I think from the official handle of the Power Ministry, there was this thing about how electricity demand has been at peak the last 4 days because it's a hot summer, and saying we will provide, but please start conserving. What comes to mind? Is there a bit of a concern when you know that the RBI has to come in and defend the rupee in this way?
It is rightfully. Please understand. Okay, let me explain you what has taken. If you heard me maybe 2 years, 1 year ago, 2 years ago, I used to say India's current account deficit is repaired and we shouldn't worry, right? You must have heard many times. But look at what has happened in last 1 year. India got hit by triple whammy. What? We import 700 tons of gold every year. That quantity is not going down because of our social structure, no matter what. Now, gold price going up sharply in last 1.5 years. That bill has gone up by from $70-80 billion to almost $40-50 billion has gone up by that, right? That's one. Semiconductor, India imports again $70-80 billion of semiconductor chips. We don't have self-sufficiency in that. That prices have gone up from 50% to 250%. So you have another, $40-50 billion of hit on your current account. And third, lastly, the oil, which is again another $40-50 billion of hit. So in a very short period of time, you've taken $140-150 billion of hit. Which country can withstand? I mean, you should pray that, despite, and this is not something you can plan, right? This is something is there. Now it's given to you. Now, can we overnight do self-sufficiency in semiconductor? No. Can we overnight do in energy self-sufficiency? No. So point is that you got to live with what is given to you. Now that has put stress on our currency in a very short period of time. Now I do believe that, first two will still remain for sure for some time. Oil can sort out. So our currency will remain under a bit of a stress for some time till the time we see further. But the good news is that will be boosting exports. That would be positive for manufacturing, and other IT services and all those things, export oriented things. So I do believe that this kind of evens out. And I'm not very, to be very frank, worried that this is going to sorry, what was your question?
Austerity.
You hear
so work from home, austerity, high electricity
when your question was that when you have your currency under pressure, you have triple whammy hit. It is fairly okay if, some later is telling you that, import less gold, can you reduce something for exchange on the phone? It is fairly...
No, the concern is not with the message from the leader. The concern is that what will companies do to follow? Sabki muthi band ho jati hai.
No, किसी की मुट्ठी बंद नहीं होती.
And then the impact that has.
किसी की मुट्ठी बंद नहीं होती. I think it's just a probably broader call given that try to reduce exchange. I mean, it's like, in my opinion, it's that kind of thing कि स्वच्छ भारत है थोड़ा clean रखो तो देश को boss. It's that kind of call. It's not that they are saying you can't import so much. You can. There are no restrictions, right? So it's just a broader call to the conscious saying that please be quiet. Nothing else. But I think it's been a little bit again, in my opinion,
overblown.
Mm.
So then, are you, Vikas? Yeah, I mean, I got trolled because I put like, भाई उन्होंने गन थोड़ी रखी है माथे पे, बोला है करना है तो करो, नहीं करना है तो मत करो.
बढ़ाई भी ना,
तो बढ़ाई वो तो ठीक है, उनका हक भी है ना.
Which we need to do.
How to discourage? Today have they banned gold?
No, not at all.
If they ban, यहाँ पे riots हो जाएंगे.
No, and in fact, there were many who took the wrong part of that message and tried to create panic, which clearly there isn't.
किसी ने किसी को काम तो करना है ना. TRP कैसे बढ़ेगी ऐसे?
But if you're saying it's not, I mean, if you take silver, they have a 100 kg cap per license, right? So somewhere there is a cap coming in, and now silver is not only normal use, you're talking about even industrial use which comes to silver. So from what Tamanna is also saying, I think yes, मुट्ठी किधर तो बंद होएगी.
पर आपके पास अगर आपकी कोई भी कारण से इनकम कम हुई है तो आप ऐसे घर में हम चलाते हैं तो some constraint has come, you will put some restrictions, right?
Yeah.
So I'm saying today there is a challenge. Now this challenge is given to you. You have not created that challenge. It's given to you. Now how do you deal with it? You got to deal with in a rational manner, whatever is the. So that's how they are doing it. So I don't think there's, in my opinion, of course, a difficult situation. The day some of these get sorted out, we'll be fine.
So how are you dealing with this challenge in a portfolio, right? Because you mentioned that, Jeff Bezos ne bola, and therefore people are now paying attention. But yeah, maybe stuff like that. A lot of things have gotten punished badly. A lot of things have withstood the pressure in this last quarter. How do you do an ideal portfolio construct currently?
यार कुछ नहीं बदलता है. हम तो we don't change anything. Honestly speaking, like again, our idea is to go back to stocks, look at stock specific, company specific. In this market only, you are finding companies, which has a reasonably, no impact of whatever is going on. I'll give an example. It's nothing to do. Let's say one of our top holding company is Biocon. Their life does not change anything what's happening around that. Now, why are you worried about it? So you go and check, financials, doesn't change much. Of course, to the extent of interest rate, a little bit is impacting, but it will come down. Something you got to identify your own stories where you are comfortable. You get good prices in these kind of times. We have seen some companies we bought in the fall where stock prices have come down 30-40%. Where do you get those kind of opportunities? As long as you have conviction that on the other side of this whole current crisis or current challenge, which I do believe is not going to last forever.
Yeah, I know it's unsustainable.
Yeah, I agree with you. We all know that. Yeah. Nothing lasts forever, right?
No. So that is to a philosophy.
In the sense, like even these kind of crises don't last forever, right?
Yeah.
War can last forever. What I'm saying, Ukraine war is still on, but everything else sorted out, right? So I do believe that we need to overlook this and think about it. Despite all these things, Indian markets are holding on. Please give some credit to that. It's not that, look at earnings of Q4. Of course, Q1 can be difficult, but Q4 earnings were good. Indian economy was recovering very, very well. Q3 last year, Q4 very well. So underlying strength of the economy cannot be ignored.
That's true.
So your body is very strong. Don't worry. Because right now there is a challenge which I think.
थोड़े fractures होते रहेंगे.
होते भी हैं. See, nothing goes one way. Nothing goes. In our lives, we don't have a smooth life, right? So that same thing works in the economy.
What was your melody moment? We were talking about the melody moment. You asked the same thing. Okay.
Yeah, perfect. Because what is your melody? Have you been stocking up on melody now last couple of days or not?
I don't have melody to wear.
Careful who's hearing this. No, I mean in the sense, okay, so I'll tell you how we positioned that melody moment question. From the question of that whole moment was also about nostalgia for all of us. Why was it, such a hit? Because everyone remembered melody from their childhood or whenever they had it, and that jingle and that whole thing, and of course the pun. So what is that sort of back to basics kind of a message that you got from, that entire moment, and what can be applied to the markets?
My God, I haven't thought that deep too. That what can be got to basics.
Is this the melody moment?
I haven't really thought that deep to, that melody moment can have a back to principles. But yeah, I mean, I always believed in first principles. So, so I don't know how I can.
Fair enough.
Maybe you can tell us that because of the last, 15, 20 years that you've done the investing piece. Sorry, I'm just rephrasing Tamanna's question. What is the age-old investing principle which you've always cherished that you believe can be applied right now?
I think I always believe that, look at the company, stock specific. I mean, actually, approach everything from first principles. Don't go by the narrative, don't go by whatever. Apply from first principle, approach and think second order effect. When you have this combination of first principles and second order effect, I think most of the time, things become very clear to you, right? I'll give you a classic example. Go back to you dig out your recordings. 2021, there was no interview. Like today, there's no interview which gets over without asking about AI. No interview which was over without asking fintech disrupting banks.
Yeah.
It was a narrative. Banks were beaten down on valuations. No interview got over without that. It was like every time. And I used to say that time, again, using first principles and second order thinking, कि भाई banking में क्या important होता है? आप अपना deposit क्या देते हो? Brand and trust is the most important, right? And now आप सोचो, will fintech be able to build brand and trust faster, or bank will be able to build technology faster? And the moment you evaluate that, you will know the answer. We never invested into any of the fintech. Now today, 3 years later, 4 years later, does anybody talk about fintech? Where are the fintechs? Which fintech companies have created wealth? But banks have created wealth.
Yeah.
So many banks have built technology. So all again, to my mind, this is a classic application of first principle and second order impact. कि basic क्या है banking का? Technology तो बन जाएगी, right? So that's the core of that we apply to everything.
Are you applying that to IT right now? AI versus
Yes,
IT?
I am saying that IT. See, I am not saying same companies will come out, but according to me, IT services will be around. Same thing I think Jeff Bezos said. In fact, there's one beautiful ad of Infosys in New York somewhere which says that it's a very nice ad which says that deal AI with somebody, and it says that we will help you. So enterprise context. Who's going to, if you in your NDTV company, if somebody is going to implement AI, who's going to implement? Employees don't know. Somebody will have to come and implement those solutions, right?
Yeah.
So IT services company will be efficient. They will use those tools. IT services is not going anywhere. Now, the terminal value diminishing argument, in my opinion, we'll talk in 2 years later. Nobody will talk about it. We'll talk about 2 years later.
That was the long version of the melody moment for Vikas. Back to first principles. Okay, tell us what was your melody moment this week. We need to wrap up the show, but thank you so much for joining us on Editor's Cut. We'll see you back same place, same time next week.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you hatch this plan that chalo, we have to leave from here and start something cooler on our own.
For the very first time, we were seeing the emergence of a first generation wealth creator. There are now nearly 1 crore households in India with nearly 1 crore of financial assets, right? And most of the wealth management unfortunately doesn't serve these individuals.
Where does the initial capital come from? Did you have to quit your jobs and begin?
So initial capital came from all three of our wives.
Dipti, my wife, telling me that, we lived in a rented small 2-bedroom apartment in Mulund. So what's the worst that can happen?
What was the worst mistake you saw?
Someone investing in equity when the money was available only for a period of 9 months and COVID happened. During COVID, we saw various kind of expression of emotion. One client came and said, liquidate all my portfolio.
Markets end the week on a stronger note as benchmarks record nearly 0.5% gain. Bank Nifty and financial services lead the bulls, broader markets end flat. And rupee strengthens by 1% to end near 95.71 against the US dollar. This marks the second straight day of gains for the currency. The relief follows a slew of measures taken by the RBI. Meanwhile, RBI board approves 2.86 lakh crore rupee dividend to Centre for FY26. Meanwhile, NSE IPO gains momentum. Exclusive sources tell NDTV Profit that all institutional investors have reportedly filed consent letters confirming participation in the much-awaited NSE IPO. Oil prices jumped 3% amid Middle East conflict. Brent crude hovering around $105 a barrel. Iran and US signaled progress in talks. Sources suggest that both nations have finalized the peace proposal. Uranium remains the sticking point. And ahead of his first visit to New Delhi, US Secretary of State Marco Rubio said Washington wants to sell India as much energy as they'll buy as uncertainty grows over disruptions in the Strait of Hormuz. Meanwhile, US-based investment giant Capital Group has built nearly $2 billion position across Adani Group companies, marking a significant shift in its India strategy, increases exposure while paring holdings in Reliance Industries. And amid mounting pressure over alleged illegal bike taxi operations, executives from Ola, Uber and Rapido knocked the Transport Ministry's door for crucial talks with the minister. The meeting comes amid wider regulatory crackdown on bike taxi services. Delhi NCR recorded its warmest night in 14 years as scorching heatwave conditions continued across the region. The IMD has in fact issued an orange alert amid rising temperatures and prolonged hot weather. Good evening, you're watching Profit 360 with me, Shreyansi Singh, and this is the show that's going to get you a highlight in terms of the markets as well as news and updates from within the country and across the globe. But first things first, let's talk about breaking news right now. The Reserve Bank of India board has approved a massive dividend payout of 2.86 lakh crore rupees to the central government for FY26. Now, this is a massive surplus that you're looking at. It's a transfer by the central bank. The RBI also reported a sharp rise when it comes to net income to 3.95 lakh crore rupees, and that's for financial year 26, which compares with 3.13 lakh crore in the previous financial year. In fact, Piyush is joining in with all of those very important details. Piyush, over to you.
That is right. The RBI Central Board has approved a dividend of 2.86 lakh crore rupees to the center for the accounting year FY26, which is higher than around 2.60 lakh crore rupees the last fiscal. Although the estimates were ranging from 2.7 to 3.5 lakh crore, this is on the lower end of the estimate. Still, it surpasses and it's all-time high dividend that the RBI has provided to the government. The RBI's balance sheet expanded by around 21% year-on-year to 91.97 lakh crore rupees. Interestingly, the RBI has also maintained the contingency buffer at around 6.5, which is lower than 7.5% it had said last year. And this was done in view of the current evolving macroeconomic conditions. The RBI Central Board meeting was attended by Governor Sanjay Malhotra. It was chaired by him and all the deputy governors, and also we saw that the member of the government, the DFS, a lot of important personalities forming the part of Central Board meeting attended this particular important meeting. And the core numbers, if we see, the RBI's net income, you have mentioned how it grew to around 3.95 lakh crore from 3.13 lakh crore, whereas the net the balance sheet rose by around 21%. The RBI has made gains, as we are aware, by intervention in the forex market. The RBI also made gains on account of the depreciation in Indian rupee. The RBI also made gains on account of selling of this currency, the money that they make out of it. And there are other investment avenues as well, both domestic and foreign, where RBI made good returns, and hence this massive dividend was possible for them to give to the government. Back to you.
Absolutely, and thank you so much, Piyush, for getting us all of those important highlights. So there you go, that's the dividend payout that we've been talking about as well. But let's also shift focus and get you some more insights when you talk about this particular story. In fact, Mithali Nikor, founder Nikor Associates, joining us on the show right now. Mithali, thank you so much for taking time out and joining us this evening. First things first, I wanted to try and get a sense of what you think about this massive surplus transfer by the central bank. How are you reading into this?
So thanks a lot, Shreyanshi. I think, we have to first understand why this is such an important buffer for the government year on year. When we think about it, this is the kind of actual, one can say safety net that the RBI provides, because whenever there are macroeconomic situations, especially what we're experiencing right now with the oil price shock, it is actually this kind of a payout from the Reserve Bank of India that helps the government of India actually balance a lot of its fiscal situation. And, the numbers make a lot of sense, because if you see the excise tax reduction that the government of India has made is equivalent to about 3.6 lakh crores for the entire year. Let's see how much of that the government is actually able to recover in, say, the second half. But in the first half of the year, the excise duty collections will be quite less. Now, this amount of 3 lakh crores approximately helps the government actually balance out the excise tax reduction that it has offered to the market. So really, it's, a very, very important safety net for the government of India.
Ask two queries to you. Estimates were in the range of around 2.8 to 2.7 to 3.5 lakh crore. So we see this is slightly lower than on the lower end of this range. And number two, also in terms of the contingency risk buffer has been lowered to around 6.5% from 7.5%. How do you see this?
So I think the number, first of all, when you think about it, it has to be somewhere on the lower end. I was actually expecting it to be 2.8 or 2.9. So 3 is actually quite good, much better than expected. And the reason for that is that, if you look at it, RBI has been using a lot of its buffer to actually keep the rupee balanced. RBI has been using a lot of this, extra liquidity to keep, the rupee afloat in a lot of the international markets. And today we've also seen some good news coming in that the rupee has again scaled back to 96 for a dollar, though it had touched 97 yesterday. So I think RBI really using a lot of this surplus for the management of the forex as well, which is critical. Now, so I think this is really providing us with the kind of macroeconomic stability that we need at this point.
Absolutely, and just to follow up on exactly what you've said right now, Mitali. When you talk about the RBI, you've talked about how they've used a lot of the instruments that are available to them. Going forward, is there anything that you're penciling in right now by the way of measures or instruments that they can be using to try and curb this further, the situation right now?
So I think, Shreyanshi, what we've also seen a little bit coming in from the industry and from the trade side is that monetary measures have sort of reached a limit. There's only so much of the INR that the RBI can actually sell in international markets. And there are only so many regulatory mechanisms that are available which limit short-term and spot sales of the rupee on forex markets. These are the two major instruments that the government of India has been deploying and RBI has been deploying. But from here on, one really has to look at the real economy and the real factors. And when we look at the fact that, there are international geopolitical developments that are impacting the rupee, the fact that, there is a certain oil demand that India has as a growing economy, and we have to purchase that oil in dollars. We have to purchase that oil, even if not in dollars, but still in foreign exchange of different denominations, then that sort of creates a scenario where there will be a weaker impact on the rupee. The weakening of the rupee in this oil market scenario is inevitable. So I think a lot of analysts have also recommended to the RBI to consider that maybe it's okay for the rupee to fall a little bit more before it again, aggressively intervenes in forex markets. But I do think that the RBI has a very solid war chest at the moment to defend the rupee should it start falling, in a non-expected way, in an unexpected way.
Mitali, very particularly, if you can help us understand, considering that the INR has depreciated quite sharply over the last couple of sessions, from 97 it has now come back to 95 levels, but we see heavy selling by the RBI in the spot INR market. Very specifically, do you feel that this is the time, maybe in the next policy, they can consider coming out with FCNR bonds, or they should continue with their current strategy of buy-sell swaps? What are the macro policies that can be brought in, especially on this FCNR borrowing part and dollar, some sort of a special dollar window? If you can share your views on this front.
See, it's a very tricky market at this point in time. Of course, in a usual scenario, when we are in a peacetime scenario, I would definitely say that FCNR bonds, or even for that matter, one could even think about, other forms of bonds. Like, say, if you want to mop up some of the forex coming in from, non-resident Indians, or Indians of, persons of Indian origin in, in other markets, who often have to, use the INR for sending back remittances. These are, of course, instruments that can be brought in peacetime. But, in wartime, the anxiety around foreign exchange rates are extremely high. It's very, very high at the moment. And people need to feel like markets and instruments are proceeding as usual. And, otherwise we might see a sort of reverse effect. We're already seeing that with the announcement that the Prime Minister made around gold. Of course, people have not really stopped buying it, but we are actually hearing from gold sellers, jewelry shop owners, that people are coming in and inquiring, will there be a restriction on the purchase of gold? So very honestly, wartime creates its own anxiety amongst consumers, and the better way to manage the situation is to keep things running almost as business as usual, as much as possible, rather than bringing in new instruments at this stage. However, I do think that oil bonds can be another instrument that the government could consider. Yes, it's taken the government of India almost 20 years to pay off the previous oil bonds, but at this point in time, given the scenario in global markets, dollar-denominated oil bonds could also be an option on the table, but I do think that it's a bit too premature for that. Maybe that is something to think about in another 3 months' time if things don't change on ground.
And finally, on the fisc position of
option on the table, but I do think that it's a bit too premature for that. Maybe that is something to think about in another 3 months' time if things don't change on ground.
And finally, on the fisc position of the government, how will it help government, lowering the fiscal deficit? There is a huge surplus that we have seen. Final comments.
So I think, honestly, when I looked at the fiscal deficit numbers, it was projected at around 4.3% for 2026-27. Now, because of the excise duty reductions, excise tax reductions, we had actually estimated that if the government is not able to recover up to 90% of its projected excise tax revenue, then the fiscal deficit could even go up to 5%. Now, with this windfall coming in, that will provide some relief, to the fiscal situation, and can lower down the fiscal deficit back to a 4.5% range. But all of this is still continuing to be dependent on the rate of GDP growth, because if the GDP growth itself starts to reduce, then we will see a deterioration in the fiscal situation.
Well, absolutely. And thank you so much, Mitali, for joining us with all of those insights this evening. So there you go. That's exactly how you should be looking at this particular breaking news and some of the measures that the RBI is also, taken a look at as well. So you're looking at that $5 billion swap auction. You're looking at the NRI dollar scheme as well. And that's also something that you should be keeping on your radar. But in terms of what else you should be keeping on your radar, let's talk markets right now, because markets, in fact, ended on a stronger footing due to renewed optimism surrounding a potential US-Iran peace deal, while Nifty wrapped above 23,700 as well. The 30-pack Sensex settled above 75,700. Both benchmark indices, in fact, ended in the green. Sectoral trends, let's talk about that as well, because it concluded on a rather mixed note. In fact, Parth is joining in with a deeper sense of the stock-specific details.
Thanks a lot. So it was a flat day for the markets today, with Nifty 50 ending in slight green, up by over 0.2%. Now this was led by Trent and Shriram Finance, both of which gained over 3% today. The broader markets also saw a flat performance, with Nifty Mid Cap 150 ending 0.1% in green, and Nifty Small Cap 250 ending in slight red, down by over 0.1%. Nifty Bank was the top performing sector today, gaining over 2%, and this was led by Axis and AU Small Finance Bank. On the other side, Nifty Pharma was the worst performing sector today, down by almost 1.5%, led by Glenmark and Aurobindo Pharma, both of which lost over 5% today. Now moving on to the weekly data, it was a flat week for Nifty, with it ending in slight green, up by over 0.2%. However, broader markets have outperformed the benchmark for this week. Nifty Mid Cap 150 was up by over 1% this week, led by Honeywell Automation, which gained 22.5% this week, followed by Tata Communication, which was up by over 17% for the week. Nifty Small Cap 250 also ended on a slight green note in this week, gaining over 0.3%. Moving on to the sectoral data as well for the week, Nifty IT was the best performing sector, gaining over 4%. This was led by Coforge and Wipro, a relief rally seen in the two counters, gaining over 7% this week. On the other hand, Nifty FMCG was the worst performing sector, down by 1.5% for the week. So these were the major trends that we saw today and the past week in the markets.
Absolutely. Thank you so much, Parth, for joining us with that entire update coming in as far as the market's concerned. So some bit of strength really returning back to the benchmarks. And that's the entire picture that you're looking at. But let's also talk about some stock-specific action, talk about LIC that ended almost 2% higher after the company reported a strong set of numbers for the fourth quarter, with profit rising over 23% on a year-on-year basis. In fact, we caught up with the management. The MD and CEO told NDTV Profit that it is witnessing a clear directional shift towards non-par products. He's also acknowledged that the proposed new Insurance Act could really intensify competition going forward in this particular sector, especially with more foreign players expected to enter the Indian insurance market as well. Let's go across and listen in to a slice of that conversation.
As you have noticed, we have been trying to improve our performance over a period of last 4 years, and it has been a continuous focus to see that the corporation performs at a much higher level. The efforts that we have taken are started yielding results, and we have seen a continuous growth on both Q3 and Q4. You have seen the good performance of the corporation coming up. We expect this to continue. Our performance in April has also been good. We have shown good growth. The numbers are already in public domain. And we hope to do well in Q1 as well as in the current financial year as well.
Right. And
there you go. So that's the word coming in from a very important update coming in from LIC as well, in terms of the competition really intensifying. But let's also talk about a very important update that you should be looking at in terms of the latest developments for the longer-awaited IPO of National Stock Exchange of India that may be moving a step closer. In fact, NDTV Profit has exclusively learned that all institutional investors have now filed consent letters confirming their participation in the NSE IPO process. These consent letters are considered an important procedural step when it comes to the IPO process, especially given the large and diverse shareholder base of this particular exchange. When you talk about some other details from this particular story, PSUs are expected to participate up to 10% of their holding. DRHP is expected to be filed by the end of June, and that's also an important update that you're looking at. NSE is also looking at OFS of about 4.5% of its shareholding. Also something that you should note here as well. So that's the entire update coming in when it comes to this particular story. But let's also move on and get you some war updates right now, because there's a lot of geopolitical uncertainty and that directly impacts your portfolio. Let's talk about Al Arabia sources indicating, in fact, a potential breakthrough when it comes to US-Iran relations with the Pakistan-mediated draft agreement that is expected within as little as just a few hours away from now. The proposed deal calls for an immediate comprehensive ceasefire across land, sea, and air, alongside commitments to avoid targeting military, civilian, or even economic infrastructure. And that's something that directly impacts oil prices as well. Now, both sides would halt military operations and media hostilities while respecting sovereignty and territorial integrity. The agreement also ensures freedom of navigation when it comes to key waterways, including the Strait of Hormuz, which is a very important waterway when it comes to the movement of oil as well. But sources, in fact, are suggesting that main obstacle in negotiations, that is uranium, still remains a sticking point. US and Iran are still holding firm, in fact, to their positions when it comes to this particular metal as well. And that's the interesting update that you're looking at in terms of a very important update that you're looking at as well. But let's also move on and get you another story and move on from this to another news update now. In fact, Cyprus president is in India. He's held delegation level talks with the Prime Minister, and India and Cyprus elevated their bilateral relationship to a strategic partnership. Some would say that this has been a very crucial week when it comes to diplomatic relations for the country. Both the leaders announcing a broad expansion in cooperation spanning trade, defense, maritime security, technology and counter-terrorism. Let's also go across and listen in to the Prime Minister's remarks on the same.
गिफ्ट सिटी को एक ग्लोबल फाइनेंशियल और सर्विसेज हब बनाने के विजन को गति देंगे और दोनों देशों के इनोवेशन और स्टार्टअप इकोसिस्टम के बीच कनेक्ट बढ़ाएंगे। फ्रेंड्स, रक्षा और सुरक्षा सहयोग भी हमारे संबंधों का एक महत्वपूर्ण स्तंभ है। हमें बहुत खुशी है कि पिछले कुछ वर्षों में दोनों देशों के बीच मिलिट्री एक्सचेंज और ट्रेनिंग सहयोग बढ़े हैं। आज हमने साइबर सिक्योरिटी, मैरीटाइम सिक्योरिटी और काउंटर टेररिज्म सहयोग को भी और मजबूत करने का निर्णय लिया है।
All right, then moving on to another interesting update. 2 weeks after PM Modi urged energy conservation through remote work, SEBI in fact has introduced a temporary work from home policy for junior staff. In fact, sources are telling NDTV Profit about just this. Employees from grade A to grade C will be allowed to work remotely 1 day a week as part of the regulator's response to rising energy costs linked to the Iran conflict. The SEBI is also weighing postponement of internal events to cut consumption. The move follows similar steps that have already been taken by HDFC Bank, which has permitted select divisions, including treasury, risk, digital banking and IT services to adopt flexible work arrangements amid the ongoing energy crisis. So that's one important update that you're looking at. Moving on, then let's also talk about a time when the government is urging people to defer big ticket purchases, also something that you're keeping on your radar against the backdrop of the West Asia crisis and the auto industry really facing supply chain disruptions at this point in time. In fact, Honda is doubling down on India, and the company has launched 2 vehicles, City 2026 and Hybrid ZR-V as well, while targeting double-digit growth ahead of industry trends as well. And the automaker is also accelerating its EV plans with its first India-made EV, Zero Alpha, set for launch in the second half this fiscal, with exports also planned. So keep that on your radar as well. But Honda is believing that hybrids will remain the key transition tech until EV charging infrastructure improves in the country. And that is a very important update to end the show with, because that's all the time that we had on this edition of Profit 360. Thank you so much for tuning in.
Is it going to be okay, or is I think the brightest spot for new investors who got in
at the worst of COVID and saw that kind of wealth, is that over?
We can't expect to see 16, 17, 18, 20% kind of returns. Maybe number will be closer to 12 to 14%, and we should be happy with that.
all of you work for the same organization, and that's when you